Let's begin amendments on Chapter 6A reductions. Technically speaking, there are no amendments to any provisions of Chapter 6A, just that one new section has been added, 80CCH. A new section is added, that's it. So, of course, even if a new section is added, that's an amendment, right? So, this is added in the Finance Act 2023. In the Salaries Chapter amendment, I have already covered this. Agnipath scheme, contribution by central government to Agnivir Corpus Fund, that is treated as salary under 17 subsection 1. Equal contribution, of course, is made by Agnivir. So first of all, what is this Agnipath scheme? Who is an Agnivir? All that let us discuss now. And one more insertion in the new scheme study material is, what are the differences between deductions and exemptions? What are the differences? 99% they don't test like this theory question. If at all they tested 3 marks question, they may test. So generally deductions are in the nature of investments and contributions in some instruments like fixed deposit, shares and securities like that. Whereas exemption, income is exempted, will not be included. This exemption is talking about actually incomes, whereas deduction is generally talking about investments and contributions and all. And 80C, EU, 80U, these are the sections that talks about deduction, and there is another section which talks about deduction is 10AA. So 10AA, once upon a time, it is there as part of exempted incomes chapter, but in the new scheme material, it is kept as part of deductions chapter. But whoever is my student, I kept it as it is under exemptions chapter itself, because it's at the end of the day exemption only. It's not actually a deduction, it's exemption only. But chapter 6 deductions point of view, it is classified as deduction. So from exam point of view, consider this meaning. And section 10 of the act is dealing with various exempted incomes. For example, 10 clause 1 dealing with agriculture income, 10 clause 2 dealing with share of profit of a partner, 10 clause 12C, which I'm going to write right now. So any amount received by Agnivir from Corpus Fund after 4 years of service, so that is exempted. So all that we are going to discuss. 10 clause 13A HRA exemption, 10 clause 10A leave encashment exemption. Now maximum leave encashment exemption is 25 lakhs maximum. Now, what is the treatment? First included in gross total income. Actually, if I paid any premium for LIC, will I include it in gross total income? No. Somebody, whoever drafted this, did not understand exactly. Generally, some income-based deductions are there. Income-based chapter 6 deductions and even 10A deduction. First, whatever profit is there from exporter, that we tax it under PGBP. Then we claim deduction, and then deductions will be allowed. Whereas exempted incomes are such that they are not at all included in gross total income. They will not be included in income at all. Now, deduction in respect of Agnipath scheme. There is a lot of political drama going around this Agnipath scheme, that government is spoiling the youth. Instead of creating jobs, they are launching all these schemes and all. The opposition is claiming all this, but God knows what are all the intentions of the ruling party and why opposition opposed it. That's a different thing. But I personally feel Agnipath scheme is a really wonderful scheme. What is the scheme? Very simple. People who are aged between 17 to 21, 22, especially 18 to 22 age group, they are allowed by the government of India. They are allowed by government of India to join Indian Army and serve 4 years for the country. And all these 4 years, you are paid honorarium. We call it a salary, nothing but whatever amount that you are getting from government of India for joining an Agnipath scheme, that is taxable for you under income from salary. You are eligible for chapter 6. You are eligible for standard deduction, all that. You are an employee of the government. That's it. You are an employee of Indian Army. That's it. For 4 years. Now, during the tenure, right, you are getting salary, right? Out of that, some 30% of the salary you have to contribute to Agnivir Corpus Fund. You need to contribute to what? Agnivir Corpus Fund. This is something like contribution to recognized provident fund, something like that. Contribution to national pension system, something like that. You need to contribute out of your salary, whatever you got, right? Some 30% to Agnivir Corpus Fund. And not only you, since you are contributing equal amount, government will also contribute in addition to the salary that they are paying you. They are already paying you salary, right? In addition to that, government also contributes equal amount to Agnivir Corpus Fund. So you are contributing, government is contributing. Within this 4 years of service, you can't withdraw single rupee. After 4 years of service, you can happily withdraw the amount. If at all unexpectedly something happens to the Agnivir, the one who joined in Agnipath scheme, we call him as Agnivir. If something unexpected thing happened to him, his nominees will receive. Whether he receives after 4 years of service or nominee is receiving that corpus, ultimately at the end of the service, fully exempted. Whatever amount that you're receiving is fully exempt. Any payment from Agnipath Corpus Fund or Agniveer Corpus Fund to a person who actually enrolled under the scheme or to his nominee is exempt from tax. So 10 clause 12C, a new clause is added in the exemptions list in the Finance Act 2023. Not only that, now Agniveer is contributing, right? So whatever you are contributing, first of all, whatever salary, suppose no government is paying me 30,000 rupees per month salary to me. Okay, this is treated as income from salary. 3,60,000 is my gross salary. Out of this, some 30%, which is equal to 36,000, I am contributing to Agniveer Corpus Fund. I am contributing. Whatever I contributed, no? So whatever I have contributed, like look at this, how it will be like. Suppose Agniveer, I'm calculating salary income from Agniveer. Gross salary is equal to, let's assume 4,20,000, 35,000 per month salary. Let's assume 4,20,000 minus standard deduction, how much? 50,000 flat. So now what is the net salary income from salary? 3,70,000. This is net salary. And not only that, like once again, now your actual salary that you're getting from government is 4,20,000 plus central government is contributing on your name. Central government is contributing on your behalf to, Agniveer Corpus Fund, which is in the nature of 80 CCH subsection 2, that contribution. Now central government is contributing, right? Approximately some 30% they are contributing. 4,20,000 into 30%. Government is contributing 1,26,000 man on your name. So total salary is how much? 4,20,000 plus 1,26,000. 5,46,000 is your gross salary. This is considered assuming 35,000 per month salary for 12 months. Now this is gross salary. From gross salary, we are eligible for standard deduction, right? 50,000. Claim that deduction. 546 minus 50,000. How much is that? 4,96,000. Now, if at all the SSC is going with 115 BAC, on this whatever tax he gets, that entirely he can claim it as a rebate under 87A because of 115 BAC. Up to 7 lakhs you can claim rebate, yes or no? Up to 7 lakhs total income you can claim rebate of 25,000. Suppose you don't want to go with 115 BAC. Suppose if the Agniveer decided not to go with 115 BAC, then he can claim 80 CCH subsection 1 deduction. He can also claim 80 CCH subsection 2 deduction. Subsection 1 deduction is what? Whatever you are contributing, you are getting 4.2 lakh, right? 4.2. This is not the amount you are getting into your bank. On this already government is deducting 30% for your contribution. How much? 30%, 1,26,000. So they are paying you 420, right? They deduct 1,26,000 from your 420 and pay to the Agniveer Corpus Fund. Government, in addition to that, they are also paying 1.26 to Agniveer Corpus Fund. So under subsection 1 of 80 CCH, employee contribution to Agniveer Corpus Fund, Agniveer contribution, 1,26,000 you can claim deduction. Not only that, on your behalf, employer, central government contributed, right? And whatever central government contributed is taxed as income, right? Tell me, have you received this? No. So first it is treated as income, but you invested it, right? Accordingly, you didn't invest. First they gave you the income, immediately they paid it to the government again. So that 1,26,000 you will again get deduction for employer contribution, for central government contribution under subsection 2. Now, what is the net income? 4,96,000 minus 1,26,000 minus 1,26,000. Your net income is going to be 2,44,000. This is your total income. This is how for Agniveer total income will be calculated. Now, what the provision says, 80 CCH says, if Agniveer is contributing from his salary contribution to Corpus Fund, that deduction you will get under subsection 1. If government is contributing in your name, equal amount, first it is taxed as income. Just like contribution to National Pension System under 80 CCD subsection 2, same. Now then, since it is already taxed as income, but you didn't receive, and moreover it went to the savings, you can claim it as deduction. Are you getting it? And you know what? Under new tax regime, default tax regime, you cannot claim subsection 1 deduction. Under new tax regime, default tax regime, you cannot claim subsection 1 deduction. But you can still claim subsection 2 deduction. Subsection 2 you will get. Whether you go with optional tax regime or whether you go with the default tax regime, doesn't matter. You will get deduction for subsection 2. And one more important twist. There is a section called 80 CCE, if you remember, if at all you remember, which says the deduction under 80C, 80CCC, 80CCD subsection 1, all these 3 sections put together, maximum deduction shall not exceed 1,50,000. Overall limit for 80C. Remember, in this list, CCH subsection 1 is not included. Remember, the CCH1 is not included. By mistake, you may take CCH1, but CCD1, contribution by an employee to national pension system out of his own salary, that is covered under overall limit. But contribution to Agniveer fund by Agniveer from the salary that he is getting, no, out of that he is contributing some amount, no, that is not covered under overall deduction. Remember this point. And CCH subsection 2, of course, this is in addition to overall limit. You know, even though if you're following default tax regime, 80CCD subsection 2, CCH subsection 2, right now what we discussed, 80JJAA, all these 3 sections related deductions you can still claim under default tax regime. Remaining all other deductions you cannot claim under default tax regime. That's it. Over. 80CCH amendment is over. So simple it is. So what is an Agnipath scheme? It's a scheme of central government which is launched in 2022 for enrollment of Indian youth in the Indian Armed Forces. The Agniveer Corpus Fund means a fund in which all the contributions of Agniveer and matching contributions of the government along with interest are held. In that fund only it is held. Agni features of this scheme, what are they? Each Agniveer is contributing 30% of his package to the individual Agniveer Corpus Fund. Further, the government will also do a matching contribution to Agniveer Corpus Fund. The government will also pay interest as approved from time to time, whatever to the outstanding balance is there in that fund. And 80CCH, it provides deduction in respect of contribution made in Agniveer Corpus Fund by an individual who enrolled in Agnipath scheme, and also contribution for the central government. Quantum of deduction for SSC contribution. SSC means what? Agniveer. Under CCH subsection 1, it gives a deduction for amount paid or deposited by SSC who is an individual enrolled in Agnipath scheme on or after 2022. Of course, only after you enroll, you deposit. Deduction under 80CCH1 will be available only if you exercise the option of shifting out. You exercise the option of coming out of DTR. Means you are declaring under normal tax regime. You are declaring under optional tax regime. You are not declaring under default tax regime. Then only subsection 1 you will get. However, central government is also contributing, right? Under CCH subsection 2, the whole amount contribution made by central government to the said fund in the Agniveer fund is allowed as deduction in computing total income of the Agniveer SSE. The entire contribution would be first included in salary. That's why salary definition has been modified by inserting 9th clause. However, deduction under CC2 will also be available. And remember, this is completely different. CCH2 deduction will be available to SSC irrespective of regime, which means it is allowed even if the SSC has exercised the option of not shifting out. Even though you're not coming up default tax regime, you still get CCH subsection 2 deduction. Over. This chapter 6 deduction amendment is over. Are you clear? So I hope you're watching the marathon also, part 2. In the part 2 marathon, this amendment is added. And of course, only chapter 6 reduction amendment video is also separately there on the YouTube. That's it. And exemption from the Agniveer fund, no, whatever corpus fund is, you know, whatever amount you withdraw after completion of your service, 4 years. During this 4 years, government will not let you to withdraw. After 4 years of service, if you withdraw, your nominee, if at all, they are getting fully exempt. 10 clause subsection, 10 clause 12C. 10 clause 12A and all is talking about provident fund. 10 clause 11 is talking about public provident fund, all that. But don't get confused. This is important, latest amendment. That's it. Yes, let's start chapter 6A deductions revision. Okay, so in this revision, I'm going to briefly explain you all the sections that are there in chapter 6A. The theme of each and every section, I'll clearly explain it to you. Plus, I will also explain you certain problems, some 5 to 6 problems I have solved, getting it, which are taken from our material. Nothing but they are there in the ICA material only. The same thing we copy paste, getting it. Fine. So now, without any delay, so let's enter into chapter 6 deductions. These are the deductions which you are having. So entire 80C series, getting it. These are the sections. Actually, you see 80CCD1, 1B and subsection 2. These 3 are single section only. But I intentionally wrote as a different sections because there is a very clear reason. And all these 4 sections, mediclaim, dependent with disability, and disease. So all these sections we have given it one category. And all interest on loans, getting it? Interest on education loan, interest on housing loan, interest on housing loan, interest on electric vehicle loan, getting it? And all donations, getting the point? All these items are what? Just a minute. All these items are donations, getting it? Whereas this is regarding additional employee cost. And all these four are income based deductions. Remember, all these four are income based deductions. Whereas QQB, RRB, ATJJAA, these three sections are covered under heading C. These three sections are covered under heading C of chapter 6A. These three are covered under heading C. What do you mean by heading C? There are certain sections under chapter 6A, ATP, ATPA, ATLA, ATJJA, ATJJAA, ATI series, approximately some 14 to 15 sections were there. They all are coming under heading C of chapter 6A. Now, what is the condition? You know, under ATA, there is a section called ATA. What that section says is, in order to claim deduction under heading C related deductions, in order to claim deduction for heading C items, the SSC must file return of income on or before due date given under 139. On or before due date means what? If audit is applicable, 31st October. If audit is not applicable, the due date is 31st July. So on or before the due date for filing IT return, you must file the IT return. Only then you can claim these three sections which I have highlighted in yellow color. Getting it? Only these three sections. For these three sections, if you want to claim deduction, you must file IT return on or before due date. Remember, under heading C, there are many sections. They are not in our syllabus. Only three sections related to heading C were at CA inter syllabus. Are you clear? Now, these four items again are income based deductions. Here you are getting some income. For the income which you are getting, we are giving you a deduction. So that is chapter 6A. Getting the point? Income based. Now, without any delay, let's continue a basic introduction to chapter 6A. Remember, long-term capital gain 112, long-term capital gain 112A, short-term capital gain 111A, and special income, winnings income and all 115BB. These items, they are not eligible for chapter 6A deductions. Suppose no. Like how to compute gross total income? Gross total income is nothing but 5 heads of incomes. So compute plus apply clubbing provision plus apply set off and carry forward provision. After setting of all this, if you are still having the income, no, that is called gross total income. And for the purpose of claiming chapter 6A deduction, this gross total income split into two parts. Like what? Incomes taxable at special rates. So LTCG 112, LTCG 112A, STCG 111A, any other special income like winnings 115B, 115BB, yes or no? So you keep these amounts separately. Then whatever balancing figure is there, no, those incomes are called as normal incomes. Normal income means what? The income that is taxable at the rate of tax applicable for the SSE generally. For individual slab rates, for a partnership firm flat 30%, for LLP flat 30%, for a company flat 30%, for a foreign company flat 40%. These incomes are taxable at normal rates. And remember, short-term capital gain, normal short-term capital gain other than 111A, it is taxable at normal rates. Now suppose this amount is, let us assume 5 lakhs. Now one of the condition in introduction to chapter 6A, what it says, the total chapter 6A deduction, the total of chapter 6A, all headings, heading A, heading B, heading C, all put together, the total of chapter 6A deductions cannot exceed 5 lakh. Maximum deduction cannot exceed gross total income. By claiming chapter 6A deductions, there cannot be loss. After claiming chapter 6A, it cannot be negative. The income cannot be negative. That's what the introduction basically to chapter 6A deductions. This is the basic introduction to chapter 6A. That is what covered in the introduction part of the entire chapter 6A. So this entire matter I have clearly given to you. Getting the point? So this entire I have explained you in this past 5 minutes. Now let's start each and every deduction. Now the first one is ATC. What is the first one? ATC. Getting it? Now, yeah. So the next deduction, first deduction is ATC. ATC, no, SSC is making certain investments. SSC is making certain savings for retirement purpose, all that. So there are approximately 23 deductions that are covered in CA Inter for ATC. But remember, we are not discussing all the 23 items. We will be discussing some 5 to 6 important items. Among that important items, one of the important item is, payment of life insurance premium. What is it? Life insurance premium paid. So deduction for life insurance premium. What are they saying? Suppose if at all paying any premium for life insurance premium, of whom? Of self, SSE, spouse, any children. Remember, children can be dependent or non-dependent, and remember here parents are not covered, brother or sister is not covered. So if you are paying life insurance premium to you or spouse and children, only then you will get deduction under chapter 6A. Further, remember, life insurance premium can be paid in cash or can be paid in bank also, through check or through cash, both are allowed. And 80D medical premium is there, it can only be paid by other than cash. Now premium, suppose here how much deduction you will get? Generally premium paid you will get deduction, but there is a limit. Maximum you cannot pay it beyond the following limit. Suppose if the life insurance policy is issued, before 31st March 2012, actually in the problem they'll give you before 2003 also, that is irrelevant right now. So this is enough. Before, if at all the policy is taken before 1st April 2012, on or before 31st March or before 1st April 2012, then maximum deduction is 20% of sum assured only you will get deduction. Suppose if the policy is issued on or after 1st April 2012, then the maximum deduction is 10% of sum assured. Suppose if the policy is issued on or after 1/4/2013 in respect of a person suffering from disability covered under 80DD or 80DDB disease, if at all, 80U they say. So if a person is suffering from disability given under 80U or suffering from a disease given under 80DDB, in respect of that person, if the policy is taken, that too when the policy should be taken after 2013, then the deduction is 15% of sum assured. This is the maximum deduction for premium paid for life insurance policy. Able to understand. Now you see, suppose for a person who is suffering from 80U disability or 80DDB disease, for him we have taken policy on 1/4/2012 or some 10th September 2012, nothing but before 2013, but after 2012 10% only applicable. Suppose if a policy is taken on or after 1/4/2013 on a normal person, he is not having 80U 80DDB, then 10% only. 15% is only for whom? If a policy is taken on 80U disabled person, 80DDB diseased person, the person suffering from disease. So for these two people, if the policy is taken, that too on or after 1/4/2013, then only 15% of sum assured criteria will be applicable. Are you clear? Now in the ATC itself, they have covered about maturity proceeds of LIC also. Like in ATC they didn't cover, yet ATC only the discussion related to maturity point. Actually the discussion related to maturity point is covered under 10 subsection 10D, getting it, or 10 clause 10D. This is actually exempted income chapter, but this point is mainly discussed under ATC section. ATC, along with ATC it is discussed. So what 1010D says also I'll tell you. Suppose I am paying insurance premium and I'm claiming deduction every year under ATC, all that is fine. Now suddenly after 10 years or 15 years or 5 years, I received maturity amount. Now what is the tax treatment? Suppose if the insurance premium maturity amount is received because of the death of the person, on account of death of the person, if the nominee or legal heir is receiving the maturity amount, it is fully exempt. Suppose the SSC only receiving the maturity amount, SSC is alive, but policy became mature. Now this fellow is receiving maturity amount, bonus, sum assured, all that is getting the point. So much is getting. Now what is the tax treatment? The tax treatment is generally the premium received, the bonus amount, maturity amount received is taxable under income from other sources. However, under 10 clause 10D, in these three cases, the insurance maturity amount is exempted. If suppose if the policy is taken before 1/4/2003, any amount you receive later on, fully exempt. Suppose if the insurance policy is issued on or after 2003, 1st April, but before 1st April 2012, and if I receive maturity amount today, what is the consequence? Now you have taken policy after 2003, before 2012, right? Now what is the premium that you are paying every year? Is it exceeding 20% every year? No. It is less than 20%. Then it's a non-commercial policy. The maturity amount that you are receiving is fully exempt. It is fully exempt. Okay. So if the premium paid on the policy yearly do not exceed 20, then only I can claim exemption here. Suppose the premium paid by you crosses 20% of the sum assured, it is fully taxable. Suppose if the policy is issued on or after 1st April 2012, then annually how much you are paying? I am paying less than 20%, less than 10%. I am paying annually less than 10%. Then the maturity is exempt. If the policy is taken on or after 1st April 2013 for a disabled person, getting the point, and disabled person, and that policy premium every year what we are paying is not exceeding 15, it is less than or equal to 15%, then maturity amount is exempted. Very simple. Within these limits only. What is it? Within these limits only, if you are annually paying the premium, within these limits only the annual premium that you are paying. See, for ATC, you may be paying premium more than this also, but you will get deduction up to this. But for getting maturity amount exemption, the premium amount that you pay every year shall not cross. It shall not cross these percentages. If at all, even in 1 year premium crossed these percentages, maturity amount is fully taxable for you. But remember, whether premium paid is more than 20%, more than 10%, more than 15%, even though maturity amount received is exempt, only in one situation. On the death of the person, if you receive maturity, it is exempted. This is what 1010D talks about. Actually, in 1010D, it also talks about ULIP related exemption and all. We have a capital gains chapter inside that, 112A, 111A, 214. In all these three cases, capital is a definition. They have added one more point, ULIP, where the annual premium paid exceeding 2.5 lakh. That entire ULIP related taxation we don't have in CA Inter. It is there only at CA final. That's why in ICS Trimetal also, ULIP related discussion is completely eliminated. So this is regarding ATC, one of the important point, that is life insurance premium. So that entire theory, whatever I have explained you right now, is completely discussed here. That is completely discussed here. And remember, whenever you are receiving maturity amount on Keyman insurance policy, it is always taxable. 1010D, not 10 clause 10D does not exempt Keyman insurance policy. So accordingly, the maturity amount is taxable under other sources or salaries or PGBB, as the case may be for Keyman. Normally, if I am receiving maturity amount from life insurance policy, if at all it is not exempt under 10 clause 10D, it is taxable under income from other sources. That's it. So related to that, one illustration is also given in our book. If you want to solve the illustration, you can open and solve it. Next, another one. Contribution to statutory provident fund, public provident fund, recognized provident fund. So contribution to provident fund is eligible for deduction. Suppose if you are working in a company as an employee, you are contributing, your contribution to provident fund is, you can claim it as a deduction. So for that, illustration 3 is given, and maximum deduction for provident fund is 1,50,000. That to which provident fund? Public provident fund, relevant for MCQ. Then contribution to Sukanya Samriddhi scheme. Remember, in ATC, whatever points I'm explaining you, only these are relevant. Remaining are not that important. So if at all, in respect of welfare of a girl child, if at all your contribution to Sukanya Samriddhi scheme, actually it is nothing but security of central government, subscription to any security or deposit scheme of central government. So one scheme, Sukanya Samriddhi scheme, is notified under that particular scheme. So if at all an individual is contributing to Sukanya Samriddhi scheme for girl child, the amount contributed is eligible for deduction. Contribution to any public sector company deposit scheme, getting it? Any notified deposit scheme, so they are exempted. Now this is another important point. Payment of tuition fee. Tuition fee means what? Nothing but coaching fee that you are paying. Getting the point? Even if you pay coaching fee, to an education institute like, Srestha, that is also eligible for deduction for your parents. Your parents can claim deduction for that. So payment of tuition fee to university, college, school, or other education institution within India for full-time education. Generally, CA coaching may not come under full-time education because it's a distance learning, right? Here, what you are paying is a private tuition fee. This may not come within the definition of tuition fee. Getting it? Normally, if at all you are pursuing some engineering or MBA or degree or 10th or 11th or 12th standard or school, that is eligible for deduction. So that to remember, the education must be within India. Only then it is eligible for deduction. And deduction is available only if the coaching fee is paid for two students. Only if it is paid for 2 students. Full-time education means it must be a regular course. It must be a regular course. Further, Another deduction is repayment of housing loan. Remember, here it is only principal repayment is covered, not interest, because in the same point, what is inadmissible under this repayment of housing loan, what is not covered? The amount is, if any expenditure where deduction is allowed under 24, if at all you already claim a deduction under 24, what does it mean? Interest on loan, you will claim deduction under 24 now for a house property. That is not eligible for ATC, which means indirectly, what repayment? Only principal repayment is eligible for deduction. Now, when you have taken housing loan, every month you will pay EMI. In the EMI, principal is there, interest is there. Interest amount, you can claim deduction under house property itself. For principal amount, you can claim deduction under ATC. And remember, the deduction is available only if the house property that you are buying, that is taxed under house property head of income. Suppose, you purchased a building, land and building. You are using it for your business purpose, which means it is treated as block of asset in the PGBP head of income. Now, no more deduction for that principal because you are claiming depreciation already. Suppose I purchased a house for residential purpose. So the house property is liable for tax under which head of income? House property. So I am claiming interest. Principal you can claim here. So along with principal, you can also claim stamp duty charges which you pay at the time of registration, registration fee that you pay at the time of registration, and any other expenses at the time of purchase. So all purchase related stamp duty, registration, transfer expenses, all that you can claim deduction. Able to understand? That's it. So with this, this housing loan point is also completed. Next, suppose if the SSC is depositing in a post office term deposit, remember it is term deposit, not savings deposit. If at all you are depositing in a post office, post office is covered here. This is bank. So either with a bank or with a post office, if at all you are depositing an amount for a value exceeding 5 lakh, for a period exceeding 5 years, minimum 5 years. So 5 years savings bank, 5 years a fixed term deposit with a bank, 5 years term deposit with the post office. Whatever you deposited, minimum deposit period must be 5 years. You should not touch it. Then you can claim the amount deposited as a deduction. Remember, ATC is completely investment based, savings based, retirement based section. So wherever you are investing, wherever you are saving, wherever you are planning for retirement, all these amounts you can claim deduction under ATC. I hope you are clear. The maximum limit for investment and term deposit is 1.5 lakh. You know what? ATC section itself has a limit, 1.5 lakh. The total deduction under ATC itself cannot exceed what? 1.5 lakh. Getting it? Fine. Next. Contribution to national pension system. Fine. I will come to this point at the time of ATCCD explanation. Getting it? ATCCD explanation, I'll come back. Now, there is something called retaxability. Like, what is this? Now, I told, right, house property related principal amount you're repaying. That you can claim deduction. If at all that house is sold within 5 years. You are claiming deduction from the past 3-4 years for principal repayment before completion of 5 years from the end of the year in which you purchased. When you got the possession, if from that year 5 years also not complete, within that you sold. Now earlier you claimed deduction under ATC for principal repayment. Whatever deduction you claimed and allowed under ATC, retaxable. Same way, insurance policy is there. Minimum 2 years you should hold it. Before completion of 2 years, if the insurance policy is surrendered, whatever the amount you got, earlier you claim a deduction for payment of premium. That amount paid, deduction which is allowed to you, retaxable. 5-year term deposit with a bank, 5-year term deposit with a post office, senior citizen savings scheme. Like this, some points were there. If at all you closed them within 5 years itself, at the time when you deposit, you claim a deduction, that is retaxable. So that's ATC for you. This ATC is over. Approximately 15 minutes we spent only on ATC. Some 13 to 14 minutes. That's it. So ATC is over. I hope you are clear. Now the another section that we have is, so with this now ATC is over. In this ATC I kept 1 point pending, contribution to NPS tier 2 account. I will come to that later. Now the next section, 80CCC. 80CCC is very simple. Contribution to LIC pension fund or any other insurer. Getting it? You see here. So where an SSC being an individual, getting it, paid or deposited for any annuity plan of LIC of India or any other insurer for receiving pension from the fund set up by LIC, nothing but you are contributing to LIC pension fund for receiving annuity at a future date. Suppose if you are contributing to pension fund of some mutual fund, pension fund of Unit Trust of India, that is covered in ATC. Pension fund of LIC you are contributed, or pension fund of some other insurance company you contributed, then that is coming under 80CCC. And in 80CCC there is one condition which can be tested in MCQ. The contribution must be out of the income that is chargeable to tax. Only from your taxable income you got, right, in gross total income, from that only that amount should be contributed. Suppose you have agricultural income which is exempt, from that some amount you took and contributed to 80CCC, you will not get deduction. Only from taxable source of income you should contribute to 80CCC, only then you will get deduction. This item they will be testing. Now what is the impact of this item cannot be explained in revision class like this. I hope you are clear. Now under 80CCC, overall ceiling limit, maximum deduction under 80CCC is 1.5 lakh. Now you see here. Now you observe under 80C what is the limit? 1.5 lakh is the total limit. Under 80CCC also what is the limit? 1,50,000 is the limit. Are you able to understand? Now don't worry. Let us keep it like this. The 80CCC over. Now 80CCD. 80CCD. What is this 80CCD? Understand the structure of the provision. Contribution to National Pension Scheme, Atal Pension Yojana, Central Government Pension Scheme, Central Government Pension Scheme. Again, if you use the word Central Government Health Scheme, that is 80D, not 80CCD. Pension Scheme of the Central Government. Okay, so to this, two people are contributing. Now, generally, SSC, let us talk about SSC contribution. SSC contribution. Suppose if this SSC is working in a company, the company will also contribute. That is called employer contribution. That is called as what? Employer contribution. Now, employer contribution is covered under 80CCD subsection 2. SSC contribution is covered under 80CCD subsection 1, 80CCD subsection 1B. Suppose SSC contributed some amount. Let us assume some amount is contributed. Let us assume 2 lakhs is contributed by the SSC out of his pocket. 2 lakhs he paid to National Pension System. Now up to 50,000 rupees. Up to 50,000 rupees at first. Claim it under 80CCD 1B. SSC paid out of his pocket. Now how much he paid? First identify how much he paid. 2 lakhs, 1.5 lakh, 1 lakh. How much he paid? Check out. From that, take 50,000. Allocate. So you have to allocate under 80CCD 1B. How much? 50. So claim deduction. So deduction is 50,000 up to 50. Suppose SSC contributed 20,000 only. Then under 1B, how much we allocate? 20,000 only we allocate. Now, what is the balancing figure? The balancing figure is out of 2 lakhs. Already 50,000 allocated now. So what is balancing figure? 1,50,000. Now can I claim deduction for this entire 1,50,000? No. This is restricted to 10% of salary. In case if the SSC is a salaried employee working in an organization, then the National Pension System contribution coming under clause subsection 1 is restricted to 10% of salary. Getting it? For a salaried employee. Suppose if the SSC is not a salaried person, he is a self-employed person. Then the subsection 1 contribution is restricted to 20% of gross total income. Able to understand? Either 10% of salary or 20% of gross total income. As the case may be. It's not whichever is higher, whichever is lower. No, not that. As the case may be. For self-employed, we check 20% of GTA. For salaried employee, we check 10% of salary. Remember, when you contribute out of your own pocket, first 1B is saying up to 50,000, take deduction happily. Now, balance if at all you contributed extra, then keep it under clause 1, subsection 1. Under subsection 1, how much reduction you can claim? Up to 10% of salary if you are a salaried person. If at all you don't have salary income, then what is your gross total income? On that 20% we will allow. Now, there is a section. Now, now ATC, what is the deduction? 1,50,000. 80CCC, what is the deduction? 1,50,000. 80CCD subsection, what is the deduction? 10% of salary or 20% of gross total income, as the case may be. ACMB, let us assume. Now, there is a section under all these 80CCE, there is a section. What this section says, the total deduction that you can claim under 80C, under 80CCC, under 80CCD subsection 1 only. Some students may think entire 80 CCD is covered in overall limit. No. Only subsection 1 is covered within the overall limit. So the total deduction under these 3 sections cannot exceed 1,50,000 rupees. Please make a note. This is called overall limit. This is called overall limit. Under ATC you can claim total 150. Under 80 CCC you can claim total 150. Under 80 CCD subsection you can claim 10% of salary up to, or 10% of 20% of GDA, whatever applicable. You can claim under each section like that. But all these 3 sections put together, there is an overall limit, and that overall limit is 1,50,000. And remember, within this overall limit, subsection 1B, subsection 2, they are not covered. You clear? Next, okay, under 80 CCD, no, employer also paid, no. You are working in a company, he paid, no. Whatever he paid, no, that amount also you can claim deduction. Now you might get it out. Sir, why will I get deduction if at all my boss paid? Very simple. You see 17 subsection 1, salary set off income, salary definition. Salary definition includes contribution to national pension scheme by the employer. Getting it? That is treated as salary income in the hands of employee. So when he paid to the fund, no, national pension fund, no, that entire amount is taxed in your hands as salary. So whatever he paid, no, it is taxed for you. Now it is ultimately paid. You didn't receive, no, it is paid, no, contributed, no. So you are claiming deduction. So when he paid, it is treated as your income, which means your income only you paid. So it is taxed in your hand. Then again you can claim deduction under 80 CCD subsection 2. Now, like suppose employer contributed 2 lakhs in your name. Let us assume employer contributed how much? 2 lakhs in your name. Okay, this 2 lakhs is treated as income from salary. In gross total income it is considered. Now, what is deduction under 80 CCD subsection 2? The maximum deduction is 10% of salary. You will get deduction up to how much? 10% of salary. Suppose if you are a government employee, then 14% of salary is the maximum deduction. Let us assume, what is meant by salary? Here also 10% of salary, here also salary, here also salary is used. What is meant by salary? Basic plus DNS elements, if terms of employment or forming part of retirement or for retirement benefit, any word they may give. DNS elements, terms of employment, forming part of employment, for retirement benefit, some word they will give. So that DNS elements only you should consider. So basic plus TA. So what is the total basic plus DNS elements, terms of employment for retirement? Total it throughout the year. On that apply 10% or 14% for government employee. That much only you can claim deduction, maximum. Employer contributed 2 lakhs. 2 lakhs is taxed for you. That doesn't mean entire 2 lakhs you will get deduction. Deduction is restricted to 10% of salary or 14% of salary as the case may be. And remember, the deduction under clause 1B, subsection 1B, and the deduction under subsection 2, these two are in addition to overall limit. And now in ATC we kept one point, no, this NPS, no, there are 2 tiers, tier 1, tier 2. Tier 2 NPS, tier 2. Tier 1 is what? Entire ATCCD, whether it is subsection 1, subsection 1B, subsection 2. So whether you or employer, whoever is contributing, generally you are contributing to tier 1. The tier 1 comes under ATCCD. Suppose if you are contributing to additional account of NPS, in NPS only you have additional account. To that account you are contributing, that is actually called as tier 2. Second priority will be given to that for deduction. And if you contribute to national pension scheme tier 2, you will get deduction under 80C, and that is what here it is given. So contribution to tier 2 of national pension scheme, that is covered under 80C section. Generally if you are contributing to tier 1, in exam they will give you tier 1 contribution, 80CCD you should apply. If in exam they mention tier 2, then it comes under ATC. If it is tier 2, it comes under ATC. It is covered in overall limit. So which is beneficial? If at all you want to contribute to tier 1, which is beneficial for you. Able to understand. Next. So that's ATCCD. Whatever matter I have given you entirely explained here. Now here in ATCCD, one more important point is there. Suppose you are closing this pension account. Whenever you are contributing, whenever your company is contributing, your boss, you are claiming deduction under 1, 1B, 2. And like that you are claiming deduction. After certain number of years, you closed this account or you opted out of this scheme. Whatever amount you receive, it is fully taxable. Remember, it is fully taxable. Suppose if your nominee or legal heirs have received because of the death of the person, it is exempt. If the person closed the account and received the money, fully taxable. If this fellow died, nominee or legal heirs received, fully exempt. Now, okay, this fellow is only there. This fellow is closing the scheme completely, opting out of the scheme, closing the pension scheme, and entire money he withdraw. So NPS, NPS trust, the scheme, whatever is there, they are paying to an SSE on closure. So whatever NPS trust is paying to SSE on closure of the scheme, that is taxable for the SSE. However, up to 60% of the total amount that you are receiving, whatever the trust NPS paying to the person, out of the total amount, 60% is exempt, 40% only taxable, which means if a person closing the NPS account and receiving lump sum money, getting it on closure, permanently or closing, 40% only taxable, 60% exempt. Suppose, sir, I am not closing fully, sir. I am only withdrawing partially for some emergency purpose. What is the tax treatment? How much you partially withdrawn? Check out. 10 lakhs I withdrawn, sir. Now, till the date when you made a withdrawal, how much you contributed, sir? 5 lakhs only contributed. Out of the contribution, 25% is how much? So 5 lakhs into 25%, 1 lakh 25. Yeah, 1 lakh 25. So up to 1,25,000 you can claim exemption. Remaining 8,75,000 is taxable under income from other sources. So if you partially withdraw from NPS account and the NPS trust is paying you the withdrawal amount, so in that 25% of the amount contributed by you, that is exempted. That's it. So this 80cc is also completed. Now let's come to 80D. Now I hope you are able to understand. If at all you felt somewhere like little speed, see, for sure revision class can never be a substitute for a regular class. Okay, don't expect regular class kind of clarity in a revision class. Here, even though it is a revision, I am giving you entire information clearly. I am not skipping any part of the information. Getting it? Now 80D. Now 80D also you should understand structure very clearly. In 80D, you can claim deduction for premium paid on medical policy. You can claim deduction on preventive health checkup expenses. You can claim deduction on medical expenditure on senior citizen who do not have medical policy. Suppose if a senior citizen is there, or for him medical policy is not there, then you are incurring some medical expenditure treatment, that you can claim deduction. Or you are paying premium for medical policy, you can claim deduction. Or you are paying health checkup expenses, you can claim deduction. Now the section says for first item and the third item, you can claim deduction only if it is other than cash. So medical expenditure on senior citizen, you spend the money by other than cash, then only you will get deduction. Premium on medical policy, you will get deduction only if it is paid by other than cash. But preventive health checkup can be either in cash or other than cash, no restriction. And remember, the section says maximum deduction for preventive health checkup is 5,000 rupees. Maximum deduction for medical expenditure for a senior citizen for whom there is no medical policy, maximum deduction is 50,000 rupees. Now for the premium, what is the deduction limit? Now under 80D, the policy can be taken, the premium can be paid in respect of two categories of people: SSE, spouse, getting it, dependent children. They have clearly used the word dependent children. Getting it? Children can be minor or major, doesn't matter. Even in ATC they use the word any children, no dependency condition. LIC premium can be paid for spouse and children also, but they're dependent or non-dependent, doesn't matter. But in 80D, if your children is dependent on you, for him if you are paying medical premium, then only you will get deduction. And children can be minor or major, doesn't matter. And you are paying to parents. Parents can be dependent or non-dependent, doesn't matter. So this is category 1, this is category 2. Now you know what 80D says. The total deduction for medical premium paid for the SSE, spouse and dependent children, cannot exceed 25,000. So maximum deduction is 25,000. Suppose if at all you are taking medical policy for parents also, you are only bearing the premium, you are only paying the premium, then maximum deduction for parents separately can be claimed up to 25,000. Suppose many students think, sir, for parents 50,000. No. 50,000 limit is for senior citizen, not parents. Suppose if your parents are not senior citizen, they are less than 60 age, then 25,000 only maximum deduction for that particular category. Suppose if at all your parents are senior citizen, then maximum deduction is 50,000. Suppose if the SSE or spouse or children, if in this category if any one person is senior citizen, then the maximum deduction is 50,000. Able to understand? First of all, under 80D, medical premium paid, you can claim deduction Deduction will be given for two categories of policies. Policy taken for self, spouse, dependent children. Policy taken for parents, whether they are dependent or not. For self, spouse and children, dependent children, maximum premium is 25,000 allowed as deduction. For parents, another 25,000 separately you will get deduction. Suppose in category 1, he's a senior citizen, the limit is 50,000. If parents are senior citizen, then limit is 50,000. And you know what? The section limit itself, the maximum deduction that you can claim. Remember, the maximum deduction that you can claim under 80C, like 80CCC, 80C, there is a maximum limit. What is the total section limit? 1.5. Same way, 80D also, there is a maximum limit. So what is a maximum limit under 80D? Maximum limit under 80D. How much is the maximum deduction? Suppose if category 1 is normal citizen, category 2 also normal citizen, parents also, then maximum deduction is 50,000 rupees. Suppose if category 1 SSC is normal, but category 2 parents or senior citizen, then he can claim 75. Nothing but for category 1 25, category 2 50. Suppose category 1 senior plus category 2 also senior, then 50 plus 50 is equal to 1 lakh is the maximum deduction. This is the maximum answer that you can claim, that you can get under 80D. Now remember, sir, you said just before preventive health checkup 5,000 deduction, for medical expenditure 50,000 deduction, provided it is for a senior citizen where there is no medical policy. Yes, you will get these two deductions, but these two deductions are within the 80D limit itself. So within the overall 80D limit, only you can claim these deductions also. Able to understand. So for this also a problem is given in the illustration. So there, here in this book, we have given enough illustrations. If you open and solve, you can understand very easily these two illustrations. You can download this PDF from our websites, restofcsema.com. You can go there, old scheme, new scheme, you will find. So open old scheme or new scheme, anything, open P4, open P3, whatever it is, income tax, you can download this book. There you can find all this. This 80D is completed. Suppose, sir, I have paid medical premium. Getting it in lump sum. The policy is valid for 5 years. I have paid in lump sum amount medical premium. Getting it? Now, how can I claim deduction? You can claim proportionately for every year. Suppose you paid 1 lakh premium for 5 years policy. So every year you can claim 20,000 for each category. That's 80D for you. I hope you are clear. I have conveyed all the points. Next, 80DD. So deduction in respect of dependent with the disability. Suppose if the SSE, now dependent, suppose if at all disability, so deduction for disability. Who is suffering this disability? Suppose if the SSE himself is suffering, he can claim deduction under 80U. Suppose some dependent on the SSE is suffering from disability, then SSE can claim deduction under 80DD. Now remember, the deduction is for whom? Deduction is for SSE. If SSE is suffering, he can claim for himself under 80U. If his family member is suffering, 80DD. Now his family member is suffering. What do you mean by family of the SSE? Now here dependent means who and all. Getting it? So parents, brother or sister, spouse, children. And remember, all must be dependent on the SSE. All must be dependent on the SSE. And remember, this is only available for resident individual. This deduction is available only for resident individual in case of HUF, resident HUF. Now okay, what is the amount of deduction? How much you really spent doesn't matter. If you are suffering from disability, have you taken any treatment? Have you taken any insurance? That and all, no questions. In exam, they will give you information that SSE spent this much, SSE have this much expenditure, that and all irrelevant. Suppose if you are suffering from normal disability, flat 75,000 deduction. If you are suffering from severe disability, flat 1,25,000 deduction. Now, whether you are suffering from normal disability or severe disability, a medical practitioner has to give you a certificate. Getting it? So further, there is a format. Getting it? Like there is an act called Equal Opportunities, disabled people, equal opportunities, full participation, some act is there. In that act, they have mentioned what are all the disabilities that are covered. Autism, cerebral palsy. So that is also covered recently. Some three disabilities are also covered. That list is unnecessary for us. Understand the theme of the point. If SSE himself is suffering from disability while filing his IT return under section 80U, he can claim deduction of flat 75,000. If at all it is a normal disability. If at all it is a severe disability, he can claim a deduction of 1,25,000. I hope you are clear. Suppose I am not suffering, but my family member is suffering. What can I do? I am only maintaining them. They are dependent on me. So I'm incurring some expenses. Somehow I'm incurring something. Irrespective of how much ever you incur, if family member is suffering from disability, normal disability, 75,000. If at all family member is suffering from severe disability, 1,25,000. In exam, if at all type of disability is not given, for a problematic paper, assume that it's a normal disability. If it is a true or false question, write both the answers. If at all it is a normal disability, 75,000. If at all it is a severe disability, 1,25,000. But for a practical question, if disability is not clearly mentioned, then assume that it is normal, claim 75,000 deduction. Suppose, sir, now dependent is suffering from disability, sir. Suppose, no, there are 3 dependents on me who are all the 3 of them are suffering from disability. So can I claim multiplied by 3? No, this is section limit itself. The maximum deduction under the section itself is this much. Either 75 or 125. Any one only you can claim. I hope you are clear. 80 DD over, 80 U is also over. Now, suppose, no, now let us look at 80 DDB. 80 DDB. So that is what 80 D completely I told. Sometimes, no, here there is a point on deemed income. What is this point? I'll tell you. What is this point? In fact, this point is there in ATC also. Suppose, no, there is a dependent on me for whom I have taken an insurance policy with an insurance company. If something happened to me suddenly, he is dependent on me, how he will survive later on. So I have taken an insurance. If something happened to me, he will get a maturity amount. So if something happened to the SSE, the SSE's dependent got the maturity amount fully exempt. Suppose if dependent deceased, if a dependent died on for whose safety and security purpose I have taken the policy, that dependent, he died. Now I am receiving the maturity amount ultimately at the end of the policy, fully taxable. No exemption under 10 clause 10D. It is fully taxable. So if the dependent predeceases the individual who has taken the policy for the security and safety of the dependent, receives the amount from the insurance company on maturity, it is taxable in the hands of the individual. I think it fine. Now 80 TDB. Here the SSE or family members, all of them or any of them suffering from disability, suffering from a specified disease, either the SSE or family member. So family member means nothing but dependent family member. Dependent means what? Same parents, brother or sister, spouse, children. All these are dependent on the SSE. Either the SSE is having disease or any of them is having disease or all of them are having disease. Doesn't matter. Suppose under 80 DDB, they have given some list of diseases. If at all the SSE or family member is suffering from those diseases, up to 40,000 rupees or actual expenditure incurred, whichever is lower, you will get deduction. Here, deduction is linked with actual. You see, disability section 80 DD 80 U, how much you actually spend doesn't matter. You will get flat deduction. Whereas in 80 DDB, actual expenditure is how much. So that is very, very important. So 40,000 rupees up to 40 or actual, whichever is lower, that much is a deduction. Suppose, no, if the person who is suffering from disease is a senior citizen, then the limit is extended to 1 lakh. So up to 1 lakh you can claim deduction, which means under 80 DDB, what is the maximum limit? If the person who is suffering from disease is a normal citizen, up to 40,000 deduction. If the person suffering from disease is a senior citizen, up to 1 lakh they can claim deduction. And remember, this section is also applicable only for resident SSE, resident individual, 80 DD, 80 U, 80 DDB. All these 3 sections are applicable only for resident individual, resident HUF. I hope you are clear. 80 DDB is also over. So that's what 80 DDB, that is completely whatever the points covered here. We have clearly explained you all these points. Getting it? Next, 80E. Now what is this 80E? Now let's once again come back to our list. You see how easy chapter 6A. See, in chapter 6A, why many students confuse. Some students know they literally don't understand chapter 6A correctly. The main reason is they don't understand the structure of the entire section. Each and every section, the structure they don't understand. And I gave an introduction, no, in the initial 5 minutes, the total chapter 6A cannot exceed gross total income. That is very important, because when you're solving total income problems, there many students do mistakes. Because they claim deduction from gross total income directly without understanding, hey, gross total income, LTCG is there, STCG 111 is there, because they are not eligible for chapter 6A. Remember. So now, ATCCD clause 1, ATCCD clause 1B, ATCCD clause 2, ATCCE, ATDD, all these sections are over now. Yes or no? By the way, let me highlight with it, let me highlight in green color. So green means it is over. We have discussed it. You see how fast we are discussing. Already some 45 minutes. We discussed almost more than half. Now let's look at 80E. Now you know there are this is bit complicated. This is sorry, I mean 80G, 80JJA. These two are bit complicated, and next complicated one is 80QQB. You know, in the pending items, these three are bit complicated. So anyhow, I will make it very simple for you. It's very easy. Understanding structure is very important. Fine. Now, these 4 sections are interest related sections. I am not even opening the content directly. I'll explain you. Getting it? What is 80E? 80E talks about interest on education loan for higher education, which is taken from bank or financial institution or something. Only that interest paid is eligible for deduction. Now remember, for how many years you will get deduction under 80E? For 8 years you will get deduction. From which year? First year you start paying interest on education loan. No, first time. From that year, 8 years. Many think that under 80E, interest on education loan, you will get deduction from the year of taking the loan. No, no, no. See, banker gave me education loan. I am the one who wants to go abroad and study some education. They gave me loan. I took loan because I don't have money to pursue education, and after that get a job. Then after that I will earn. Then I will repay the bank. So the year in which I have taken education loan, the year in which I started earning will be some 3 or 4 years gap will be there. So bank also will wait until this period. Only after I started earning, banker will collect the interest from me. So from the first year in which banker is collecting interest, total 8 years interest amount, whatever I am paying, I can claim deduction. And remember, education loan interest, I can pay for individual, spouse, children. Able to understand. You see here, 80E. So interest on education loan, getting it? So spouse and children, and remember there is no dependency condition. Dependency point is not there. And even if I have taken education loan for purpose of for the purpose of somebody for whom I am the legal guardian, that is also eligible. Remember, only for higher education. Now remember here one more point. Education can be within India or outside India. Now here, what deduction you get? Do you get deduction for tuition fee? No. You get deduction for interest on loan taken for higher education. The interest amount only you can claim deduction. Sir, I have paid fees to the college. Wow, how can I do? That tuition fee, if it is paid within India to some college or education institute, that you can claim deduction under 80C. That's it. That's 80E. Next. That's 80E. I hope you are clear with 80E. Now, let's look at 80EE, 80EEA. So what these sections are? These sections 80EE, 80EE and 80EEA. So these sections are brought with a view to give deduction for first time home buyers. So 80EE, 80EEA. So first time home buyers. So if at all a person is buying for the first time house, getting the point, first time home buyers mean, see in these two sections, so what is the point? These two sections says you have taken a housing loan. You are paying interest on that. That house is subject to house property head of income. You are claiming deduction already for interest amount on house property. But you know very well, for a self-occupied property, unoccupied property where NAV is equal to 0, maximum interest on loan you can claim is how much? 2 lakhs. Suppose you are paying to a bank 3 lakhs. Now extra 1 lakh you are not claiming no under house property. That you can claim under these two sections. Any one only. Either one, if at all you already covered under 80E, no more 80EA. Any one only, mutually exclusive. Suppose you have not taken 80EE benefit, then you can take 80EA benefit. Getting the point? Like, so you are paying interest on loan, housing loan. That interest is eligible for deduction here, provided on that interest you did not claim any deduction under house property. Getting the point? Suppose suppose there is a let out property. I have paid 3 lakhs interest under house property. Now I can claim for let out total deduction, but don't claim 2 lakhs only. Why? Even if you claim total deduction for a let out property interest deduction, even the net result is loss, you cannot set up with other head of income beyond 2 lakhs. So if at all the total interest after reducing, if at all loss is beyond 2 lakhs, the extra amount of interest is there, no, where loss is crossing 2 lakhs because you can't set up with other head. That interest you can claim under 80EEA or 80EE as the case may be. Under 80E, maximum deduction for interest is 50,000 rupees. For how many years? From the year in which you took the loan till the year 20 years or 30 years or 15 years till you repay the loan, 50,000 interest portion you can claim. Under 80EEA, it is 1,50,000. Under 80EEA, it is 1,50,000. Now, what are the conditions? Date of sanction of the loan should be between 16 and 17 previous year. So 1/4/2016 to 31st March 2017. Within this previous year, within this financial year only, you should get sanction of the loan. And the loan sanction amount shall be less than or equal to 35 lakh under this section. And value of the house should not exceed 50 lakh. So if these conditions are satisfied, then interest on loan paid up to 50,000 rupees, you can claim deduction under 80EE. Now in 80E, only in this year, if at all you have got a loan for housing purpose, then only you will get deduction. What about subsequently? No more deduction under 80E. That's why, in 2019, they have introduced another section for first time home buyers. Suppose you have taken a loan, between 1/4/2019, you have taken a loan between 1/4/2019 to 31st March 2022. Between these 2 years, if at all you have taken a loan. Getting the point? And the stamp duty value of the house is not exceeding 45 lakh. You remember, under 80EEA, stamp duty value is what referred, whereas here value of the house is what referred. Getting it? So stamp duty value is not exceeding 45 lakhs and the loan is sanctioned between this date. Then interest on that loan, you can claim deduction up to how much? 1,50,000. Remember, if at all the total interest is 1.5 lakh, you already claimed under 25, that 1.5 lakh under house property, you cannot claim further here. Further, 80EEA, this section is not open for whom? Those who already claimed 80EE. In both the sections, the date on which loan got sanctioned, no, on this date, you should not have any house property at all. Which means, by taking this loan only, you are buying the house for the first time. First time home buyers only this provision. Understood or not? Next we have 80EEB. Next we have what? 80EEB. What is this 80EEB? If at all you have taken any loan during 1/4/2019 to 31st March 2023 for purchase of electric vehicle, EV revolution started in 2018-19 onwards. Getting the point? When the Modi government have started the second tenure, they have brought a very big EV policy, e-vehicle policy framework has been brought. So that's why, to incentivize those who are using electric vehicles, this section has been brought. So what this section says, if at all you have taken any, if you have purchased any electric vehicle, for that purpose you have taken any loan during 2019 to 2023, remember here 1/4/2019 to 31st March 2022, here 1/4/2016 to 31st March 2017, here 1/4/2019 to 31st March 2023. Means here, if you have taken loan in any 3 years, here you have taken loan in any 2 years, here you have taken loan in 1 year. So every time they have increased the time limit. Observe this. So to purchase an electric vehicle, you have taken a loan, and the loan is sanctioned between 1st April 2019 to 31st March 2023. Whatever interest that you are paying on that loan, no, that interest component only, you can claim deduction under 80EEB. If at all the entire interest paid is already claimed as a deduction under some other head of income, you can't claim here. Suppose I purchased an electric vehicle for my business. That asset I have added in my block of asset. Interest paid on that vehicle I am claiming under 36 section, deduction in PGBP. I cannot claim 80EEB. So with this, over. Now let's look at 80G, 80GGA, GGB, GGC, GG. Now 80G, one of the confusing section. Many students have some confusion on 80G. Why? Because the computation of 80G, many students will confuse. Okay, fine. So 80G, in 80G, they have given approximately 30 plus deductions. 30 plus 80G is what? You are getting deduction for donations. You are paying some donations. For that reason, you are getting deduction. Now, the donations that you are paying, no, these donations under 80G are classified into 4 categories. They are classified into 4 categories. Category 1, Category 2, Category 3, Category 4. Look at the structure of this 80G. If you understood this structure, it's very simple. Okay, so 4 categories were there. Okay, now how to solve the problem? Directly they'll give you list of donations. On 80G itself, they may give you an exclusive problem for 4 to 6 marks. So in that case, how to? So first identify which donation comes under which category. Suppose under category 1, some 3 donations paid by you. All the 3 donations put together 1 lakh is the total. Okay. Under category 2, you paid some 4 donations. 4 donations you paid. All the donations comes under 75,000. Under category 3, category 3 related payments, you gave some donation. That amount comes to 1 lakh. Under category 4, you paid some 2 or 3 donations. The total amount paid comes to some 75,000 rupees. That's it. Okay. Now, what is the deduction? This is the amount paid by me. belonging to category 1, belonging to category 2, belonging to category 3, belonging to category 4. All these amounts were paid by other than cash. Why? In 80G, if you are paying any donation exceeding 2000 rupees to any fund or institution, you have to pay by other than cash. Otherwise, no deduction. Now, how much is the deduction? 100% into 50%. Here, 100% into 50%. Very simple. Simple. What is the amount paid? Apply 100% for category 1. So, what is the deduction? 1 lakh. What is the deduction? 75,000 into 50%. So 37,500. What is the deduction here? Don't apply. For category 3, category 4, there is one more condition. Category 3, category 4 put together, how much you paid? 1,70,000 you paid. The payment made under category 3, category 4 shall not exceed. There is a condition. The payment made under category 3 and category 4 shall not exceed the qualifying limit. What is qualifying limit? 10% of adjusted total income. You paid 175, but entire 175 payment we don't consider. Only some of it will consider. How much you will consider? We will not be the total payment belonging to category 3, category 4. Payment, I am talking, not deduction. Payment itself. It shall not exceed 10% of adjusted total income. So that is the how much ever you paid entirely will not qualify for deduction. See, you see here, if category 1 lakh is qualified for deduction, 75,000 is qualified for deduction. Of course, 75 is qualified for deduction, but deduction is 50%. Here, 1 lakh is qualified. Deduction is also 100%. So 1 lakh. Now, whereas here you paid 1 lakh and 75. 175 you paid. Entire 175 will not qualify. How much will be qualified? The both category 3 plus category 4 put together total amount paid cannot exceed qualifying limit, that is 10% of ATI. Now what is adjusted total income? Adjusted total income means gross total income minus LTCG minus STCG 111A minus exempted incomes if any were there. But remember, minus 115 BP winnings should I reduce? No need. No need to reduce. I have explained the reason very clearly in my regular class. Why winnings amount need not be reduced, I will clearly explain. Fine, anyhow. Now you get minus chapter 6A deductions. All chapter 6A, right from 80C to 80U. Getting it? So 80C, 80D series, 80G series, 80GG, 80TT, 80QQ, all the deductions you reduce except 80G. Whatever comes under category 1, 2, 3, 4 of 80G, is there no total deduction? That you don't reduce. Remaining all chapter 6 here, reduce it from gross total income. LTCG reduce, STCG 111 reduce. Now you will get some adjusted total income. That is, let us assume 10 lakhs we are getting. Actually, gross total income is 40 lakhs. Capital gain is some 10 lakhs. Short term capital gain 111A is some 15 lakhs. All chapter 6 deductions put together 5 lakhs. So 40 minus 10 minus 25 minus 5. Getting it? So minus 15. 40 minus 10 minus 15 minus 5 is equal to adjusted total income 10 lakhs I am getting. Now into 10% how much? 1 lakh. Which means under category 3 plus category 4 put together, what is the maximum donation you can pay? Lakh only. But this fellow, in this case, how much this fellow has paid? This fellow paid 1,75,000. Let us assume the total income is 12 lakhs. Qualifying 10% is 1,20,000. Let us assume for better understanding. What this fellow has paid? This fellow paid 1,75,000. But how much he can pay? 10% value comes to 1,20,000 only. But here they paid 175. 175 is restricted to 120. So first I have 120 only limit. Here I paid 1 lakh. So qualifying limit entire 1 lakh. I will allocate 1 lakh here. Now after allocating 1 lakh, how much is left? 20,000 is left. That 20,000 allocate here. Okay. So this 75,000 is restricted to 20. Now both put together under category 3, category 4, we restricted to qualifying limit now. How much? 120. Now apply 100%, apply 50%. So 1 lakh deduction for this amount, 20,000 into 50%, 10,000 only deduction. So that's it. What is the total deduction under ATG? So 1 lakh plus 37,500 plus 1 lakh plus 10,000, 2 lakh 47,500 is the deduction. Category 1, amount paid multiplied by 100%. Category 2, amount paid by multiplied by 50%. Category 3 and 4, amount paid identified. Both put together, reduce it up to 10% of ATA. Suppose if 10% of ATA is in this case more than 175, no problem. On 1 lakh 100%, 75, 50%. But here 10% of ATA, qualifying limit comes only 120. So 120 only we will allocate for category 3, category 4. Already category 3 1 lakh is there. So out of 120, 1 lakh I will allocate. First you will allocate qualifying limit is there, no? That limit first allocate it for category 3. Still limit is there. Allocate it for category 4. Now Category 3, Category 4 amounts paid reduce it to qualifying limits. Apply 100%, apply 50%. This is the answer. Very easy. Now, sir, what is Category 1? What is Category 2? What is Category 3? What is Category 4? That is what we have given in 80G. So, Category 4. So, what are all comes under Category 4? You are donating to charitable trust. All registered charitable trust. Category 4. You are donating to government for charitable purpose. You are donating to government for charitable purpose other than family planning. Suppose if at all you are donating to family planning for government, then that comes under Category 3. Category 3 donation means what? Within the qualifying limit, whatever amount you paid, 100% you will get deduction. Category 4 means what? Within the qualifying limit, whatever you paid, 50% only you will get deduction. Suppose you are donating to Housing Development Authority for town planning, city planning, housing development projects, or you are donating to some corporation which is established exclusively for promotion of minorities' interest, you will get deduction under Category 4. You are donating for renovation of religious premises, renovation purpose, getting the point. So for that purpose you are donating. Category 4. Suppose you are donating for family planning, then Category 3. Suppose if a company is donating for Olympic Association or any other sports associations, then it is coming under Category 3. Remember. So if at all we are donating to Olympic Association or any association or institution which is established for development of infrastructure for sports, so Olympic Association or any association which is exclusively engaged in development of infrastructure for sports, for them Category 3. Now remember, this Olympic Association only a company can claim. In exam, they'll give you an individual contributed donation to Indian Olympic Association or some other association for development of infrastructure for sports. Individual donated, no deduction for individual, because Category 3 Olympic Association, that point only for companies you will get. Then suppose if at all you contributed to Jawaharlal Memorial Fund, Indira Gandhi Memorial Fund, Rajiv Gandhi Foundation, getting it. So if at all you donated to Jawaharlal Nehru, Jawaharlal Nehru, Indira Gandhi and Rajiv Gandhi, getting it. So you will get deduction under Category 2. Suppose you donated to Prime Minister Drought Relief Fund. Drought Relief Fund is not frequently used. Very rarely it will be used by Prime Minister. So it's not that important fund. That's why it is Category 2. So how much ever you pay, only 50% deduction. Be able to understand. Remaining all other, like what are they? Prime Minister National Relief Fund, Prime Minister National Relief Fund, all state governments CM Fund, all state governments Governors Relief Fund. Getting the point? You will get deduction under National Sports Fund. Remember, if at all you are donating to any association for development of infrastructure for sports, that Category 3. You are donating to National Sports Fund, that is Category 1. Getting the point? In this, or you are donating for Swachh Bharat Kosh, you are donating for Clean Ganga Fund, or you are donating to Prime Minister Cares Fund. You might have seen this Cares Fund very frequently in COVID time. So you are donating to, very simple, if at all you are donating to somebody who do not come under Category 2, Category 3, Category 4, it's a Category 1 donation. How much ever you pay, flat 100% deduction. So this is what entirely we have given. All these points we have covered. And remember, if at all you are donating in kind, suppose you donated jewelry to a charitable institute, no deduction at all. That's with that 80G is over. Now let us look at 80GG. Okay, I'll come to 80GG later. Why? Because 80GG is not a donation section. 80GG is a deduction for rent purpose. So 80G is over. Almost 1 hour, more than 1 hour. Fine. Remaining all sections put together all hardly takes half an hour. No problem at all. Yes. So 80G is over. Now let's continue 80GGA. What is 80GGA? If you are donating to Scientific Research Association for carrying scientific research, or you are donating to Research Association for social research, or you are donating to Rural Development Authority or any other eligible project, or you are donating to Poverty National Urban Eradication Fund. Getting the point? So if at all you are donating to these institutions, whatever amount you donated, entire amount you will get deduction, provided the amount exceeding 2000 you cannot pay by cash, only by other than cash. Getting it? Now this section is not applicable if at all the SSC is having PGBP head of income. Suppose if the SSC is having PGBP head of income, the amounts referred under this section, whatever the donations referred under 80GG, they're all covered under 35 subsection 1, clause 2, clause 2A, clause 3, 35 subsection 2AA, 35 CCD. So like that, these all points were covered in PGBB. So SSC who is having PGBB head of income, 80 GGA do not apply. For remaining SSCs who do not have PGBB income, if these fellows are contributing for scientific research, if these fellows are contributing for social research, if these fellows are contributing for rural development, if these fellows are contributing for, poverty eradication funds and all, getting the point, that entire amount is eligible for 80 GGA deduction. 80 GGA is over. Next, 80 GGB, 80 GGC. Both these sections are talking about political party donation or electoral trust donation. If you are donating to a political party or electoral trust, single rupee also you should donate only in other than cash. Up to 2000 limit is not there. Up to 2000 80 GG only limit is there in cash. But 80 GGB, 80 GGC, donation to political party, compulsorily you must pay by other than cash only. Only then you will get deduction. Now, if an Indian company donated, 80 GGB deduction. If anybody else donated, 80 GGC deduction. If an Indian company is donating, 80 GGB. If a resident other than Indian company is donating, 80 GGC. That's the 80 GGB, 80 GGC. These two are very simple sections. And 80 GGB, they have given a definition for what do you mean by contribution to political party. Contribution to political party includes advertisement expenditure incurred in the political party newspaper, brochure, magazine or pamphlet, whatever. Getting it? That's why whenever we incur any advertisement expenditure related to political party newspaper or brochure, it is not allowed as deduction under PGBP. 37 subsection 2B, it disallows. Yes or no? Why? Because it is treated as a donation. Accordingly, that advertisement expenditure treated as donation, you can claim deduction under 80 GGB. Then 80 GG. Deduction for rental expenditure. Suppose you are staying in a rented accommodation, you are paying rent. You can claim deduction. How much deduction? You can claim maximum the following deduction. Maximum. How much amount you are paying? How much amount you are paying? Getting? I mean, actual rent per month. This is a maximum deduction, or statutory limit maximum 5,000 per month only deduction, or actual rent. Sorry, this point is not required. Actual rent minus 10% of adjusted total income, or 25% of adjusted total income. This much only you can claim. Suppose the SSC is paying 15,000 rupees per month rent. Total how much is paying rent? 1,80,000. Let us assume adjusted total income is 1,15 lakhs or 10 lakhs. So actual rent is how much? 1,80,000. 10% of 10 lakh means 1 lakh. So how much it is? 80,000. Second criteria. 25% of 80 means 2,50,000. Full 12 months he has been staying in rented accommodation. So 60,000, 5,000 into 12. So 60 or 80 or 250, whichever is lower. 60,000 is a maximum deduction. So under 80 GG, the maximum deduction is 60. Now there are conditions. Now what is first of all adjusted total income? Adjusted total income means gross total income minus LTCG minus 111A, short term capital gain, minus all chapter 6A deductions from 80C to 80U except 80GG. Now in 80G also adjusted total income is there except 80G all deductions. 80GG except 80GG all deductions. Now if SSC is having 80G, 80GG both the sections is having. Now how to calculate adjusted total income in both the sections? Linear equations we should apply. So that and all in-depth knowledge is not required from exam point of view. That much they don't test at all. Getting it? Fine. Now what is the condition? Now first of all, who can claim 80GG? This is the one important condition. Suppose if the SSC is claiming self-occupied, unoccupied, NAV is equal to 0 benefit under house property, that fellow cannot claim. If the SSC is having deemed let out property, taxation under house property, he cannot claim. If the SSC is receiving house rent allowance and claiming 10 clause 13A deduction under salaries chapter, he cannot claim. Only an SSC who is staying in rented accommodation, not having SOP, not having DLOP, not having HRA, he can claim deduction. Further, one more condition. Suppose okay, you are not claiming SOP, DLOP, you are not having HRA, but you are staying in rented premises in the same city where you have a own house. You also cannot claim. Which means in the same city where you have own house, you should not be staying for rent. You should be staying in some other city because of job, because of business, because of profession, whatever. You are staying in some other city. In that city, you don't have own premises. That's why you have taken on rent. The rent paid is eligible for deduction under 80GG. That's it. Over. 80GG section is over. I hope you are clear. Please, since this is a YouTube video, you can listen once again. If at all any of you feel that I'm little speed, understand it's a revision class. Getting it? I'm not simply reading, opening the book. I'm not simply reading. I'm giving you proper explanations. That's it. So with this 80 GG is also over. Now let's finish 80 TTA, 80 TTB, and then I'll come back to these yellow items. 80 TTA, 80 TTB. First of all, 80 TTA, 80 TTA, this section you can apply for normal citizen. 80 TTB, this section is eligible for senior citizen. First of all, 80 TTB is only applicable for residents, whereas 80 TTA, whether you are a non-resident or resident, doesn't matter. These are the basic important items. Non-resident means he may be more than 60, more than 80, doesn't matter, because senior citizen, super senior citizen, the words can be used only for resident people. Yeah. Now what is 80 TTA? Suppose you are having savings account. On this savings account, you may be having with a bank or you may be having with the post office. You are getting interest. Let's assume you are getting interest of 20,000 rupees savings interest. Now this is taxable under income from other sources. So accordingly, gross total income it is covered. Now under 80 TTA, you can claim deduction up to 10,000 rupees. That's it. 80 TTA is over. Suppose no. Here one important observation. Suppose no. If you are getting savings interest from post office. Suppose if this 20,000 is from bank, this is the tax treatment. Suppose if you get interest from post office, out of 20, 3,500 is exempt under 10 clause 15. So 16,500 is only taxable under other income from other sources. This itself is gross total income. So minus 80 TTA, how much deduction? 10,000. So this is in case of post office. So for post office savings interest, 3,500 is exempt side away. So taxable income from other sources itself is 16,500 in this case. So minus 80 TTA, 10,000 over. This is for normal citizens, whether resident or non-resident, where they are getting interest on savings deposit, they will get deduction. I hope you are able to understand. Yes. Next, suppose no, you are a senior citizen. Senior citizens, generally their source of income is pension interest. So the senior citizen is having some fixed deposit with the bank or post office, also have some savings deposit with the bank or post office. Now he is getting from both of them put together 1 lakh income, taxable under other sources. Now since he is a senior citizen, we have given increased deduction, 50,000 rupees. Up to how much you can claim? 50. So now here 80 TTB, whether it is a fixed deposit or savings deposit, both are eligible. Interest on both these deposits are eligible for deduction under Chapter 6A 80 TTB. That too, this deduction is only for senior citizen aged 60 years or more and a resident in India. That's it. Over 80 TTB. Now we are left with 3 more sections. Okay. Now I will finish 80 QQB, 80 RRB. 80 QQB, 80 RRB. So once I finish those two, then 80 JJAA, very, very simple. I'll explain easily. I hope you are able to understand the concept. Please read in the book also. So I'm attaching you the book also PDF. The PDF is free. Illustrations were there appropriately at appropriate places. You can easily understand. Now, 80 QQB, both these sections are for royalty income. So for royalty income. So what are the sections? 80 QQB, 80 RRB. If you are receiving royalty for books, you are authoring some book, scientific literature, arts, or you are having some patents for letting to use this patent for somebody, or you are transferring the rights in this patent to somebody, you are getting some royalty. Whatever the royalty income that you receive, it is taxable under PGBP income generally. Getting it? So it is included in gross total income. So now whatever the royalty income means what? Gross royalty minus any incidental expenditure is equal to royalty income. Now this royalty income in respect of the net royalty income which you receive, which is taxed in PGBP, getting it? For that net royalty income, you can claim deduction under 80 QQB. How much deduction? Suppose no, I received royalty in lump sum. So royalty income. Royalty income or 3 lakhs, whichever is lower, that much deduction I will get. Suppose if I am receiving royalty not in lump sum, I am receiving royalty as a percentage of books value sold, then up to 15% of the books sale value only royalty received, gross royalty received is calculated for exemption. Able to understand. On this, there is a clear-cut problem which is given. Now, whatever it is, whether it is lump sum, whether it is percentage of book value, the maximum deduction under 80 QQB cannot exceed 3 lakhs. The section limit itself is 3 lakhs. Even 80 RRB also, the section limit is 3 lakhs. Now, for books purpose, if you receive lump sum royalty, getting the point, how much is taxed in the PGBP? Balance amount, that income or 3 lakhs, whichever is lower. Suppose you received royalty as a percentage of sales of books. Getting the point? Then up to 15% of the gross royalty, that is only considered for calculating deduction. Out of that, already some PGBP deduction you claimed for expenses. Reduce it. Balance amount only you can claim deduction under 80 QQB. The total deduction under 80 QQB, whether lump sum or otherwise, doesn't matter. Maximum 3 lakhs only. That's the provision. And now remember, sometimes you are receiving this royalty not within India, from outside India. In that case, one more condition is added. Exemption is once again restricted to how much amount of foreign currency is received in India. How much amount of consideration received in convertible foreign exchange within India within 6 months from the end of the previous year in which you received the income. Suppose for 22-23 you received some royalty, you earned some royalty, we taxed in PGBP on accrual basis, but by 30 September of the end of the financial year, 30th September is there, within that you received only some amount, 1 lakh only you received in convertible foreign exchange, then deduction cannot exceed 1 lakh. Maximum deduction is 3 lakhs. Again, this maximum deduction is restricted to how much you are receiving in convertible foreign exchange, if at all the royalty is received from outside India. The provision is same in both the sections. In patents, percentage of sales concept is not there. In patents, it's only lump sum. So this is QQB, this is RRB. Over. With this, QQB, RRB is also over. Now, next, finally, 80JJAA. One more confusing section for all the students. What is this 80JJAA? You see the section heading, deduction for additional employee cost. What is it? Deduction for additional employee cost. Now this section is applicable only for those who are having tax audit. Only for those who are having tax audit. Suppose if the SSC is subject to tax audit only, this section is applicable. For others, this section is not applicable. And remember, the deduction is for what? Additional employee cost incurred by the SSC only, the deduction you will get. Now, suppose the SSC is an existing business. Last year, as on the closing date, I am having 100 employees. This year, I am having totally 150, which means, is there an increase in employees by 50 members or not? Yes. Then only additional employees definition you satisfied. That overall number of employees compared to last date in the preceding previous year, compared to current year, it should be increased. Then only this section is applicable. Then only you can claim deduction under this section. Now, how much I can claim deduction? You can claim deduction of 30% of additional employee cost for 3 years. You can claim 30% of additional employee cost for 3 years. You can claim deduction. 30% of additional employee cost. So every year, whatever salary you are paying to these additional employees, on the 30%, every year you can claim. So in the every year, whatever the salary you are paying, so year 1, 30% of the salary. Remember, whatever salary you are paying, that entirely you claim deduction under PGBP. In addition to that 30% extra deduction we are giving you, indirectly we are promoting you to give employment opportunities. So we are incentivizing the entrepreneurs so that they can give employment to people, so they can claim benefit under 80JJAA for additional employees that they are recruiting. Suppose you started newly business in this year only. Last year also you don't have any business. This year, this is the first year. In this year, how many ever you newly recruited? All of them are treated as additional employee. Salary paid to them is treated as additional employee cost. Multiplied by 30%, you can claim deduction under 80JJAA. Understood? Now, the following are not treated as additional employees. The following people are not treated as additional employee. Suppose if the total emoluments means nothing but monetary benefit given to employees except provident fund, except pension fund, except lump sum amounts. Any amount paid, allowance, basic, DA, bonus, commission, whatever, monetary emoluments paid, if it is exceeding 25,000, this fellow, the people who are earning more than 25,000 rupees monetary, they cannot be considered. They will not be considered under additional employee definition. They are not considered. And employees for whom entire contribution to provident fund, pension fund is paid by government, means government supported employees, they are not counted as additional employees if you recruit them. Nothing but part-time employees, those who are working in government, here also maybe similar to that situation it can come. Third one, so government employees and all, they don't come under additional employee. Third one, if an employee who is not participating in provident fund, so you have an employee, you recently recruited some 30-40 employees. They are not working in provident fund. They are not choosing provident fund. They are not contributing to provident fund. They are not participating at all. He will not be counted as additional employee. He will not be counted as additional employee. Or an employee who is employed for less than 240 days. Less than 240 days means what? Employed means not attendance. Many think it is attendance. It's not attendance. Suppose I recruited an employee on 1st April. Up to 31st March, he's working in this company. Maybe he is absent for 200 days. Absent is not matter. Is he an employee of this organization? Yes. For how many days? Entire 365 days he is employee. Less employed for 240 days. Less than 240 means for how many number of days he is an employee in your organization. That is what important. If an employee is employed for less than 240 days in this year, he is not considered as additional employee. But the same person, next year he is there full year. Now next year he is there for more than 240 days, more than or equal to 240. For that year, he will be treated as additional employee. For that year, from that year, 30% of additional employee cost, whatever you are paying to him, you can claim deduction for 3 years. Able to understand. Now we will solve a question on this. So we will solve an illustration directly, which we solved in our class. So you will understand better. Now you see here. Now further no. Now who are all not coming under additional employee? If an employee whose total salary amount is exceeding 25, he is not additional employee. Who is not participating in RPF, he is not additional employee. For whom entire contribution to pension or provident fund is paid by government, he is not additional employee. Who is employed for less than 240 days in that organization, he is not additional employee. Suppose if it is a footwear, apparel, leather business, no. Then instead of 240, 150 days is the criteria. Fine. Now you see here, only this is the one problem which I am doing here. Now anyhow, we have, after this, you have test your knowledge questions also. Some 5 questions on chapter 6 I solved. That also you see. Mr. A commenced the business of manufacture of computers on 1st April. So newly started business. So newly started business means one condition we need not check. Last year how many were there? This year how many were there? Overall increase there or not? That and all you need not check. Because it's a newly started. So how many ever he recruited during this year? All of them comes under additional employee. He employed 350 new people during this year. Oh, very good. The details are, on 1st April, 75 staff were recruited and we are paying 24,000 rupees salary, monthly emoluments, and they are regular employee. And they are here somebody is casual. Now let us see. Regular employees participate in RPF, very good. Whereas casual do not. Okay. So casual employees, no, they are not participating in RPF. So will they come under additional employee definition? No. Now here, second category, 125 employees we recruited on 1st May 2022. Let us assume all these people were continued up to 31st March 2023. They are all continued. They didn't resign in between. Now that means employees who were recruited on 1st April, they continued up to 31st March, 365, more than 240 days. Therefore, this is additional employee. Next, second, 125 employees we recruited on 1st May, 335 days they are there in the organization. But their emoluments is more than 25. So they are not additional employee. Now 50 employees, 1st August, exactly 244 days it will come. 1st August to 31st March, 244 days it will come. But they are not participating in RPF. RPF they are not participating. Therefore, they are not additional employees. Then finally, 100 employees. 1st September I recruited, up to 31st March were there. Amount paid to them is less than 25. They are technically speaking additional. But I recruited them on 1st September to 31st March, less than 240 days. Since they were employed for less than 240 days, for 22-23 previous year, they are not treated as additional employee. Suppose if these 100 people continue in the next year also, they are treated as additional employee for the next year. For the next year, they are treated as additional employee. So since they are employed for less than 240 days, they are not additional employee. Understood or not? Check out 4th August or after. On or after 4th August, if at all anybody is recruited by the organization, they are working for less than 240 days. Check out calculator. 4th August to 31st March. Check the date. Since here 1st August, more than 240. They are additional employee. But since they don't participate in RPF, we do not consider them as additional. Now tell me, how much reduction? Whatever salary paid to additional employee, here additional employee only this first category comes. How much salary we are paying? We are paying monthly 24,000 rupees. For how many months? They are recruited on April 1st. So 12 months we are paying. How many employees? 75 employees. So 24,000 into 12 months into 75. So we are paying 2 crore 16 lakhs. Very good. Now this entire 2 crore 16 lakhs PGBP deduction they will claim. For all these 350 employees, whatever salary paid, PGBP they will claim deduction under 37. That and all is fine. In addition to that, 30%. How much is 30%? Into 30%, 64 lakh, 80,000 is deduction under 80 JJAA. Now to these 75 people, next year also they pay salary na. On that salary again 30%. Third year also they pay salary na. On that they will get 30%. 3 years they'll get. Whereas this category is there in 100. For this year, they are not additional employee. But for the next year, if they are employed for more than 240, they are additional. Whatever salary paid in the next year, into 30. That next year, total 3 years. 30%, they'll get deduction under 80 JJAA. This is the answer. Now here, they have asked another question. What would be your answer? If Mr. A commenced business of manufacture of footwear on 1st April. Suppose here he started computers now, then 240 days. Footwear business means for wearing apparel, footwear, leather products, less than 150 days only he is not counted. 150 days or more than 150 days, if the person is employed, he is counted. Which means second alternative answer, salary paid to these people will also come under additional employee cost because they're employed for more than 140 days, more than 150. So 1st September onwards, 100 employees were paid, monthly 24,000 were paid. 1st September means 7 months we paid salary. So 24,000 into 100 into 7 months is equal to 1 crore 68 lakh. Getting it? Into 30%, that is the deduction. Yes or no? Is equal to 50 lakh 40,000. So total deduction is what? So for category 1, 75 employees, for category 4, 100 employees. So plus 64. So how much it is? 11 lakh 1 crore 15 lakh 20,000 is the total deduction. Alternative answer, second part of the answer. So now let's see. For the first part of the answer, the deduction is 64 lakh 80. Second part of the answer, it is by mistake given in the next page. That next page. Yeah, that next page. You see here. So how much is the answer? 1 crore 15 lakh 20,000. That's it. This is the answer for 80 JJA. This is how you have to compute. There is a possibility in the exam for November 2023. This question, even if it is May 24 also, they may ask. Who knows? That's it. With this, we have completed the entire chapter 6 deductions within 1.5 hours. Now I have given another half an hour continuation. Solutions are also there. So solving these problems, and already I explained, everywhere I took monetary amounts and explained. Indirectly we solved many problems already while we are discussing all the provisions. So 2 hours we took entire chapter 6A. Entire each and every section, entire theme, entire points are covered. Only thing which I did not do is reading each and every line and explaining you in depth. That about we didn't do. In a regular class for us it is 8 to 9 hours chapter. Getting it? In a revision class it is only 2 hours. That's it. Okay. Have a nice time. I hope you enjoyed chapter 6 introduction. Getting it? That's it. So TDS and TCS. Let's begin the concept of advanced tax, TDS and TCS. TCS provisions are dealt under, there is only one section, that is 206C, which has 5 subsections. We can actually call them as clauses. They are actually called as what? Clauses. There are 5 clauses under which TCS provisions are discussed. 1C, 1D, 1G, 1H. We'll discuss that later. We'll come back to it later. TDS. So what is TDS? Tax deducted at source. Very simple. The person who is paying some money to you. For the person who is paying, it's expenditure. For the person receiving, it's an income. Generally, in the basic concept level, at the first chapter level, what we generally think, income will be earned in the previous year. On the tax will be paid in the assessment year. Income tax assessment computation and all we generally do in assessment year, and we pay tax in the assessment year is what generally we understand in the first chapter when you're learning. But income tax department don't want to wait. They want to simultaneously collect the tax along with your income. When you are earning income itself, they want to collect the tax simultaneously. For that, what they are doing, where and all you are getting some income from various people, they are keeping a condition on the payer itself. Don't pay full amount. In that amount, my tax portion also there. So what you have to do, the payer, what he has to do, when you are paying, deduct some tax. Deduct some amount towards tax. Balance you pay to the SSE. He is my SSE. Balance you pay to him. That whatever tax you deducted, right, you withheld, right, that's called withholding of tax. What is it actually called as? Withholding of tax or deduction of tax. You remit to me. How do you remit to me? You remit me on a monthly basis. Now, the tax which you are deducting, no, while paying the amount which you are paying, it may be salary, it may be commission, it may be rental expenditure, or it may be sale consideration on purchase of immovable property, or whatever it is. For what purpose you are paying, I don't know. You withdraw tax and then give me the money. So when you are remitting money to me, when the deductor, the person who is paying, is called as payer, since he is deducting the tax while making payment, we call him as deductor. The deductor has to remit to the department tax on a monthly basis. He has to remit the tax to the department on a monthly. The tax he deducted, right? It's whose tax? Payee tax liability or payer tax liability? Payee's tax liability. In Tamil, payee means dayam. No? Yeah. So it's actually, payee means devil. Yes, I said Telugu word. Ghost. Payer. Yeah, fine. That's okay. So the payer deduct the tax and balance amount he will have to the payer. Now the tax whatever he deducted, no, he might have deducted this tax related to salary, related to commission, related to rent, related to professional fee, related to purchase of immovable property, related to anything. You pay me section wise challan. Don't pay me all put together this much you deducted. No, you pay me section wise challan. For 192 section, for salaries how much tax you collected, sorry, how much you deducted. For salary, who will deduct TDS? Who will pay salary? Employers will pay to employee. So you deduct salary to TDS. You pay me 192 section. You prepare a challan where you have to select 192 section and pay me. 194A, you are paying interest. A bank is paying interest to so many of their depositors. Bank has deducted so much of interest. Bank will pay me under 194A, TDS deducted by them on interest. Suppose there is a bank called State Bank of India. It is paying salaries to their employees. It is paying rent to their offices. It is paying interest to their depositors. It is giving so much of cash withdrawal to their depositors. So many. State Bank of India is deducting tax from their employees. State Bank of India is deducting tax from their customers, deposit holders. State Bank of India is deducting tax while paying rent. State Bank of India is deducting tax while paying cash withdrawals. So many. Dear State Bank of India, you pay me whatever you deduct, no, month wise, each section wise, total amount deducted, pay me in a challan. Now you paid me. Okay. You paid me almost 100 crore rupee. Saying for April month, first month of the financial year, 10 crore worth of amount. Let's assume 10 crore. 10 crore worth of amount you paid me under 192. May month also you deducted 10 crore from all this 1 lakh employees of State Bank of India. Again, June month also for all these 1 lakh employees, 10 crore rupee deducted. Total for these 3 months together, how many challans for salary State Bank of India paid to the department? 3 challans. How many? 3 challans. April month salary related TDS challan, May month and June month. Now, department do they know this 10 total 30 crore belong to which employees? How do I know? So, dear State Bank, you file me a return. You file with me a return. We call that as statement, TDS statement or electronic TDS statement, ETDS return. What you will show in that? Sir, April month 10 crore under 192 section challan I paid. No, this 10 crore is belong to these 1 lakh employees. Look, these are the PAN numbers. For each PAN number, this much amount. This 10 crore, challan number 1. It belongs to 1 lakh employees. This 10 crore is this 10 crore is deducted from how many? Not one employee. 1 lakh employees. 1 lakh employees PAN number, I will mention in the TDS return. Each PAN number, how much I deducted, I will have a record when I paid salary. So that much I will show this breakup to the department. Now what department will do? Tomorrow this employee, he will file income tax return. At the time he will show income, right? Tell me, will the employee show income gross or net? Yes or no? Income. Suppose if somebody asks me, what is my income? I should tell my full salary, not after TDS. I will tell full salary. When I'm calculating tax also, I will have to calculate on the total income. Then in this tax amount, already my employer, my boss, deducted some amount from me while he's paying me salary and remitted on my name to State Bank of India. Sorry, income tax department. He gave me proof of the remittance also. Can I set off this and pay only balance tax to the department? Yes. I can set off the TDS amount and pay only balance tax to the department. Now when I am setting off, department should allow me, right? When department will allow me? Only if my employer pays it. What is the procedure for employee? Every month he has to pay. Yes or no? Nothing but here employer means deductor. Employer means payer. Correct? So TDS mechanism works like this. TDS mechanism works like this. Even TCS also the same. TCS also the same. For TDS, the return is different. For TCS, return is different. We have three types of returns. One, TDS return for salaried employees, TDS return for other than salaried people, and TCS separate return. Three returns they will file. Now, what is the periodicity of filing these returns? Quarterly basis. What is the periodicity of filing? Quarterly basis. Okay, but you will be deducting TDS every month, right? Not in fact every month, whenever I am making payment. Whenever I am making payment, whenever the payer is making payment, he will deduct the TDS as and when he makes. But whenever you deduct immediately, don't remit, no problem. Give me on a monthly basis. Department, you will remit TDS on monthly basis, section wise. Quarterly basis, you should show me breakup of each challan. Each section wise, you paid me this much amount. This amount collected from whom? Deducted from, you should tell the department also, no. For that, you have to file which return? ETDS return. So, monthly remittance to the department, quarterly filing of TDS statement with the department. Let's first look at that. So, entire TDS overview is given. So, here, TDS, whatever you deducted, whether you are deducting under these sections or whether you are deducting under these sections. Actually, 193, 194A, 194C, 194D up to Q, these sections, no, whatever is covered here, I will come back at last and then once again revise this. Stable. Here, no, we generally deduct TDS at the time of credit in books of accounts. Date of credit means what? Credit in books of accounts means I recognize the expenditure in books of accounts. Or payment, whichever is earlier. You paid first, then later recorded, then payment time you deduct. You did not pay yet. You are recording in book. At that time itself, show TDS adjustment. At that time, record liability to only net amount to the employee or to the tenant, sorry, to the landlord. So you only show net amount liability to them. Gross amount of expenditure your book, net amount liability show, balance amount you show to what department liability. That is called as deemed deduction. Getting the point? He will pay later. When he is paying, I am not bothered. The moment he write journal entry in books of accounts, at that time itself, TDS, I assume you have deducted. Suppose you paid much before that, then that time itself you have to deduct, whichever is earlier. For some sections like salary, premature withdrawal of provident fund, interest, sorry, 194 is dividend. 194 is dividend. And 194B, 194BB are winnings. Both are dealing with winnings. 194DA, maturity of life insurance policy. 194LA, compulsory acquisition of agriculture. 194N, 194P, pension income for a specified senior citizen. And 194R, perquisite, which is received by business people or professionals. In all these amounts, if at all you are paying to them, you should only deduct at the time of actual payment. When you record in books of accounts also, I am not bothered. Only when you are paying, deduct and then remit. If you are paying on 5th May, salary, deduct on 5th May. Since 5th May comes in May month, you should pay the TDS amount by due date which falls in the June month. What is the due date? So here no deduction. Here deduction will be either date of credit or date of payment, whichever is earlier. Yes or no? Now, here date of payment, whatever it is, you are a deductor. Not a government deductor. Suppose if it is deducted by government, the rule is different. You are a other deductor, means non-government deductor. That is what we see in day-to-day time, day-to-day life, right? Yes or no? For government deductors, no, CS and all will not work. For government, they have separate departments, audit departments and all. They have C&AG and all, accounts department. There is a department called Indian Accounts and Audit. Okay, that will take care of government officers related things. But for other deductors, what is the due date? Generally, the due date is what? Any month. Whenever you are, if the deduction is in a particular month, that is April to February, 7th of next month is the due date. 7th of next month. By the way, what do you mean by date of deduction? For some sections, it is date of credit or date of payment, whichever is earlier. For some sections, date of payment is only the date of deduction. Date of deduction is equal to date of payment. Whereas for some sections, date of deduction is equal to credit date in books of accounts or payment date, whichever is earlier. That is date of deduction. Date of deduction, you see, April 4th. By May 7th, you should remit. Suppose date of deduction, September 9th. By October 7th, you should remit to the department. While you're remitting, will you remit all the deducted amounts total and then in single challan? No. I will put separate challan. Separate section wise, I will put a separate amount challan. Again, for each section, I have so many deductees. I have so many payees. Yes or no? That breakup, when I will show to the department, quarterly basis, I will show. Getting the point? Now, so 7th. For February month, I deducted. February 24th, I deducted. March 7th. March 2nd, I deducted. April 30. Only for the March month, if the TDS is deducted in the month of March. By the way, who is deducting here? Non-government deductor. Other deductors, we call them as. If TDS is deducted in the month of March, for that alone, we have given time limit up to 30 April. Why? Books of accounts are closed on March 31st. So many outstanding entries, all that they need to collect. They need to determine what are all expenses they need to record. So it will take some time. Books closing process is time taking. That's why due date is also additionally given. Are you clear? Now you are remitting challan. April month, June month, July month put together Q1. Remaining Q2, Q3, Q4. For each quarter, for each section wise you remitted challan, right? For each challan, how many people are affected? You should give the details, right? For that, you need to file what return? ETDS return, electronic TDS return. It's called TDS statement has to be filed. By what time you have to file? If it is Q1, exactly 1 month time. Exactly 1 month. Quarter ending date to 1 month. Quarter 1 ends at 30th June. That June month related TDS amount you will pay by July 7th. But information of April, May, June put together department you have to give by. For Q2 31st October. For Q3 ends on 31st December. So naturally 1 month extra 31st Jan. But for Q4, how can 30 April? Our payment itself 30th April. So I must give 1 month extra from the payment rate. 31st May. For Q4 alone, the due date for filing TDS return is 2 months. For remaining 3 quarters, from the end of the quarter, 1 month is the due date. Correct? Okay, fine. Suppose, yes sir, I deducted and I remitted on a monthly basis. Quarterly, I even filed information with the department from whom and all I deducted all that I gave. Now, the persons from whom I deducted, no, I should give them the proof, right? That I remitted to department. Look, I didn't eat your money. I paid to the department. I need to give them the proof, right? When I will give this proof on a quarterly basis, I will give. Form 16 I will give for salary deductions. Pension is also salary, remember. Pension is also salary income. For salaried payments, Form 16 I will give. For other than salary related payments where I deducted tax, Form 16A I will give. Salary related by 15th June of the financial year. If I give by 15th June of the financial year, that's enough. Whereas for remaining, once ETDS return due date comes, from there 15 days. From there 15 days. I should be, because employees, they will only be with me, they'll listen. Others, why will they listen? Will you think they will wait up to next year for showing them the proof of payment? No, they want immediately. Look, you deducted from me in April, May month. ETDS return you filed by, you should file by 31st July. I assuming you filed on 31st July. Where is the proof that you filed with the department? I am giving you 15 days time. Give me the proof. So for other deductors, we will give them Form 16A. Even if you don't give in reality 16A also, once I file ETDS return, in their 26AS form, it will be reflected. What is Form 26AS? You will understand once you go into articleship. Clear? That's it. Now, there are some sections. Now, like as an employer, as a businessman, I am making payments to employees, my deposit holders. As a bank, I'm paying to my deposit holders. I'm paying rent to the landlord. So many people I'm paying, I'm deducting tax. When I'm deducting tax, I will not deduct it using my PAN number. I will use my TAN number. There is a number called TAN number. Tax Deduction and Collection Account Number 203 section 203A. There is a section called 203A, which says in order to deduct tax and remit to the department, you can't remit in your PAN number. It is belonging to various thousands of people PAN. So you should remit with some other name. Your identity will be reflected with some other name. TAN number. You're getting a TAN number. But there are 3 sections where TAN number is not required. Like deductor, payer, he is deducting tax. But for 3 sections related TDS amount, I will directly pay to the department by mentioning in the challan my PAN number, deduct the PAN number directly. Normally, salaries, no. When I'm paying challan, no. Only my TAN number and PAN number will be mentioned. From whom this amount is deducted, their PAN numbers, how will I mention 1 lakh PAN numbers? Salaried employee, yes or no? I cannot mention that. So I will pay first, once in 3 months, I will compile the entire data and file your return. But there are some transactions, purchasing immovable property. Suppose I purchase from you immovable property, more than 50 lakhs, stamp duty value or consideration. 1% I deducted TDS from you at 194 IA. I should immediately inform to the department that I collected from you. Like, did I purchase from 1 lakh employees, 1 lakh people, immovable properties? No. These are all once in a while only transaction happen. So here, no. I have to deduct TDS, right? The TDS have to remit to the department by mentioning my PAN number, by mentioning deductee PAN number, means seller PAN number. And I will file a challan. For that, we use the form, we name the form as what? For that, we name the form 16B. 194 IA. What is the form? 16B. 194 IB is just 1 alphabet extra, 16C. 194 M, just 1 alphabet extra, 16D. Getting, these are the forms which we will give. What is the time limit for TDS deducted under these 3 sections? Generally, if any TDS is deducted for a particular month under any section, by next month 7th I should pay. But for them, 30 days from the end of the month of deduction for these 3. Because no, you need not file TDS return also. For these 3, no TDS return. First of all, you don't have TAN number. In these 3 cases, generally SSS will not have what? TAN numbers. So you just have to pay the amount to the department by 30th of the next month. In the month in which you deducted, that month you ignore. That next month by within 30 days. 30 days from the end of the month of deduction. And you need to furnish a challan. You need to furnish challan. For that, some format is given. This challan number is not required. This due date is important. This due date is important. And this due date. This is what challan remittance due date. And you know, for some sections like salary, interest on deposits, 194D, insurance dividend, 194D dividend, 194 it's commission other than insurance commission. For these 4 sections, department can give, in special cases, AO may give quarterly payment option for these 4 sections only. Are you getting it? For these 4 sections, quarterly payment. Generally, any section, what is the payment? Monthly. By what time? Next month 7th. March month, by next month 30th. Correct? But for 3 sections alone, 194 IA, 194 IB, 194 M. I will discuss in the respective section what exactly they are dealing with. You should pay within 30 days from the end of the month of the deduction. Correct? This is how the main scheme of the TDS. So deduction. What is the consequence of deduction on the deductee? What we need to do after deduction? What are the duties of the deductor after deducting TDS? You need to remit and you need to file the TDS statement. That's it. Now let's directly begin with the first one, TDS section 192. TDS on salaries. TDS on salaries. So at what rate TDS on salary will be applicable? What is the rate at which TDS on salary will be applicable? They say average rate. We don't even in reality compute average rate. What we do, I know very well how much salary throughout there I am paying to my employee. I already know what are the components of salary I am paying to my employee. I know very well what deductions he will get, what deductions he will not get. I know. Only one thing I need to ask. In case of normal tax regime, if my employee chooses normal tax regime, I need to just ask him proof of chapter 6A deductions, proof of interest on housing loan deductions. I will just take those proofs and consider and calculate his total income, calculate tax, whatever rate applicable to individual. calculate tax, and I will, that amount of tax, I will collect it on a monthly basis, average. I just average to 12 months. We'll just, what we do, we just average it to 12 months. In reality, I don't know how much, I will not wait up to 31st March. I know my employee how much package is getting. Because I'm the company, I know his employment contract. Based on the package details, I will compute what are all the deductions, what are all the tax components, all that, salary components, all that. I will ask him, are you going for default tax regime or are you going for optional tax regime? If at all he replied, I will choose that option. Suppose employee did not reply properly, I will apply default tax regime. Default means what? By default, that only. By default, that tax regime only applicable. If employee specifically says, no, sir, I don't want default tax regime, optional normal tax regime, then I will ask him, give me proof of deductions. Or in the month beginning, first April month, March, up to March, he has time to invest in chapter 60, all that. So I don't know whether he will invest or not. I will take a declaration that employee said, sir, don't worry, sir, by March month, I will give you ATC 1.5 lakh. By March month, I will give you 80D 50,000 1 lakh rupee limit. You don't worry. These are all deductions. Please consider. This is my total gross total income. You know very well. You are the one who is paying me salary. So consider and calculate. This is my tax liability. Don't deduct in 1 month, sir. Deduct in 12 months equally. That is why it's called averaging concept. That is why it's called average rate of tax concept. Are you clear? So very simple. It's very simple. Employee 192, the tax will be deducted at what rate? Average rate. Nothing but whatever total tax liability of the employee will be split into 12 months. As and when we get new information about employee, we update the tax liability, and whatever already deducted, balance will come yet to be deducted in the next month, we will deduct it. That's it. So this is how TDS on employees will work. Now for TDS on employee, when you need to deduct the TDS? At the time of payment only. No need to deduct at the time when you are recognizing as an expenditure in books of accounts. Correct? That is what entire this points. Now illustration. Mr. A, the employer, pays a gross salary including allowances and monetary perquisites amounting to 7,30,000 to his manager. Besides, employer provides non-monetary perquisite to him whose value is 1,20,000. The general manager is exercising the option to shift out of default tax regime. Option to shift out means what? Normal tax regime is going and pay tax under this. What is the tax implication in the hands of A? The employer and manager. Generally, employer provides non-monetary perquisite, right? Whenever companies are providing non-monetary perquisite, on that tax responsibility also they only take care. Whenever employer is providing non-monetary perquisite, tax responsibility will be taken care by employer. Now you see, gross salary including allowances, how much? 7,30,000. Yes or no? 7,30,000. Minus standard deduction 50,000. What is the net salary? Now what is the benefit of non-monetary perquisite is getting? Let's add it as it's a benefit to him, right? It's an income for him technically. What is the total income? Normal tax regime, age is not given. We assume normal citizen. How much is the tax liability? Up to 5 lakhs 12,500. 3 lakh into 20%, 60,000. Total 72,500 plus 4% says how much it is? 72,500. 4%, 75,400. Correct? But this is his total tax liability. On non-monetary perquisite, how much is the tax? On non-monetary, how much is the tax? Very simple, averaging. Yes or no? 75,400 is the tax amount for 8 lakhs income. How much is for 1.2 lakh? Very simple. 75,400 divided by 8 into 1.2 is equal to 11,310. What company will do in this case? Don't worry, this 11,310 I will pay out of my pocket. And remember, under PGBP 40A specifically says, 40A3 or 40A4 subsection, which specifically says employer, if at all paying tax related to non-monetary perquisite of the employee, no deduction, because that's his tax liability you are paying. You can't claim it as business expenditure. Yes or no? So 11,300 I paid. Now employee balance amount is what? 75,400 minus 11,310. How much is that? 75,400 minus 11,310. 64,090. This amount I will deduct from employee in equal installments over 12 months. Average. Understood? Look at this. Yes or no? This average. What is the average rate here? Nothing but, by the way, What? Total tax divided by total income. That much is average rate. This is the average rate of tax. So 11,310, how much this month? This amount will be paid by employer. This will be exempted in the hands of the employee. 1010C. Yes or no? That's a 1010cc. And whereas balance amount will be deducted from salary of the employee. Further, 11,310 employer is bearing out of his pocket, right? Can he claim it as a business deduction because it is exclusively and wholly incurred for the purpose of business? No. 40A, it specifically disallows this. Clear? That is what they are asking. Next, can I proceed to the next? Everything else is clear. Now here one more thing. Suppose SSE said, sir, I want to go with normal tax regime, not default tax regime. These are all my deductions, he said, amounts and all. You need to ask proof. For house rent allowance, you need to ask name, address, PAN of the landlord. Where aggregate rent paid is exceeding 1 lakh. Ask rental agreement. Take PAN number of the owner. Leave travel assistant. We will ask expenditure of travel tickets, all that. Deductions under house property. We will ask name, address, PAN of the lender. Nothing but we will ask bank statement, loan statements. Deductions. We will ask proof of investments. All this is necessary if the SSE is choosing normal tax regime. If the SSE is choosing optional, no, these are all will not be there. No, happy or no. That's it. 193. Next section. 192 over. So the tax is deducted by employer at the time of payment of salary to employee at average rate of tax. How to arrive average rate of tax? First find out total income. Ignoring exemption given under 1010cc. Non-monetary perquisite given by employer, no. That actually taxed in the hands of employee first. Technically it is exempted. Getting the point? So first tax it. Identify the tax amount. Divided by total income average. Apply that average on the non-monetary perquisite value. You will get tax amount on the non-monetary perquisite which employer will bear. Remaining amount will be deducted from employee. Getting it? Next, interest on securities. So interest on securities means what? Debentures, shares, debentures, bonds and all. So every person has to deduct interest on, deduct a TDS on interest on securities. Yes or no? So time of deduction is what? At the time of credit or at the time of payment, whichever is earlier. Time of credit, the section introduction itself. Time of payment, time of credit, whichever is earlier. Yes or no? When you should deduct the tax? At what rate you should deduct the tax? Here they have given 10%. When you should deduct the tax? In case if the dividend is paid by a public company. Sorry, TDS on interest on securities is applicable. TDS on interest on securities is applicable for all SSEs. Flat 10% applicable. But they have given certain exemptions. When TDS on interest on securities is not applicable, if at all you are paying interest on national development bond, if you are paying interest on NSCs, if you are paying interest on debentures issued by these institutions, land mortgage bank, cooperative land bank, primary cooperative society like this, yes or no? If you are paying interest on government or state government securities, if at all interest is paid by public companies, that to whom? Individual or HUF. If the interest on security is paid by a public company, it may be listed or unlisted. Interest should be paid by account payee check, and the interest amount shall not exceed 5,000. 5,000 threshold limit under 193 is there only if the interest is paid by the public company on what? Debentures only. On only debentures. If a public company is paying interest on debentures to individual and HUF, 5,000 threshold limit apply. Up to 5,000 no TDS. The moment it crosses 5,000 on entire amount 10% flat. TDS limits are mostly threshold limits. Mostly they are all threshold limits. Only 194 yen cash withdrawal is a slab limit. Up to 20 lakhs, no TDS. Beyond 20 lakh to 1 crore, 2%. Beyond 1 crore, 5%. That we'll discuss later. You clear? And if at all interest is paid on securities to LIC, all that, no deduction. No TDS to be deducted. So which means any payer, any person who is paying interest on securities. Securities is what this fellow borrowed by issuing securities. TDS is applicable. When it is exempted? If the interest is paid on securities given to LIC, securities are allotted to whom? LIC, GIC. If the interest is paid to government, if the interest is paid to any corporate society, public sector or institution, if the interest is paid on NSC certificates, if the interest is paid on national development, if the interest is paid by public companies or to individual or HUF, where the interest amount shall not exceed 5,000. By the way, this is at one time or throughout the year? Throughout the year. TDS limits mostly or throughout the year. Are you clear? 193 is over. Then 194A. In 194A, cooperative society point is what mostly confusing to many students. Do you remember that? First of all, 194A. What is 194A? 194A is also you are paying interest only. You are paying what expenditure? Interest only. Other than interest on securities. Like I borrowed loan from my friend. I am paying interest. 194A TDS will apply. Bank borrowed loan from depositors. That's called deposits, time deposits, fixed deposit, recurring deposits. They are paying interest. That is liable for TDS. Now tell me, 194A, at what time TDS has to be deducted? The deduction must be at the time of credit or at the time of payment, whichever is earlier. Time of credit or time of payment, whichever is earlier. Yes or no? Now, at what rate? Straight away, 10%. Straight away, 10%. However, TDS will not apply if the total amount of interest paid during the year does not exceed 5,000 rupees. However, if at all interest amount is paid by bank, cooperative bank, post office, and the interest is credited is paid under notified scheme of post office. If the interest is paid by a banking company, interest is paid by a cooperative bank, interest is paid by some post office, then the threshold limit is 40,000 rupees. Then the threshold limit is what? 40,000 rupees. Further, if the recipient is an individual and also a senior citizen, then the threshold limit is 50,000 rupees. Yes or no? Normally, if I pay interest, I am not a bank. Threshold limit is 5,000. The moment it crosses 5,000, 10% flat deduction applicable. The moment it crosses 40,000 in case of a bank payer, 10% flat on the entire amount of interest. The moment it crosses 50,000 in case of senior citizen, flat 10%. Now, bank is paying interest, right? Yes or no? How this interest is to be calculated by a bank? Branch wise or total banking company wise? In case if the bank has adopted core banking solution software. In case bank has adopted core banking solution software, whether State Bank of India, Nungambakam Chennai branch paid, Mylapore Chennai branch paid, or Saidapet Chennai branch paid, or Annanagar Chennai branch paid, it doesn't matter. To the customer from State Bank of India through 10 branches, 20 branches, 30 branches, doesn't matter. The customer has 1 lakh deposit with every bank, where every branch will pay less than 40,000 interest yearly. So customer cleverly did. But we have a central banking software, core banking. We know how much as a total bank wise we are paying you. If it cross 40,000, on entire 40,000 TDS will be applicable. Are you clear? If at all bank does not have core banking solution, which is rare, now it is not there, then each branch wise the limit will be applied. Understood or not? So this is the first exemption under 194A. First exemption under 194A is what? Generally on interest, whatever interest you are paying, flat 10%. However, if the interest amount is not exceeding 5,000, no TDS. If the bank is paying interest at the time, threshold limit is 40,000. Senior citizen threshold limit is 50,000. Not only that, if at all the interest is paid by a firm to partner, if a partnership firm is paying interest to do their partner, for the firm up to 12% they can claim deduction. In the hands of partner, up to 12% is taxable under PGBP income. Yes or no? 40B assessment of firms, it clearly says that. So interest paid or credited by firm to its partner, no need to deduct TDS. Same way, interest paid or in this, this is important point. A is important point, exemptions. Then E and F. This is where mostly people confuse. Many students confuse at E and F point. Now, suppose interest is paid by what? Cooperative society. Interest is paid by cooperative society. Which cooperative society? Other than cooperative bank. Which society? Other than cooperative bank. By the way, interest is paid by society other than cooperative bank. Suppose if it is a cooperative bank, 40,000 threshold. Senior citizen, 50,000 threshold. Yes or no? This threshold is applicable only if the SS is individual and HUF. Normally it is not applicable. Threshold limit is not applicable. Yes or no? I hope you have seen it. Yes or no? Where the payer is so and so. Further, if the if the SS is a senior citizen, then how much it is? 50,000. 50,000. Now you see, if interest is paid by cooperative society other than cooperative bank. If it is cooperative bank, straight away 40,000 threshold. Straight away 50,000 threshold in case of senior citizen. Payment to senior citizen. No, this is normally a society, not a bank. It's not a cooperative bank. It's a cooperative society. Just a cooperative society registered under Cooperative Societies Act. Or it's a multi-state cooperative society registered under Multi-State Cooperative Societies Act. We are paying interest to my member who has deposited with me some money. Should I deduct TDS? No. I am paying interest on deposit by another society. I am a society. In my society, another cooperative society is keeping some money and I am paying interest to them. No need. So see, that's why I clearly wrote interest paid by society to members or to another society. No TDS applicable. This provision is not applicable for whom? Other than cooperative banks. Second, another exemption for society. Suppose interest is paid by primary agriculture credit societies, primary credit societies, cooperative society land mortgage bank, cooperative land development bank. If the interest is paid, they will tell you, you see, interest income credited or paid in respect of deposits with means deposit is with whom? This one. Means interest is paid by whom? These people. Yes or no? If the interest is paid by primary agriculture credit society, if the interest is paid by primary credit society, if the interest is paid by cooperative land mortgage bank, if the interest is paid by cooperative land development bank, these are all cooperative banks. They are straight away exempted. Normal cooperative bank which does not come in here. Normal cooperative bank which does not come here. 40,000 threshold limit, 50,000 in case of senior citizen. If a cooperative bank is coming under PACS, primary agriculture cooperative society, or primary credit society, cooperative land mortgage bank, cooperative land development bank, then TDS is 0. Are you clear? They have given exemption to cooperative society, right? They have given exemption to primary agriculture credit society, primary credit society, land development bank, land mortgage bank. Yes or no? They have given benefits, right, to societies. This benefit is not available. This benefit is not available if preceding financial year turnover of these societies is exceeding 50 crore. If preceding financial year turnover is exceeding 50 crore and one more condition, interest paid is likely to exceed 40,000 or 50,000 in case of senior citizen, which means if I am a cooperative society paying interest to my member, TDS is 0. But if my society turnover in the last year is more than 50 crore, this exemption will not apply. As usual provision, 40,000, 50,000 limit, I need to check and then deduct. Suppose my turnover in the last year is less than 50 crore. 194A itself will not apply, which means I pay 10 lakhs interest, no TDS. You clear? If at all a normal cooperative society, primary agriculture credit society, primary credit society, land mortgage bank, land development bank, I'm telling you TDS, if at all you're clear with this session itself, I'll promise you, you will get full marks in TDS, pakka 5 marks. Getting it? Keenfully listen. If society is paying interest to member, if primary agriculture credit society is paying interest, primary credit society paying interest, land mortgage bank paying interest, cooperative land mortgage bank, cooperative land development bank paying interest, these are all cooperative societies, interest will, TDS will not apply. Or society paying interest to another society, TDS will not apply. TDS, interest paid by cooperative society to another cooperative society, interest will not apply. This exemption is not applicable for cooperative bank. By the way, remember, cooperative banks no exemption. 40,000, 50,000 limit as usual. Normal cooperative societies are there, right? If they are paying interest to members or they are paying interest to another society, no TDS. However, this exemption will be withdrawn when big societies. If the society is very big, no exemption. When it is called as a big cooperative society, if previous year turnover is exceeding 50 crore, no exemption. If no exemption means what limit you should apply? 40,000, 50,000, if at all payment cross, you should deduct 10% TDS. Over, that's it. Understood? This is cooperative society provision. Again, after uploaded in the YouTube, you once again watch. If at all you have a confusion, very crystal clearly I told. Now in this no, the second point is what for many students it confuses. This point is not valid. Deposits other than time deposits on or after 1995. Exemption is given for deposits made before 1995. Irrelevant now, right? Yes or no? That's why that point is not valid now. Getting it? Because students will study this point, they will not understand this entire logic. You should read entire individually this point, and the exemption withdrawn point. Then finally you should see when exemption is withdrawn, what is the consequence. First they gave TDS 10% applicable. Then they said exemption is available. When exemption will be withdrawn, they said. If exemption is withdrawn, what is the consequence, they said. That's how the entire section is drafted. Clear? And of course, interest is credited or paid by central government. If central government is paying interest, no TDS is applicable. If interest is paid or credited to bank, I borrowed housing loan from SBI. I am paying interest every year. Should I do TDS? Huh? No. Financial corporations, life insurance corporation, companies and corporate societies carrying on insurance business. Unit Trust of India, notified institutions and bodies. For these and all, if I pay interest, no problem. Further, interest paid. Yeah, that's it. That's enough actually. In 193, one point I have to cover actually. In 193, interest on securities, right? Interest on securities. TDS will not apply on interest on securities paid by some institution or authority or public company, whatever it is, as notified by government. Government notified two corporations. What are they? Power Finance Corporation Limited, Indian Railway Finance Corporation Limited. Both of them are notified under 54 EC also. Power Finance Corporation, Indian Railway. If they are paying any interest, no. On securities they are issuing, long-term finance securities, TDS will not apply. That one exemption you have to remember. This Power Finance Corporation, this one, there is a possibility that they will ask. In MTP last time, May 24, they asked this. Getting it? Next. So 194A, that's it. 194A, are you clear? So what is 194A is saying? Interest paid on any interest paid other than interest on securities is liable for TDS at 10%. Exemption if it is not exceeding 5,000. Another exemption for banks, 40,000, 50,000 in case of senior citizen. For corporate society, if they are paying to member, no TDS. If they are paying to another society, no TDS. If the society is a primary agriculture credit society, primary credit society, cooperative land development bank, cooperative land mortgage bank, no TDS. However, this exemption will be withdrawn if this is a big society. Means previous year turnover is more than 50 crore and now interest limit 40,000, 50,000 limit as usual applicable. Understood? That's it. So for corporate society, interest limit is 40,000 and 50,000. That too, this limit is applicable when previous year turnover is more than 50 crore. Otherwise, society paying interest to members, society paying to another society, no TDS applicable. Correct? Next, income credited or paid by, actually in society much more interpretation is there, but that's not required now in revision class. Income credited or income credited by motor accident claim tribunal, interest credited by motor. Some motor accident claim tribunal ordered on insurance company pay interest. Insurance company credited in books of accounts, but they didn't pay. No need to deduct TDS. Generally, credit or paid, whichever is earlier, right? But in case of interest amount that you are paying to the insured guy because of MACT tribunal order, you just credited, you have not yet paid, no need to deduct. But if you're paying him, you should deduct if the amount is exceeding 50. Up to 50,000 rupees, no need to deduct TDS. If insurance company is paying interest to the insured because of a tribunal order, that is which tribunal? Motor accident claim tribunal. If the interest amount does not exceed 50,000, no TDS. If it cross 50,000, flat 10%. Clear? Remaining is not that required. Now, tell me, in this section, TDS is applicable only on what? Time deposits. Time deposits means what? Fixed deposit or recurring deposit. Time deposits mean deposits kept for a certain specific period. So we call them as what? Time deposits. Now, senior citizen means what? Obviously resident in India. Getting it? Now, what are the TDS implications? 1st October, Harish made 6 months fixed deposit, 10 lakhs at 9%. This is maturing on 31st March. 6 months rate, 10 lakhs into rate of interest 9% into 6 by 12. Since the amount is exceeding 40,000, cooperative bank. 40,000, since amount is exceeding, straight away. 10%. What is it? 4,500. Next, on 1st June, Mr. Ganesh made 9 months deposits of 3 lakhs each, carrying 9% with Dwarka branch, Janakpuri branch, and Rohini branch of XYZ. Same bank, but multiple branches, and bank has CBS. In such a case, all the branch put together, total interest paid, how much you should see? Yes or no? How much is the deposit? 3 lakhs into 3 branches. Into what is the rate of interest? 9% into 9 divided by 12. How much? 60,750. Since it crossed 40,000 rupees, straight away flat 10%. How much? 6,075. Clear? Easy or not? Where is the amount here? They 6,075. Where they mentioned? Second line. They didn't mention that amount, I think. They has to be deducted 10%. Correct. Okay. Then recurring, on 1st October, Mr. Rajesh started 6 months recurring deposit of 2 lakhs per month, 8% per annum with Peak Year Bank. The recurring deposit matures on 31st March. When every month amount of deposit is equal, I can apply arithmetic mean. Opening balance plus closing balance by 2. Yes or no? Opening balance 1st October 2 lakhs. Every month 2 lakhs is paying. By March 31st it is 12 lakhs balance. Yes or no? Opening is 2, closing is 12. So opening plus closing 12 divided by 2, 7 lakhs is the average outstanding. Yes or no? 7 lakhs multiplied by 8% per annum. But remember, yes or no? 8% per annum. But remember, it is only for 6 months. 28,000 you will get. 28. Since it is now, by the way, how much it is? 28,000. Since it is less than 40,000, no TDS. That's it. 194A is over. Clear? Next, 194C, payment to contractors. Payment to contractors. I will come back to 194C at last, not now, because 194C according to me is a residuary section. According to me, 194C is like a residuary section. Next, 194H. We have in between 192A, 192D, 194D, 194DA, 194 I, all that were there. We'll discuss that later. So now let's go with this order. 194H. What is 194H? Commission or brokerage. Which commission or brokerage? Other than insurance commission. Insurance commission is there in under 194D. No, DA. 194 DA. Insurance commission is discussed under 194 DA. Not that, I think. G. 194 G. DA is regarding (194B) lotteries, 194BB horse races and all. Yes or no? 194BA online games, 194G insurance commission. Okay. Commission on lottery tickets. Yes. Commission on lottery tickets. Then insurance commission. B, Delhi. 1 minute. Delhi, D only, na? Correct only. Fine. 194 D. 194 is dividend. 194 is dividend. Immediate section is 194D, which is actually dealing with the insurance commission. 194DA is dealing with life insurance maturity amount. 194 B, BB, BA. B, BA, BB. They are all dealing with lotteries. Yes. Perfect. Yes. 5%. Analysis lab. So 194D insurance commission. So there also insurance commission rate of TDS is 5% only. There also, but that we'll discuss in a tabular format at below. Okay, now 194H is what? Commission or brokerage. You know, there are 6 sections. There are 6 sections. I will tell you: 194A, 194C, 194H, 194I, 194J, 194R. These 6 sections, they do not apply to individual or HUF. If the deductor, suppose if the payer, suppose I am the person paying, I am an individual or HUF, I am engaged in business only, but my turnover is less than 1 crore, not exceeding 1 crore, or my gross receipts are less than or equal to 50 lakhs. For them, these sections will not apply. What is it? Hijack. HIJ. But actually no, R is also there. Once upon a time hijack code is applicable. Reject R. That's okay. That's okay. Okay. 6 sections. TDS is not applicable for an individual payer, for a HUF payer whose business turnover does not exceed 1 crore, gross receipt does not exceed 50. For all of them, 194M provision is there. For all these cases, what provision is there? 194M. Technically, not all this. Technically, 194A, 194C, 194J. For all of this, this is there. For rent substitute, 194IB is there. Parallel provision is what? 194IB is there. This provision is specifically applicable for individual or HUF who come under this. Correct? And even 194M is specifically applicable for these people. Correct? Fine. So in all these 6 sections, TDS provision will not apply for individual or HUF whose business turnover is less than 1 crore, whose professional receipts are less than 50 lakhs. Now, like, so what is the rate of TDS? 5%. Time of deduction, time of credit or payment, whichever is earlier. Threshold limit is what? 15,000 per annum. This is yearly limit. And what is commission or brokerage? Whatever the meaning they have given, I don't think it's that discussion is required. So then, yeah, in this one case study is there. What about TDS applicability? Let us look at this question. Moon TV, what is it? Moon TV, a television channel, made a payment of 50 lakh rupee to a production house for production of program for telecasting as per specification given by the channel. The copyright of the program is also transferred to Moon TV. Would such payment be liable for tax? See, simple. If I am paying only for telecasting, advertising the money, getting the point, so that amount will come under 194C. You have seen this? You have seen this provision and all? This entire provision like 194 applicability of, so is the amount is paid to advertising agency, or are you paying for advertising agency relating to some television channel or news company? There are 2 types of payment. That applicability of TDS, suppose they are designing the ad and are also telecasting it. Generally that comes under contracts. 194C is applicable. That is what the clarification they give. The clarification given is, if at all they are designing the ad and are also telecasting. Even broadcasting, telecasting also comes under what? 194C only. Getting it? So that's not a big deal. Now not that interpretation is required. 194I, rent. Like when TDS is applicable on rent, yearly limit is what? 2.4 lakh. What is the yearly limit? 2,40,000 rupees. What is the rate of TDS? See, I am paying rent, 1 for movable items, 2 for immovable items. For immovable property, rate of TDS is 10%. For movable property, rate of TDS is 2%. Whether it is movable property renta, immovable property renta, it is irrelevant. To that fellow, yearly how much you are paying? 2,40,000 crossed, TDS is applicable. The moment it crossed 2,40,000, whether you paid for movable portion or immovable portion doesn't matter, TDS is applicable. Now at what rate you should deduct? On movable property rental income, 2%. On immovable property rental portion, 10%. That's it. Whether 2,40,000 for movable or immovable, that discussion will not come. When we are checking 2,40,000 threshold limit, how much rent you paid to that single owner, you tell me. 2,40,000 crossed. Yes, crossed. Now deduct TDS. At what rate? Movable property rent how much? 2%. Immovable property rent how much? 10%. That's it. So I'm not repeating anything here. Okay. Now here there is a charges paid to cold storages. Charges paid to cold storages is not like a immovable property rent. You are mainly that's a composite service which involves not only storage, rent, premises, but also involves cooling function, all that. It's a works contract. Getting it? 194C will apply. Then this is airline passenger service fee. They said very simple, 194I will not attract airline passenger fee. Getting it? This is some amount per each traveler the airport authority will collect. Getting it? That's not required, no issue. That's not required. That's not a big adjustment. Then, by the way, should we deduct TDS on service tax and GST portion also? No. If the bill contains a specific breakup, because renting of immovable property is a declared service. Correct? Declared service. Oh, you don't have declared list. Okay, fine. Sorry. Fine. Declare in supply, no, there are some services which are treated as by default deemed to be service. TST. In that, one of the item is renting of immovable property. I studied GST long ago. Long means long of the longest. You are writing exam next month. Fine, leave it. Renting of immovable property, GST applicable or not? Residential property alone is not applicable. All non-residential purpose applicable. So, I am a tenant. My owner is asking me to pay GST also. I am paying. For me, input tax I will get. That's a different story. But I am paying GST also. 1 lakh rent, 18% GST, 1,18,000. Should I deduct TDS on 1,18,000 or 1 lakh? Don't say less than 2 lakhs, 2 lakh 40 is no TDS. I am talking monthly rent. I am talking monthly rent. Getting it? So on 1 lakh only TDS will be applicable, whether you call it as service tax, whether you call it as GST. This clarification originally was for service tax earlier. Later it was implemented to GST. That's it. Now, sometimes you buy, you take assets on lease. If you pay upfront lease amount, like you are not paying monthly, will TDS provision under 194I apply? No. If at all you are paying upfront amount, 194I provision will not apply. Next. Very simple. XYZ Limited pays 50,000 per month as rent to Kishore for a building in which one of its branches is situated. Discuss TDS provision. This is a company, not an individual or HUF. For every payer, no exemption under 194I. Straight away they have to deduct TDS if at all annual amount exceeds 2,40,000. So 6 lakhs multiplied by 10%, how much it is? 60,000 TDS is applicable. That's it. You're clear, right? Next. This one, should I cover this one also right now immediately? No? Okay, fine. So we'll stop. We'll continue the remaining provisions in the next section. Next session, 1 more hour. Probably 1 more hour we'll be finishing the entire TDS. Are you getting confidence? That's it. Take care. Yeah. So in the previous session we are discussing about 194I, right? Now let's discuss 194IB. 194IB. Before 194IB, there is another section called 194IA. All the amounts where TDS is to be deducted generally at the time of payment, they were all discussed at below in one table. These are all generally amounts which are to be deducted at the time of credit or payment, whichever is earlier. But this one section is little like different. Here you have to deduct TDS at the end of the financial year. Last month in the financial year or last month of the tenancy. Suppose in this year you are vacating the premises. After you occupy, somewhere before March itself you are vacating. Then which month you are vacating? For that month, whatever rent is there, from that you need to deduct the TDS. So section 194IB, this is applicable for SSE who are specifically individual or HUF, whose turnover is less than 1 crore, whose business or profession is, yes, getting it. 50 lakhs. Furthermore, it is applicable and the threshold limit is 50,000 per month. For every month, what is the threshold limit? 50,000. Or even for part of a month, even for 1 day, you are paying more than 50,000. An amount to anybody for immovable property. If this section is, this provision is applicable. And time of deduction, the time of credit of such rent for the last month of the previous year or last month of the tenancy if the property is vacated during the year, as the case may be, to the account of the payee or at the time of payment thereof in cash or by issue of check or whatever, whichever is earlier. So to the account of the payee, time of credit to the account of the payee, nothing but the moment you record outstanding entry for the last month or the actual payment in that last month, related month, whichever is earlier. Now, if at all the deductee is not submitting PAN number, there is a section called 206A, non-submission of PAN number, getting it, and 206AB also is there, which is dealing with non-filing of returns by the deductees. If at all the recipients are not filing returns, there are higher rate of TDS to be deducted. So that's we'll discuss later. So if at all PAN number is not given, then TDS will be deducted at a higher rate as per the rate given under 206AA. What is 206A says? At the rate given in the section, at the rate given in the Finance Act, or 20% among this whichever is higher. For this point of view, from this point of view, the section Finance Act rate and the normal section rate both are same. 20% whichever is higher means 20 or 5 whichever is higher 20. Now in that case, whenever you are deducting under 206AA, as per 206AA, higher deduction when you are deducting, because the other party has not given PAN number, the total amount of TDS shall not exceed the last month rent that we are paying. The total amount of TDS shall not exceed the last month TDS that we are paying. Whereas normal cases, PAN number, everything is given. 5% of the TDS you will compute on all the months of rent, provided each month rent is more than 50,000 rupees. Each month rent is more than 50,000. Then only, yes or no? So let's say they have given an example. Suppose X is salaried employee paying a rent of 55,000 per month to Y from June 2023, which means from which month? June month onwards, which means 10 months up to March. Is he required to deduct tax at source? If so, when is he required to deduct tax? Compute amount of tax to be payable. He is a salaried employee, which means he is not a business person. This section is applicable for whom? Any person whose turnover is less than 1 crore or gross receipts are less than 50 lakhs. If at all I don't have business income at all, that also comes under less than 1 crore turnover, simply speaking. Are you getting it? So non-businesses is for all of them, this section will be applicable. Suppose if I take a function hall and rent and I'm paying for 1 day some 1 lakh rupee, this section is applicable to me. You are getting the point now. So because 1 day amount you are paying more than 1 lakh, which means in a month you are paying more than 50,000. 5% TD is applicable. So now, so this is question number 1. What is the amount? 55,000 multiplied by 10 months is equal to 5,50,000 multiplied by 5%. 27,500 is the TDS. Correct? What would your answer change? If at all X vacated the premises on 31st December only, in that case it is 7 months rent only. 5,55,000 multiplied by 7 months, 3,85,000 multiplied by 5%. How much it is? 19,250. This is the answer. Third question. What would be answer if at all he does not provide the TAN number? In that case, no, this instead of 5, it is 20%. How much it will be? 1,10,000. But it cannot exceed March month rent. What is the March month rent? 55,000. Correct? What is your answer if it is December itself we vacated, but PAN number is not provided? PAN number is not provided. Directly instead of 5, what is the percentage we apply? 20. 20 means what? 38,500, 35, 70, 77,000. How much it is? 77,000. Yes or no? But it cannot exceed December month rent. It cannot exceed 55,000. That's the answer. Easy. So you can find the answers here. Then we have fees for professional and technical services. Actually here 5 payments are discussed. Fees for professional service, fees for technical service, royalty and remuneration. Royalty, non-compete fee, and directors remuneration. Remuneration to directors. 5 types of payments are covered. Fees for technical service, fees for professional service, royalty, non-compete fee, and directors remuneration. For each category, separate threshold limit is given. For each category, separate threshold limit is given. What is the threshold limit given for each category? For technical services, 30,000 per annum. For professional services, 30,000 per annum. For royalty, whether you are paying royalty for cinematographic or whether you are paying other royalty, doesn't matter. Total royalty, how much you are paying? 30,000. Or any remuneration for directors, to a director, what is the limit? 0. Whereas non-compete fee again 30. So for out of 5, except director remuneration, for all other amounts that are payable are subject to 94J, where there is a separate limit of 30,000. So what is the rate of TDS under 194J? For technical services and royalty for film purpose, cinematic, getting it? 2%. Remaining all other royalties 10%. All professional fee, non-compete fee, director remuneration, all these cases 10%. Only for royalty in case of cinema exhibition, getting it? As well as fees for technical services, 2% royalty applicable. 2% TDS is applicable. Other royalty, professional service, non-compete fee, director remuneration, straight away TDS rate is what? 10%. The threshold limit 30,000 is per annum. You have to see per annum. That's it. For example, XYZ Limited is a company which is making payment of 28,000 to Ganesh on 2nd August towards professional fee, and another payment of 25 was paid. Both put together crossed already 30, but it was paid for him technical services. Since both are two different services, 30 for professional service, 30 for technical, since both the payments are less than 30 throughout the year, no TDS under 194J. Easy. Yes or no? So that's enough under 194J. Like what do you mean by professional service? In this element alone, let us look at. Professional service means what? It means a person carrying on legal, medical, engineering, architecture, accountancy, technical consultancy, interior decoration, advertising, or such other professional, and some other professional notified by CBDT. Four notified. What are they? Authorized representative, film artist, company secretary, information technology. Are you getting it? Next. What do you mean by fees for technical services? Managerial service, technical service, consultancy service, and provision of service for technical or some other professional. This interpretation and all not that required at this level. Getting it? In a reality phase, if you are facing a situation whether a service to be classified and a technical service or professional, that time you can, depending upon the facts and circumstances, there are so many judgments available. That time for subject, for exam point of view, that discussion is not relevant. Next. Then 194M. 194M is for three types of payments. Contract payment. Yes or no? For carrying out any work in pursuance of contract, including supply of labor for carrying out any work, as well as commission, not insurance commission. They professional services. By way of fees for professional services. Now, for all these three cases, the TDS is applicable if at all the individual or HUF. Which individual or HUF? Who does not have a business income or who have a business turnover less than 1 crore, profession less than 50. If at all he is making a payment of more than 50 lakh, what is the rate of TDS applicable? 5%. Straight away 5%. In all these cases, straight away 5%. I forgot to mention one point here. You know, here individual and HUF, they're exempted, right? Just a minute. Just a minute. There's one important observation. Just 1 minute. I'm just. Yeah. This is very important. There is a high possibility of MCQ. Now, individual and HUF, generally what is the provision? What we know, there are 6 sections that are not applicable to individual and HUF, whose turnover is less than 1 crore, whose professional receipts are less than 50 lakh. Now, 194J generally not applicable, right? Only towards 2 items. Fees for professional service, fees for technical service, only that exemption. Suppose if at all an individual or HUF, my turnover is less than 50 lakh or my turnover is less than 1 crore. Getting it? Receipts are less than 50 lakh. But I'm paying royalty to somebody. 30,000 limit is applicable to me and I have to deduct TDS. So that was the interpretation. Getting it? Since it can be inferred that individuals and HUF not required to deduct TDS under 194J on royalty and non-compete. Let me correct this little bit. What are they saying is, for individuals and HUF, when this section is applicable, when their gross turnover is exceeding 1 crore, or when professional receipts are exceeding 50 lakh. This limit is applicable only for these two. You are getting it? This limit is applicable only for these two. Rather than that way, this way is best. This limit is applicable only for these two fees. Royalty, non-compete fee, this provision will not apply for individuals and all. This is actually a loophole in the law. This exception was drafted long ago. This exception was being revised but not fully revised. You are getting it? When original section, no, only these two were covered. Professional service and technical only covered in the original 194J. Later royalties added, director remuneration added, non-compete fee. These are all added later through various finance acts. You're getting the point? In the original section, only these two were covered. Exception also, these two are only covered. Understood? So that's how the loophole arised. That's it. Actually, it's a loophole in law. It's not the intention of the law. Next. But that much depth is not required. Basic provision, if you understand enough, totally 5 categories of payments, two types of payments or 2% rate of TDS, and royalty, it has 2 classifications. Royalty for cinematographic films, distribution and exhibition 2%, other royalty 10%, professional service, fees for non-compete fee and direct remission, all these cases 10%. Threshold limit is always 30,000 for each category except direct remission. Direct remission, there is no threshold limit. Then they're adding, no, they forgot to put that set. It's not that they don't want to give any threshold limit. Next. Then 194M, only 3 types of fees: 194C related, commission 194H related, professional services 194J related. Only for these 3, 5% TDS is applicable if at all an individual or HO of paying any sum to any person exceeding 50 lakh. Exceeding what? 50 lakh. Straight away, what is the amount of TDS applicable? 5% straight away. So on this we have some problems. For example, examine whether TDS provisions are applicable. If so, under what section? Specify the rate of TDS applicable for all the payments. Mr. Ganesh, an individual carrying on retail business with a turnover of 2.5 crore in the previous year, 22-23. By the way, we are doing 23-24. Suppose Mr. Ganesh is an individual carrying on retail business with a turnover 2.5 crore. Previous financial year turnover is exceeding 1 crore, which means all those 6 sections are applicable. Now here we are paying contract payment for residential. Actually, 194J, 194C, both these sections will not apply if at all payment is for residential purpose, personal purpose, not related to business. Whereas 194M is applicable whether it is personal or professional, doesn't matter. Personal purpose also it is applicable, but 194M is applicable when if the amount is crossing 50 lakh. If the amount is crossing 50 lakh. So contract payment for repair of residential house, 5 lakh we paid. Actual contract payment in a year crossed how much? 1 lakh. But since it is residential purpose, no TDS. Correct? Payment of commission to Wallish for business purpose. Since it crossed 15,000 rupees, for commission threshold limit is what? 15,000. 194H. Yes or no? 194H is applicable because its turnover is 2.5 crore in the preceding financial year. No exemption. Correct? Next. Mr. Rajesh, a wholesale trader whose turnover for 95 lakhs, means all the 6 sections exempted. All the 6 sections are exempted. Contract payment he made for residential house. How much he paid? Made during Jan to March. 20 lakhs in January, 15 lakhs in February, 20 lakhs in March. All put together 20, 20, 15, 55 lakhs he paid. Previous turnover is less than 1 crore. 194C will not apply. 194M will apply. Since it crossed 550 lakh, 5% TDS will apply. They are only asking whether TDS is applicable or not. If so, rate. They are not asking you to compute amount. Next. Mr. Satish, a salaried individual. What is he doing? He is paying brokerage for buying residential house. Brokerage is covered, professional fee is covered, contract fee. Only these 3 are covered under 94M. How much amount is paid? 50 lakhs crossed. So therefore 5% TDS applicable under 94M. Dheeraj, a pensioner, means salaried employee. Contract payment made during October to November, so and so reconstruction, but amount paid is not exceeding 50, therefore no TDS. That's it. Next. Easy. Then we have a provision on TDS on cash withdrawal. Cash withdrawal provision is very simple. Section 194N provides every person being a bank or cooperative bank or society, if at all they are paying any sum in excess of 1 crore to any person from 1 or more accounts maintained by such recipient person, which means with a bank, you may be maintaining 1 bank account or multiple bank accounts, doesn't matter. Customer wise it will be calculated. Suppose I'm having which HDFC bank savings account, current account, various other 2 savings accounts I have, 2 current accounts I have. From all the 4 accounts put together, if my total withdrawal is exceeding 1 crore, what is the rate of TDS? 2% straight away. What is the rate of TDS? 2%. Suppose if the account holder is a cooperative society withdrawing cash from the bank, then 3 crore is the threshold limit, which means for a society, only if it crossed 3 crore the cash withdrawal, 2% TDS will be applicable. Correct? By the way, here it is not threshold limit, it is only the extra. For 194N alone, it is considered as a slab limit. It is considered as what? Slab limit. So up to that TDS will not apply. Once it crosses that amount, TDS will apply. Now look at it. Time of deduction. It is to be made at the time of payment, obviously. Now suppose there is one more penalty provision kind of, or I can say there is a severe TDS. I mean, they are deducting higher TDS if at all the customer is a non-filer. If the customer is a non-filer, if at all the customer does not file return of income for all the last 3 years, any 1 year filed also, this provision will not apply, exception will not apply. If at all he is not at all filed in the all the 3 previous year, then instead of 1 crore, 20 lakhs is the threshold limit. The moment cash withdrawal cross 20 lakh, 2% TDS will apply up to 1 crore amount of withdrawal. The moment it cross 1 crore, on the extra amount beyond 1 crore, 5% applicable. Whereas for cooperative society, from 20 lakhs to 3 crore, 2%. More than 3 crore, 5%. Are you getting it? That's it. That's it. So that is with respect to, additional rate of TDS. Additional rate of TDS is applicable when, if the person has not at all filed the return of income in the past 3 years, then 20 lakh is only threshold limit. Are you clear? All of you. If the recipient, if the customer is society, obviously, 3 crore is the limit applicable, up to 3 crore. But both the cases, 20 lakhs is the lower limit. By default, 1 crore. By default, 1 crore. Up to 1 crore on cash withdrawal, no TDS. But the moment it cross 1 crore, 2%. But suppose if the customer is not a regular filer of IT return, what do you mean by regular filer? In the last 3 years, he didn't file at all. In such a case, up to 1 crore, the bank will not wait. The moment it crossed 20 lakhs, TDS will be deducted by flat 2%. After 20 lakhs, 2%. Up to what amount? 1 crore. Once it cross 1 crore, what? How much? 5%. This 1 crore limit will be substituted with the 3 crore in case if it is a society. That's the only difference. Next. By the way, if the cash withdrawal is made by government, bank, all these cases, ATM centers, for them it is not applicable. They are all internal government departments, all the TDS and all will not apply on government entities. So for example, they have given some totally 10 cases. Case number 1 to case number 10. Up to 6th case, up to case number 6, they are all filing returns regularly in the past 3 years. Whereas from case number 7 to case number 10, problem number 7 to problem number 10, they did not file return. The persons mentioned in 7 to 10 have not filed the returns in the last 5 years. Actual 3 enough. But they have not filed in the last 5. So which means the higher rate of TDS provision is applicable on cash withdrawal. Now first one, Mr. Harshit, bank, State Bank of India, on which date? 1st July. How much he withdrawn? 1 crore 10 lakh. By the way, this is per month limit or per annum? Obviously per annum. So limit, he has filed return. So 1 crore crossed. 10 lakhs into 2%, how much? Pranav, SBI, 90 lakhs. Since it is less than 1 crore, no TDS. ABC, Cooperative Society. Society means up to 3 crore, no TDS. XYZ Cooperative Society, 3 crore 10 lakh. Only on the 10 lakhs, 2% TDS, 20,000. Vaibhav, so cooperative bank, he is an individual, remember. Individual means only 1 crore. Up to 1 crore, no TDS. Beyond 1 crore, 2%. 1 crore, 1 lakh into 2%. 2 lakh, 20,000. A limited company, they have limit only up to 1 crore. 5 lakh into 2%, 10,000. Now, whereas case number 7 to 10, case number 7 to 10, they have not filed the return. Suppose a firm, not a society, right? It's a firm. How much? 90 lakh. Up to 20, no TDS. 20 lakhs to 1 crore, 2%. But here it is only 90. So 70 lakhs into 2%, 1 lakh 40. Individual, 1 crore 20. On 80 lakh, 2%. 20 lakh, 5%. Correct? That's it. Rakesh, okay, bank, 1st February, 45 lakh. 25 lakh into 2%, 50,000. 25 lakh into 2%, 50,000. Cooperative society, 3 crore 30. 20 lakh to 3 crore, 2.8 crore into 2%. An extra 30 lakh multiplied by 5%. That's the logic. Easy or not? Next, other TDS provisions. 192A, premature withdrawal of provident fund. Suppose if an employee is withdrawing provident fund contribution before its maturity or before completion of 5 years. Premature means what? Generally you have to withdraw provident fund at the time of retirement. Before retirement, if you withdraw, generally it is treated as taxable. However, there are exemptions. If at all you withdraw after continuous 5 years of service, your PF amount you withdrawn fully exempted. Or you withdrawn before 5 years of service, but you withdrawn because of termination is due to ill health, or contract or discontinuance of business, cessation of the employment, company itself closed. Because of that reason, provident fund amount they settled to you. So that time if you withdraw, nothing is taxable. Or cessation, your employment is seized, company fired you, that time they gave you every entire amount, you know, because they fired you, they have to pay you all your obligations, right, pending obligations, so they paid you that amount. That is the reason, because of your withdrawal, that time also it is not applicable. Ill health, that time also it is not applicable. Or you are changing from one employer to another employer, that time what happens is, from this company whatever PF is there, I'll withdraw and I'll transfer it to another company. For that purpose you withdraw, then also this provision will not apply. Otherwise, or if at all you withdraw after 5 years, no questions asked, straight away exempted. If you withdraw before 5 years, why you withdraw? Ill health, change of employment, discontinuance of business, or firing. Getting the point? So what reason? If these are the reasons, again no TDS. If other than these reasons, TDS will apply. What is the threshold limit? 50,000 rupees. Total payment made in a year is exceeding 50. Straight away 10% on the amount of withdrawal the moment it cross 50. And remember again, this is a threshold limit. Only 194N is a slab limit. Remaining all other TDS provisions are threshold limits. Yes or no? Now dividend. So what is the dividend threshold limit? 10% rate of TDS, and threshold limit is 5,000 per financial year. However, dividend paid to these institutions, yes or no, government, LIC, GIC or any other institutions notified, they are not, TDS is not applicable. Next, 194B, 194BA and 194BB. In all these cases, except 194BA, winnings, these are all actually called as what? Winnings. In one case, winnings is from horse race. In one case, winnings is from lottery, gaming, all that. Whereas BA is for online gaming. For online gaming, no threshold. For whereas remaining all other winnings, 10,000 per annum threshold limit is there. How much is that? 10,000 per annum. Whether it is online gaming or remaining gamings, whatever it is. What is the rate of TDS? 30%. And of course, payment will be made, TDS will be deducted at the time of payment. But for online games, no. You may have not withdrawn from the application. Like you're playing games online, so whatever money you're winning, no. So whenever you win, some money will be added to the ledger. Whenever you lose, some money will be removed. So at the end of the financial year, what is the net winning will be there? What is the net winning amount will be there? On the TDS will be applied. Or suppose no, you are not waiting up to end of the financial year, you are withdrawing in between itself. That time itself 30% will be deducted. Are you clear? Suppose if the winnings are given in kind, ensure that you collect tax from him and then release the winning, the non-monetary item. That's it. Next, 194D, insurance commission. What is the threshold limit? 15,000. Even for normal commission, 194H also threshold limit is 15,000. Getting it? And rate of TDS under 194H as well as 194D both are same, 5%. 194DA, this is regarding maturity amount from insurance policy. 194DA is regarding maturity amount from insurance policy. Which maturity amount other than those which are exempted under 10 clause 10D? Other than those which are exempted under 1010D. Suppose if the amount of maturity from life insurance policy is exempted for you, no TDS. Because that's an exempted income. Suppose if that income is not exempt, then TDS is applicable if the amount paid in a year exceeding 1 lakh, rate of TDS is 5%. Rate of TDS is 5%. On how much amount? On the amount of maturity or income portion? Only income portion. Only income portion. 56 subsection 2 clause 13. That section exactly deals with this. 56 subsection 2 clause 13. They deal with how to calculate income in case of matured policies. Very simple. What is the maturity proceed? Minus what is the total premium paid but not claimed deduction under income tax. What is it? Premium paid and not claimed deduction under income tax. So you will get income portion. Income from maturity amount is calculated like this. Under 56 subsection 2 clause 13, income will be calculated like maturity proceeds minus what is the total premium paid in the past 5 years, 10 years, whatever logic. You're all clear? Getting it? Now, actually on 1010D, there is a big clarification. 1010D, how to calculate this exemption, especially if the premium is, if at all insurance policy is taken on or after 1st April 2022 and the premium payable for a particular policy is exceeding 5 lakh. Remember this? No, you don't know this amendment. So big amendment, other sources. Very big amendment in other sources. Don't worry. In the marathon, whatever I told, right? 1010D amendment I specifically covered. You can find what are all the amendments, whatever amendments that were given in the supplementary book, they are all covered in an amendments video. You can open that. 1010D, very important amendment. There is a high possibility that that will be tested in MCQ or probably in the main exam. 1010D, exemption calculation. Generally, what we know, a policy, if at all annual premium payable, don't worry, after this session, when I'm uploading in the YouTube, I will upload all those amendments once again. So latest whatever September, I will put thumbnail clearly, heading all that clearly for September amendments applicable. So you just watch that, you will be up to date. So I'm not repeating, you will watch there, right? Yes. So 5% is the TDS if at all any amount, maturity amount withdrawn by the SSE from insurance policy, provided that policy is not exempted. Correct? Then 194G, again, commission on sale of lottery tickets. For this also same threshold limit and same percentage. 194 DHG. D insurance commission, G lottery, commission on sale of lottery tickets, any other commission comes under 194H. In all these cases, the threshold limit per annum is 15,000 rupees and rate of TDS is 5%. Then 194 IA. You are purchasing immovable property. Where I am making payment to seller. Since I am the payer, I should deduct TDS. When I should deduct the TDS? If the consideration exceeds 50 lakh or stamp duty value exceeds 50 lakh. Anything. Either consideration or stamp duty value. If at all they are exceeding 50 lakh, then I should deduct a TDS 1% of consideration or stamp duty value, whichever is higher. Getting it? So payment on transfer, if at all consideration for transfer or stamp duty value exceeding 50, then I should deduct, see, very simple, consideration or whichever is higher. Is it crossing 50? Yes, TDS provision applicable. Now at what rate I should deduct? You should deduct 1%. On what amount? Consideration or STB, whichever is higher, on that amount. Deduct that and pay whatever balance consideration that is available. Correct? Next. 194K. This is regarding units, income from units. Generally dividend is different, this is different. Here 5,000 is the threshold limit and 10% is the rate of TDS. 194 LA, compensation on acquisition of certain immovable property. One important point I want to observe here. Here they said no, payment on transfer of immovable property. Immovable property means every immovable property other than rural agricultural land. Whereas in 194 LA, actually they say here 194 LA including rural agricultural land. What is it actually? Including rural agricultural land. Technically speaking, it is including rural agricultural land. So here, one more thing. Other than agricultural land, they said, right? Which agricultural land? This agricultural land includes urban agricultural land also. This agricultural land includes urban agriculture. If at all we are compulsorily acquiring agriculture, simple. If at all government is compulsorily acquiring agricultural land, no TDS. If at all government is compulsorily acquiring any other immovable property, TDS provision under 194 LA is applicable. Whereas you are buying immovable property, excluding rural land alone. On remaining properties, TDS provision we have to check. Whereas here, any agricultural land, no problem. Why? Under 10 subsection 37, compulsory acquisition of urban agricultural land is exempted. So if it is rural, no income at all. Urban agricultural land exempted anyhow under 1037, then what is the necessity of TDS? On that logic, under 194 LA, all agricultural lands are excluded from the purview of TDS. Understood? 194 LA is dealing with compulsory acquisition of immovable property, where government is releasing money. If the amount released is here more than 2.5 lakh, what is the rate of TDS? Straight away 10%. Straight away 10% is the rate of TDS. Suppose I am purchasing immovable property. Only that immovable property if I am purchasing, which is a capital asset. For the other party, it amounts to transfer of capital asset. Then only TDS should be deducted, right? For the other party, it should be generally income, right? Then only TDS. That's why from 194 IA purview, rural agricultural land is removed. Understood? Whereas in 194 LA, all agricultural lands are removed. Why? Rural anyhow removed. Urban why removed? because compulsory acquisition of urban agricultural land is generally exempt under 10 subsection 37. That's the logic. Understood all of you? Then 194p, pension. Here actually there is a concept called specified senior citizen. For this purpose, the section brought another age limit, that is 75. Generally senior citizen means 60 and above. Super senior citizen means 80 and above. Here it is specified senior citizen. Here it is what? Specified senior citizen. This fellow has only pension income. Plus he is having interest income with only one bank. With only one bank. He don't have any other income. In such a case, what the senior citizen can do, who is aged 75 years or more, he cannot go and file IT returns, all that and all not possible, because he's only having pension income, retired person, and he's having only interest income, that too only from one bank, not from multiple banks and all. In such a case, the bank itself will collect all these details and calculate total income tax liability, deduct that entire income tax liability from this senior citizen, and bank itself will remit the entire tax liability in the form of TDS to department, where this specified senior citizen will be given exemption from filing IT return. Where the specified senior citizen will be given exemption from filing IT return. That is the intention behind 194p. In order to relax highly, like senior citizens who are of 75 years and more age from filing return of income, especially those who are having very limited income like pension and interest income from only one bank. In the same bank only you are receiving pension also, by the way. Then that bank is called as a specified bank. You are called as a specified senior citizen. If a person who is a specified senior citizen having a bank with a specified bank, getting it? So in that case, if at all, whatever pension income bank knows, minus stand deduction 50,000 they'll calculate, plus what bank is paying interest, the bank knows already, that interest will be added, gross total income, minus if at all any deductions are there, this has to give, the senior citizen has to give all the deduction information, all that. So then on the balance income, tax will be calculated by the bank. See, that's why there is no rate here. Tax will be calculated at the rates in force depending upon the option chosen by him. Getting the point? Which option he can choose? Yearly, year to year he can choose any option. Under 115 BSE, if at all you are not having business income, every year you can choose the option as per your convenience. But if you are having business income, if at all you are having, once you choose only that option. Once you withdraw from 115 BSE, you cannot go back to 115 BSE again. Default tax you cannot, unless you discontinued business. Unless you discontinued the business. That's it. So 194p understood. I'm not stressing much. It's easy. We'll solve a problem directly. Next, 194q, purchase of goods. This section and 206c, 1h, these two are interlinked. 206c, 1h is applicable to seller of the goods. 194q is applicable for buyer of the goods. If both the sections are applicable on a particular transaction, 194q will apply, not 206c, 1h. Getting the point? Suppose I am purchasing goods from one seller, where the amount in a year I am paying is more than 50 lakh. Where I am purchasing goods, where I am paying more than 50 lakh. 0.1% of the sum exceeding 50 lakh. Beyond 50, how much ever amount is there? Beyond 50 lakh, how much ever amount is there? Means it's a slab limit again, remember. So on that extra amount, 0.1% I have to collect. By the way, which buyer? That buyer, whose buyer means who? Whose total turnover is exceeding 10 crore in the immediately preceding financial year. Suppose I am a trader or I am a manufacturer, whoever it is. I will purchase goods in my business purpose. My previous turnover is how much? More than 10 crore. Then this 194q section is applicable. 194q is applicable if my previous turnover is more than 10 crore. And I am paying to some buyer. Getting it? Sorry. Some seller. So I purchase goods from them. So I am paying amount. For seller it's an income, right? So I should deduct TDS. Should I deduct TDS on purchase of goods? Yes. If the amount payable to the seller is exceeding 50 lakh. How much TDS? 0.1%. On what amount? Exceeding 50 lakh. Whereas 206(1)H, what it says, you know? If at all you are a seller of the goods whose turnover in the preceding year is exceeding 10 crore. Same logic. If at all you are a seller of the goods whose turnover is exceeding 50 lakhs in the previous year. If at all you are going to collect consideration for more than 50 lakhs in a year, on the amount exceeding 50 lakh, 1% TCS you should collect. How much you should collect? 1% TCS you should collect. Suppose I am a seller and I am selling you the goods. You are a buyer and I am a seller. My turnover is last year more than 10. Getting it? And I'm selling you goods worth of 70 lakhs to you. On the 20 lakhs, I should collect 1%. 194Q, 0.1%. Whereas TCS 10 times extra TDS amount. 1%. Getting the point? Suppose you are a buyer, you are paying me 70 lakh amount, but you don't have business turnover last year more than 10 crore. But I am a seller, I have turnover more than 10. Then 206(1) is applicable for me and I should apply. Suppose if at all you told me, no, for me also applicable 194Q. See, my turnover last year is more than 10 crore. So for me also 194Q is applicable. You said, you told me. In such a case, who should compromise? Seller should compromise. Buyer will deduct TDS at 0.1%. Understood? Are you clear? Can buyer and seller negotiate in this? No. This is a rule. You both of you have to follow exactly the rule. Like, can a buyer say, hey seller, you don't deduct, I will deduct. Even though section is not applicable to me, I will deduct. No, that kind of option is not there. Clear? That's it. So if at all tax is deductible under provisions of the act, other provisions of the act, like this section will not apply. If 206 1H and 194Q both are applicable, then 194Q will prevail, correct? Or if tax is collectible generally under these sections, tax is collectible under 206C generally, then also this provision does not apply. But if 1H alone is applicable, this provision will override. This provision has an overriding power only for 1H, not for remaining goods. For remaining goods which are covered under TCS, TCS only will apply. Only for 1H we have overriding power. 194Q has a overriding power only for TCS, which provision? 1H. Whereas remaining provisions of TCS, will 194Q has a overriding power? No, because the exception says if at all tax is collectible under 206C or if tax is deductible under other provisions of the law. Are you clear? For example, I am a buyer of the goods. I am purchasing a car from a company, new car, dealer. I went to a dealer, I purchased a car for 1 crore. More than 50 lakhs. Today I did TDS. No. He will collect a TCS under 206C. This section will not apply if 206C is applicable. Yes or no? But which clause of which subsection of 206C, if applicable, still this section is applicable? 1H alone. Only for 206C 1H, 194Q was given overriding power. Remaining 206C provisions, whatever subsection 1, 1C, 1G, yes or no? For 1F, not 1F, sorry. Of course, 1F also. In all these four sections, if TCS is applicable, straight away TCS provision. TDS will not apply. Because original section says what? 194Q. 194Q section says what? If tax is deductible under other provisions on the same, of course, right now there is no other provision. There is no TDS provision on purchase of goods. There is no TDS provision on purchase of goods right now. If tax is collectible under TCS provision, then also this section will not apply. However, if 206C 1H is also applicable and this section also applicable, then 194Q will prevail. Then 194R, perquisite in kind or cash received by any businessman or professional. Getting it? In a year exceeding 20,000 rupees value. Getting it? In a year receiving exceeding 20,000 rupees in value, the person whoever is paying this benefit, 10% TDS you should deduct. Like example, very simple this example, many medical companies, no? Getting it? They'll be giving gifts to medical shops who are achieving targets. Now we are giving some car to one of the medical pharma distributor. Getting the point? A car, we are giving a car. Is it a perquisite in kind or not? Which is given to this medical company should collect a TDS at 10% of the value of the benefit given. If at all the benefit given is exceeding 20,000. To cover these kind of practices, this provision was introduced. And if you recollect in PGBP, charging section 28 clause 4, perquisite in cash or kind, both are treated as what? Business income. That's it. Easy. So next, so shall we solve these problems? Examine the applicability of 194DA. X is a resident due to receive 4.5 lakh on 31st March towards maturity proceeds of LIC policy taken on 1st April 2021. Policy is issued on or after 1st April 2012. Policy is issued on or after 1st April 2012. In such a case, what is the sum assured? Cannot exceed 10%. Yes or no? Sum assured is how much? 4 lakh and premium is 1,25,000. Since the premium paid is exceeding 10% of the sum assured, therefore this is not exempt under 10 subsection 10D. Not exempt. If it is not exempt, 4.5 lakh, since it is exceeding 1 lakh, TDS is applicable. What is the rate of TDS? 5% straight away, 5% amount and all you calculate. So 4 point, by the way, TDS will be calculated on what? Income portion. TDS is calculated only on income portion. How to calculate income? Maturity proceed minus premium paid not claimed as a deduction in the earlier years. Here premium paid how much? 4.5 lakh. Sorry, 4.5 is the maturity amount. Premium paid how much? 1,25,000 per annum. You see, from 1st April 2021, annual premium is what? 1,25,000. So 1st April 2021 he paid. 1st April 2022 he paid. 1st April 2023 also he paid. 1st April 2024 did not come before that maturity set. 3 amounts he paid. How much he paid? 1,25,000 into 3. 3.75 lakh he paid. 3.75 lakh he paid. Now tell me, 3.75 lakh, out of this how much deduction he claimed? We don't know. Let us assume that he didn't claim any deduction. That entire amount will be treated as expenditure. Income portion is how much? Only 75,000 multiplied by how much? 5%. Don't think 75,000 is again less than 1 lakh. No. 1 lakh limit is we should compare with what? Maturity proceed. Maturity amount is 1 lakh. 1 lakh limit is for maturity amount. Here maturity amount is 4.5. Therefore TDS is how much? 3,750. Correct? So 5% should be deducted on 75,000. They didn't mention the amount, but the calculation I hope you can understand. Second one, Mr. Y, a resident, is due to receive 3.95 lakh on 31st March 2024. He is about to receive 3.95 lakh on 31st March on LIC policy taken on 31st March 2012. If the policy is issued before 1/4/2012, 20% of sum issued is the limit permitted. How much? 20% of sum issued before 1/4/2012. Getting it? For which sum issued is 3.5. Annual premium is 26. Forget about 20. It is less than 10 only still. So this is an exempted policy, right? Under 1010D, when it is an exempted policy, entire maturity is exempted, right? Will TDS provision apply? No. Third case, Mr. Z, a resident, is due to receive 95,000 on 1st August 2023 towards maturity proceed. He is receiving maturity proceed, whereas policy is taken on 1st August 2017, for which sum issued is 90, but annual premium 10,000. Policy is taken on or after 1st April 2012. 10% only limit permitted to get exemption, but here 10% crossed premium. Therefore, this is a taxable policy. This is a taxable policy. But then, since the maturity is less than 1 lakh, TDS provision 194 DA will not apply. Are you clear? All of you? That's it. Now, illustration number 11. Mr. X sold his property in Bangalore as well as his rural agriculture land for a consideration of 60 lakh, 15 lakh. So, building some immovable property which is sold for 60 lakh. Rural agriculture land is sold for 15 lakh. The land was purchased in the year 2022 for how much? 40 lakh. Okay, 2022 he purchased and 1st August itself he sold. Less than 24 months he owned. It's a short-term capital asset, correct? Then for 14 lakh and agriculture land is sold for how much? Agriculture land is purchased for how much? 10 lakh. Agriculture land not a big deal because it's a rural agriculture land. Yes or no? It's a rural agriculture land. With respect to rural agricultural land transaction, is there any tax consequence? Nothing. Now, the stamp duty value on the date of transfer is 85 and 20 for the purpose of for house property and for rural agriculture land. Stamp duty value is relevant for what? Suppose here who is purchasing? Y is purchasing from X. Y is purchasing at what price? 60. At what price? What is the stamp duty value? 85. How much is the income for him under other sources? 25 lakhs. Gift. Provided this gift can be taxed only if the stamp duty value is more than 110% of the consideration. Consideration is 60 lakh. Into 10% you apply 6 lakh. 66 lakhs beyond, if it is there only, gift provision will apply. Then what is a gift? Gift is equal to SDB minus consideration is equal to gift. Can I tax it? You can tax it if the stamp duty value is more than 110%. Here it is there. So in the hands of Y, 25 lakhs will be treated as income. Now what about X? He is the seller, right? Immovable property 50C. Immovable property 50C. As per 50C, whenever you are dealing with whenever you are selling an immovable property, the full value of consideration shall be stamp duty value or actual consideration, whichever is higher. How much it is? 85 lakh. Yes or no? Minus what is the cost of acquisition? 40. Therefore, 45 lakhs will be short-term capital gain. Yes or no? Now, what is the tax implication in the hands of Y? Because Y is purchasing now. Y has to deduct TDS under 194 IA. How much he has to deduct TDS? By the way, let's apply whether section is applicable. What is the stamp duty value applicable in the case? 85 lakh. 85 or 50, whichever is higher? 85. Since it is exceeding threshold limit 50 lakh, TDS section 194 IA is applicable. What is the rate of TDS? On 85 lakh, which is 85,000. Now 85,000 rupees Y will deduct from 60 lakhs of the consideration which is paying to X, and balance amount, the balance amount will remit, this 85,000 will remit to the department. Yes or no? That's it. The problem is over. Next. With respect to rural agricultural land, there are no tax consequences at all. Next. Here this is regarding Sharma 194P. A resident Indian aged 77 years gets a pension of 52,000 per month. Just can I get a calculator? Yeah. So when I start tax class, I will bring my own calculator. So he is getting pension. How much more? 52,000 multiplied by 12 months. M plus. Correct? So all of you calculate along with me. 52,000 into 12 months M plus. Next, the same is credited to his savings account. In addition, he gets interest at 8% on fixed deposit of 20 lakh. 20 lakh into 8%, how much? 1,60,000 M plus. Yes or no? Out of the deposit of 20, 2 lakh represent 5-year term deposit made by him on 1st April. Okay, in this year only 2 lakh made. 1st April only he made. So which means on entire 20 we calculated per annum interest, which is correct only. Suppose if at all they gave information on some other date, then we should revise our calculation. Now again, he made a 5-year deposit, right? 5-year deposit in bank. ATC deduction. Yes or no? How much he can claim? Maximum ATC totally. 1.5 lakh is ATC. Interest on savings bank again is how much? 9,500. Fully tax it. 9,100 fully tax it. But remember, he is 77 years aged, which means 80 TTB deduction is available. Yes or no? How much? 50,000 rupees. Up to 50,000 rupees you can claim deduction. Is it only for savings interest? Whether savings or fixed, whatever interest it is, up to 50,000 interest you can claim deduction. Actually, this fellow is having 20 lakhs into 8% plus 1,60,000 plus 9,500. 1,69,500 is the total interest available. 50,000 you can claim deduction. So this, remember, this 50,000 you can claim deduction under 80 TTB. Remember this point. Are you clear? So until now 7,93,500 is the gross salary and other sources income. But remember, in gross salary you should claim deduction flat 50,000, right? In order to arrive, so 50,000 M minus. Right now 7,43,500, which is the gross total income. Agreed or not? 1,50,000 ATC deduction, 50,000 80 TTB deduction. What is the net total income? 5,43,500. Are you all with me? That's it. 5,43,500. By the way, what is the tax liability? Senior citizen, let us assume he has not opted for. No, that's why deductions and all we claimed. Yes or no? So 43,500 into 20%, 8,700 plus 4%, 9,048 rupees. Correct? That's it. Hey, what happened? Hey, wait. He is 77 years. 3 lakhs only. 77, not senior, super senior. 77. 77 is obviously 3 lakhs. So 10,000 plus 43,500 something multiplied by 20%. So total tax will be approximately 19,000 approx. Cess and all you add and you calculate. That's it. 3 lakhs is the limit. Next. These provisions and all not required. Only key provisions I am revising in. Okay, only main provisions under TDS. By the way, this is one more important provision. What is the consequence of failure to pay, deduct or failure to? See, your liability under TDS. Once, what are the obligations of the deductor after deducting the TDS? 1, he has to remit within the due date. 2, he has to file ETDS return. If failure to file TDS return, 234E, there is a section which attracts a penalty per day 200 rupees for delayed filing fee. I think you don't have that. That is not there in CNT. Whereas if you fail to pay on time, see here, no, there are 2 mistakes you can do. 1, you forgot to deduct, you fail to deduct, or You deducted but failed to remit. What is the rate of interest applicable? From date of liable to deduction. From date of liable to deduction to date of deduction. Getting it? Month includes part of a month also. Month includes part of a month also. How do you calculate month here? Suppose you are liable to deduct on 10th May, but you deducted on let us assume 12th. Let us assume you deducted on 9th June. 10th May you are supposed to deduct, but you deducted on 9th June. How much delay? 2 months. Month should be calculated on month April, May, June. Like that you should calculate, not 30 days. Are you getting it? You are supposed to deduct on when? May 10th. May 10th. If at all you deducted and paid by June 7th, no problem. You didn't deduct. You deducted when? June 9th. Means you late deducted. So for May month 1% interest applicable, for which you didn't deduct. June month also part of a month late 1%. Since you deducted in June month, you should remit by when? July 7th. If you remit by July 7th, no problem. The 2% interest you pay enough. Suppose no. June 9th I have to deduct, right? Sorry, let us assume May 10th I deduct. May 10th I am supposed to deduct deductible date. June 9th is the actual date of deduction, but I remitted on July 10th. How? Like July, from the provision says 1% from the date of deductible to the date of deduction per month or part of a month. Since there is a late deduction, 2 months we calculated on the TDS amount 2% for late deduction. Now for late remittance, when is the due date? July 7th. Because I deducted on June 9th. June month I deducted. June month amount I should remit by what date? July 7th. But I remitted on July 9th. How much? How many days delay? After July 7th, 2 days. Which means 1 month delay, 1.5%. Wrong. For late deduction, for late remittance, interest shall be calculated from date of deduction itself. From date of deduction itself, you see, 1.5% for per month or part of a month from the date on which tax was deducted. It's not due date. Getting the point? Generally 1.5% students will apply from the due date of remittance. No. For late remittance, technically for late remittance, from due date of remittance only you should calculate interest, right? But the law is not like that. From original deduction date is that they are levying penalty. Which means, suppose, simple logic you see, suppose the TDS amount is 1 lakh rupee. The TDS amount is 1 lakh rupee. So let us assume I paid this amount to the person on May 10th. I am supposed to deduct by when? By May 9th, or at least by May 31st you deduct. And if at all you remitted by June 7th to the department this 1 lakh. Whether in reality you deducted on a department also, don't bother. Since you remitted May month related amount in June 7th, they consider you have complied. So no, 0. Suppose if at all you deducted in June 10th. You deducted in June 10th. You are supposed to remit by what? July 7th. Suppose you remitted 1 lakh, let's assume July 7th. Now what is the interest that you have to pay? Only on 1 lakh into 1% multiplied by May month you didn't deduct and June month you deducted. So May month non-deduction and June month also part of a month. Delayed, late, right? So 2 months is equal to how much? 2,000 rupees you have to pay. Correct? Suppose let us assume you didn't pay July 7th, just 2 days later. July 9th you paid. This is as it is will apply. In addition to this, what else is applicable? Late remittance is there. For late remittance, interest is on how much? 1 lakh into 1.5% multiplied by how many months? From date of deduction, you have to calculate 1.5% interest. Date of deduction is on June 10th. Part of a month, June, 1.5%. July part of a month again, 1 month, full month will 1.5 into 1, 3, I mean 1.5% into 2 months, obviously, of course. We will consider 2 months. Totally 3%, 1.5 plus 1.5 is equal to how much? 3,000. So 5,000 rupees is the interest applicable. Are you clear? So for late deduction from deductible date to the date of deduction, just to check how many months involved. Days, number of days gap, that and all ignore. April, May, June, how many months involved? Deductible date which month? April. Deduction date which month? February. 11 months, that's it. Straight away 11 months. Due date when? June 7th due date. But you remitted June 10th. Which month you deducted? May month or June month? Consider June also, May month also. Deduction month also should be considered for late remittance interest calculation. Don't consider only due date month for late remittance calculation. Are you clear? Deduction month onwards, late interest will be applicable. Clear? Hey, are of you? So in that is the main provision. Actually in this, no, there is a link SSC in default. When SSC is not treated as SSC in default, link with 40 subsection A clause 1, 40 subsection A clause 1A, all that entire link is there, but it's okay. On this, there is a problem on 6 sections. 194A, 194C, 194H, I, J, K, sorry, 194H, I, J, R, and this 201 subsection 1A, 201 1A, and 194 series, that 6 sections, and 40 subsection A clause 1, clause 1A, they are all interlinked. One problem will be there. Only it's slightly confusing. It will be slightly confusing. Very simple. What 40A1, 40A1A says? 41A alone, let us see. 41A, any payment to resident by not complying TDS provision. By not complying TDS provision, that amount 30% will be disallowed. Not complied means what? Either you didn't deduct or deducted but not remitted. That's non-compliance. Now, you are treated as SSC in default when you have not complied with the TDS provision. Suppose under 201, you are not treated as SSC in default. You are given exemption from SSC in default. When you will be given exemption from SSC in default, if at all, the person from whom you should deduct, no, he filed IT return. In that, no, whatever amount you gave, no, he disclosed that amount. He paid tax also. Then, see, the reason why we ask you to deduct TDS is so that other person will not escape. But he didn't escape. You showed me the proof. CS certificate is there. I will relieve you from SSC in default provision. If I relieve you from SSC in default provision, we assume that you have complied with the TDS provision. Now, in this case, the month in which the deductive filed the return, right, that month is treated as deemed remittance. That month is treated as what? Deemed remittance, deemed deduction and deemed remittance. Now, from the date on which originally you have to deduct, no, till the date of actual filing of return by deductee, 1% per month interest is applicable. Have you seen this provision? Getting it? Now, 194A, 194C, 194H, I, J, R, in all these cases, if at all the payer is individual or HUF who does not have a business or profession, of course, 41 will not apply. Who have a business or profession but turnover is less than 1 crore, receipts are less than 50 lakh. These 6 sections are not applicable, right? If these 6 sections are not applicable, when I'm paying any payment related to that, if I do not deduct TDS, will the disallowance attract to me? Disallowance itself will not attract. When disallowance will attract? If the person is liable to deduct and fail to do deduct, or deducted but failed to remit. First of all, I made professional fee where I am not at all. The section itself is not applicable. That section itself is not applicable. Will disallowance under 40A money applicable? No. Are you clear? That's it. Same way, suppose you are liable to deduct, but you did not deduct, and you got exemption from SSC in default provision. In that case also, you are deemed to have complied TDS provision. When the law assumes you are deemed to have complied with the TDS provision, 40A 1 year disallowance also will not attract. It will not attract. Are you clear? That's it. Next, TCS provision straight away. Okay. TCS provision I'll start. Sorry, higher rate of TDS. This also will find. I mean, higher rate of TDS for non-furnishing of PAN. Suppose if the deductee for whom I am paying the amount, if that fellow is not giving me income tax, if at all that fellow is not giving me PAN number, what I will do if at all that fellow is not giving me PAN number, I will deduct a TDS at mentioned in the Finance Act or section or 20%, whichever is higher. That's it. However, in case if it is 194Q related, what is the rate of TDS? Maximum 5. Purchase of goods. Maximum 5%. Next. And higher rate of TDS for non-filers of income tax return. Non-filers. Suppose if at all you are a specified person. Non-filer means what? First of all, specified person. Suppose you are making payment to a specified person. Who is he? He is the one who did not file income tax return of the last year. Yes or no? He did not file previous year immediately preceding the financial, not 3 years logic. not 3 years logic, just last year you didn't file income tax return, and in that last year, no, that fellow has a TDS and TCS up to how much? 50,000 rupees or more. That fellow has not filed return of income in the last year, but he has a TDS amount. We call him as what? Specified person. If at all you are making any amount to specified person, he furnished PAN, everything is good, but still you will deduct TDS at what rate? Twice the rate prescribed in the provision section, twice the rate prescribed in the rate in force, or 5%, whichever is higher. Whichever is higher. This provision will not apply for salary, premature withdrawal of provident fund, winnings, online gaming, horse races, 194IA, immovable property purchases, rent payment for more than 50,000, 194M. See, in 194IA, IBM, in all these cases, TAN number is not required for them. Correct? TAN number is not required for them. That's it. So in all these cases, this section 206AB will not apply. For all other section 206AB is applicable. What is the highest rate in 206? 5% or twice the rate given in the section in the Finance Act, or twice the rate given in the section, whichever is higher. Suppose, sir, the person is a not filer in the income tax return. Moreover, this year also he didn't give PAN number. Now 206A is applicable, 206AB is applicable. Which percentage should apply? Whichever is higher again. Under 206A, what percentage calculate? 206AB, what percentage you calculate? Whichever is higher. That's it. Clear? Advanced tax provision I will orally explain. Okay, then I will go with the TCS, or else I'll do one thing. TCS I'll complete and go with the advanced tax. We have totally 5 TCS sections. So what are the TCS sections? We have 206C deals with the TCS. We have totally subsection 1, 1C, 1F, 1G, 1H. Correct? So 1H is dealing with the seller of goods. 1G is dealing with the liberalized remittance system, overseas tour package. Correct? Seller of overseas tour package and liberalized. Sale of motor vehicle. Correct? And one is regarding, one is regarding the sale of timber, forest to produce, all that. One is regarding toll, parking lot, all that. Correct? Now, toll, parking lot, these are all quite easy. In this only, sale of motor vehicle provision I'll cover, LRS provision I'll cover, sale of goods anyhow I have already covered. So these two if I discuss now, it will be over. Sale of motor vehicle I'll cover because there is no much complication involved right now, whereas LRS and overseas tour package, there is an amendment which is applicable for the first time for May and also applicable for September as it is. Now sale of motor vehicle, very simple. I am purchasing car, getting it from anybody, dealer, whoever it is, generally, whether it is a second hand car or first hand car, provided I am purchasing it from dealers. They are supposed to deduct TDS at 1% if the value of the car is exceeding 10 lakh. What do you mean by value of the car? X showroom price. What is it? X showroom price. What is X showroom price? Selling price plus GST is equal to X showroom price, excluding road tax, excluding insurance, excluding other accessories charges, all that. Directly selling price plus GST is equal to X showroom price. If that X showroom price is exceeding 10 lakh, 1% is the TCS seller has to collect from the buyer. Clear? On that they have given some questionnaire. They have given some question and answer. CBDT clarification they have given. When and all this is applicable, when this is not applicable, all that they have given questions. Getting it? So that you just check it out later. The interpretation part I will tell you. Now, okay, I will explain that also, not an issue. 1F. Every person being a seller who receives any amount as consideration, he shall deduct at what rate? 1%. For this, there is a questionnaire which is given at the last. Yes, here you see. Is this provision applicable only at a retail level or sale of motor vehicles by manufacturers to dealers? It will not apply when the cars are being sold by manufacturers to dealers. At that time, 206C 1H is applicable. When manufacturers are selling cars to dealers and all, 206C 1H is applicable. Aggregate in a year 50 lakhs crossed. 1% is a sale collect under 1H provision. 1F will not apply. 1F will apply for whom? Retail sellers. Second hand car dealers will be there, sellers, retailers. Or first hand cars, directly new cars they will be selling, they are called as retailers. For them only this provision is applicable. Correct? So this is one most important clarification. So whether TCS is applicable, if at all we are selling to government embassies, all that, generally for most of them exemption will be given. Yes or no? They are not liable for TCS. Is the TCS should be calculated for each vehicle or aggregate? Each vehicle. It is to be calculated for each vehicle. Is it applicable in case of individual? Generally, yeah, whoever it is, seller may be individual, whoever it is applicable. Dealership, that's it. You are a retailer, that's it. Retailer may be sole proprietor or a partnership from anybody. That's it. There is no other much bigger interpretation is involved here. Now 206 1G. 206C subsection 1G. What is this subsection 1G talks about? Now here you see, you are remitting. See here you are remitting foreign currency. You are incurring some foreign expenditure, foreign related expenditure. For what purpose? Two purposes. Primarily two purposes. Are you buying overseas tour package? In this section, two provisions are discussed. 206C subsection 1G, 2 points are discussed. One, this section is applicable for two sellers. Very simple. This section is applicable for two sellers. One, seller of overseas tour package. Two, dealer of foreign currency. Seller who is dealing with foreign currency, who is letting customers to remit foreign currency outside India for various purposes. Like we are all suppose let us assume our relative is studying at abroad. We want to send money to him. Through which channel we will send? Through authorized dealer we will send. For him TCS provision is applicable. Suppose you want to go abroad, tour. You want to buy a tour package, overseas tour package. Suppose there is a travel agency, tour operating company which is organizing this. The tour operating company shall collect a TCS for overseas tour package selling. What is the rate of TCS? For overseas tour package, zero threshold limit. There is no threshold limit. Straight away 5% of the amount without any threshold. If at all the remittance is up to 30th September 2023. If the remittance is up to 30th September, whatever amount you remit, 5%. The moment it crossed 30 September, means 1st October onwards. Calculate. There is a clarification in the supplementary material. What they said is, up to 7 lakhs in the total remittance from the beginning to till date. From the beginning of the year to till date. Up to 7 lakhs, 5%, 20 lakhs thereafter. Now here, clarification is given. Up to 7 lakhs is there, right? Is it for the remittances freshly calculated from 1st October? Or is it remittances from 1st April onwards itself? 7 lakhs will be computed from 1st April onwards itself. Suppose by 30th September already you sent 7 lakhs. 5% TDS is already, TCS is already collected. Now again you are sending another 10 lakhs. Don't say again 7 lakhs fresh limit. No. Straight away balance 10 lakhs will be liable for 20%. If the remittance is made on or after 1st October, then on the initial 7 lakhs, 5%, beyond 7 lakhs, 20%. Whenever you are purchasing overseas tour package, clarification says that. Next, suppose you are remitting for education purpose or medical treatment purpose. You are remitting for education or medical. Let us do one thing. I will directly discuss it in the supplementary material. You see better. Because in the supplementary material, anyhow, entire provision is given. The supplementary material, entire provision is given. You see. So whether you are remitting before 1st October or on or after 1st October, can I say like that? No TCS up to 7, sorry, not this, overseas tour package. Overseas tour package, 5% without any threshold limit if it is up to 1st October, before 1st October. After 1st October, up to 7 lakhs only 5%. Beyond 7 lakhs it is. Suppose I am remitting outside India. By the way, this is one particular provision for which a separate 7 lakhs limit is applicable. By the way, here there is no threshold limit. Up to first 7 lakh 5%. Beyond 7 lakh it is 20. Even if the tour package is just 1 lakh, 5% is applicable. Suppose if the total tour package cost by paid is more than 7 lakhs, The moment it cross 7 lakhs, extra amount is 20, below 7 it is 5%. Suppose I am sending it for education purpose or medical treatment purpose. It may be before or after, forget. Up to 7 lakhs, 0. The moment it cross 7 lakh, 5%. The moment it cross 7 lakh, 5%. Suppose I am remitting by borrowing loan from a bank. By borrowing loan from a bank, I am remitting. Same, up to 7 lakh, 0. But since you are paying out of loan money, which is not your income, I know you will not have much of income. Why TCS is to be collected? TCS, why I will collect generally? Because you're having income, you may escape from paying of tax. But you borrowed loan and remitting. That's not your income, right? So TCS is levied at a lower rate, 0.5% in excess of 7 lakhs. Sir, it's not overseas tour package. It's not education or medical purpose. I am paying it for some other purpose. Some purpose I'm paying. In that case, up to 7 lakhs you have limit. Up to 7 lakhs no TCS. But the moment it cross 7 lakhs, 5%. In case if it is up to 30th September, the moment it cross 30th September, it is 20%. The moment it cross 20%. Very simple. Right now from 1st October, TCS rate is revised up for 20%, 5 to 20. For which remittances other than education and medical? For education and medical, old TCS rate only retained, 5% only. For education and medical purpose, if it is up to 7 lakh, you are remitting 0 TCS, no TCS. Beyond 7 lakhs, you have to collect TCS at 5%. Suppose if you are remitting for any other purpose, the moment it cross 7 lakh, 20%. Are you getting it? From 1st October? If it is before 1st October, whatever amount extra you remitted beyond 7, 5% only still before 1st October. Overseas tour package, earlier it is only 5% flat on entire amount, but now it is up to 7 lakh 5%, beyond 7 lakh it is 20%. Correct? This 20% limit applicable when after 1st October, on or after 1st October. Now, do we have this 7 lakh limit separately for education and medical, separate limit for overseas tour package, separate limit for other than education and medical? Do we have a separate limit like this? No. Earlier we all interpret as a separate limit. Now department gave a clarification, no separate limit. For example, I remitted 3 lakhs for education purpose in May month. I remitted 4 lakhs for education purpose in, let us assume, in the August month. Education, this is education, this is medical. I remitted some other purpose, 3 lakhs in September. I remitted some other purpose. What is it? Other purpose in September. And this is, by the way, overseas tour package, that's a separate limit. That's a separate, because TCS is always applicable on overseas tour package. There is no exemption at all. For them, what? Only rate alone confusion. For overseas tour package, which rate you should apply? If at all remittance is on or before 30th September, straight away 5% on, 5% of remittance. If it is on after on or after 1st October, then up to 7 lakh 5%, beyond 7 lakh 20%. This is the only thing. So this is separate category. Ignore it. Now I am talking about other than overseas tour package. Seller of foreign currency, nothing but. From his point of view, I am talking about. For what purpose buyer is remitting the foreign currency? Education and medical. Or other purpose, whatever it is. Up to 7 lakh, 0. Whether you are remitting before 30th September or after 30th September, doesn't matter. Whether you are remitting for education or medical or other purpose, doesn't matter. Up to 7 it is 0. The moment it crosses 7. Now, for what purpose you are remitting LC? For what purpose you are remitting LC? The moment it crosses 7. Throughout the year, I am not thinking of dates now. The moment total, see, overseas tour package, keep it aside, don't consider that. Are you remitting for what purpose? You are remitting for what purpose? Education, medical or other purpose, whatever it is. How much you are remitting? More than 7. Up to 7, 0. You remitted more than 7. Right now you are remitting another 3 lakhs extra. 7 is over already. 3 lakhs you are remitting. Is it before 1st October? Check out. Yes, it is before 1st October. What purpose? I will not see 5%. Suppose if it is after 1st October, I will see what purpose? Education and medical 5%. Other than medication and medical 20%. That's it. Easy. Over. The provision is over. That's it. Are you clear? You all know this? Thank you. Thank you. So entire this questionnaire is over. This questionnaire is over. Are you clear? All of you? Yes. That's what. Okay. That's it. So with this 206C 1G Remittances under LRS and overseas tour package purchase is also over. With this, TCS provisions is also over. Predominantly it is over. So okay, fine, we'll take a small break and then get back and discuss one problem that is there on this, I guess. So once it is over, MTP will start. Confident? Yes, finally, test your knowledge questions in clubbing provisions. Mr. Sharma has 4 children consisting 2 daughters and 2 sons. So he's having 4 children, 2 daughters and 2 sons. The annual income of 2 daughters for 9,000 and 4,500. So for each daughter, one daughter 9,000, another one 4,500. And of sons it is 6,200 and 4,300. Now remember, they have not given any information regarding the age of the children. Let us assume all the 4 children were minor. The daughter who has an income of 4,500. So one daughter is there, no, who is having 4,500 income, no, he is suffering from disability. So if a minor child is suffering from disability, do we apply clubbing provision in respect of their income? No, that income is taxable in their hands only. Compute the amount of income earned by minor child to be clubbed. Very simple. So one daughter is getting 9,000 income, daughter 1. This is subject to clubbing. Daughter 2 4,500 is not subject to clubbing. Son number 1 6,200, son number 2 4,300. For all of them 1,500 exemption is there, na? So balance is what? 7,500. So here it is 4,700. Here it is some, so 2,800. So how much is total to be clubbed? 7,500 plus 4,700 plus 2,800. 15,000 rupees is to be clubbed. Simple. Answer is over. Yeah, the answer is 15,000 income to be clubbed. Getting it? See, you should present like this only in exam. That's why I always ask you, I always insist on you to read the answer once again after listening to my class. I am only here to explain this. Now question number 2. During the previous year 22-23, the following transactions occurred in respect of Mr. A. Okay, let us see. Mr. A has a fixed deposit of rupees 5 lakhs in Bank of India. So in a bank, he has a 5 lakh deposit. He instructed the bank to credit the interest on deposit at 9% from 22 April to March 23, means 1 full year interest, to the savings account of Mr. B, son of his brother, to help him in his education. So my brother is there to his son. I instructed the bank. So 5 lakhs multiplied by 9%, approximately 45,000. I told bank to transfer this income to my brother. Transfer of income without transfer of asset. Tax in the hands of transferor. So it is taxable in the hands of A only. Correct? Now Mr. A, he is having 75% profit share in a partnership firm. Okay, he is having substantial interest in the firm. Mrs. A received a commission of 25,000 from the firm for promoting sales of the firm. Okay, so for promoting sales of the firm, she got commission and she has no technical professional qualification. So this 25,000 is taxed in the hands of A. Okay, next. Mr. A gifted a flat to Mrs. A. Transfer of house property to spouse on April 1st, 2022. On April 1, 2022. Let us assume it is without consideration. See, they said gifted. No, gifted means without consideration. Any transfer of house property to spouse without consideration, the transferor is deemed to be the owner. So income from house property computed is almost 52. For entire 52,000, it is taxable in the hands of A only because of section 27 deemed owner concept. Mr. A, he gifted 2 lakh rupee to his minor son. Okay, gifted to son. For son, it is exempted. Who invested the same in a business and he derived income of 20,000 from the investment. So he invested in a business. He just got 20,000 income. Getting it? Let us assume there is no skill or talent in that business. So this 20,000 is taxed in the hands of either of the parent whose total income is higher. Now, till now we are only seeing Mr. A information, right? Yes or no, Mr. A information. So in whose hands this 20,000 rupees is clubbed, we don't know. Mother's income details also I think they have given it below. So let us see. Let us wait for that. Mr. A's minor son derived an income of 20,000 through activity involving application of skill. So he did some another business where his skill is there and got 20,000. When skill is used and got profit for that minor child, this is not subject to clubbing at all. Whereas from B, this business income is subject to clubbing. This business income, they specifically told skill and talent, so not subject to clubbing. Fine. During the year, Mr. A got a monthly pension of 10,000 rupees. He had no other income. Mrs. A received a salary of 20,000 per month from a part-time job. So she is getting salary. Examine tax implications in each of the transaction. Compute the total income of A and Mrs. A and their minor child, assuming he is not opting for 115 BAC. Now fine. Mr. A, Mrs. A, and minor son who is having business. Getting it? Minor son, business income with the skill and talent. Business income with the skill and talent. It is taxed in the hands of minor only. Remember. Mr. A is getting pension income. Correct? Mr. A is getting what? Monthly pension of 10,000 rupees. So which means how much it is? 1,20,000 rupees. Mrs. A is getting salary income. How much is the salary? He is getting 20,000 from a part-time job. So which means 2,40,000 is his gross salary minus deduction. Standard deduction under section 16 is there, which is 50,000. So which means my wife's income is 2,40,000 minus 50, which is 1,90,000 only. Now next 4. Now we will see. Now first case, Mr. A had a fixed deposit. This 45,000 is clubbed in the hands of A only, no? So clubbing under section 60. Transfer of income without transfer of asset. How much is that? 45,000 is taxed in the hands of the Mr. A. Fifth one. Now 64 subsection 1 clause 2 clubbing. Clubbing under section 64 subsection 1 clause 2. How much? 25,000. Remuneration to spouse in a concern in which husband is having substantial interest, taxed in the hands of the husband. Sixth one. C point you see. Mr. A gifted a flat to spouse. 52,000 was the income. So section 27 deemed owner concept. Accordingly, house property income was how much? House property income is how much? 52,000. Then they are having minor incomes. This is not subject to clubbing. Whereas D point is subject to clubbing. Now in whose hands it should be clubbed? Mother or father? We should see that. Now before minor income is clubbed with parents, whose income is higher we should check. Now let us total it. Now let us total the incomes. So minor income is 20,000. So this is closed with that. Now here mother income is 1,90,000 before minor's income is clubbed. Father income 1,20,000 plus 45 plus 25 52,000. How much? 2,42,000. 2,42,000. By the way, he is getting pension. Mr. A is getting pension. This pension is, let us assume, from employment. This pension is from employment. This is taxable under income from salary. Pension received by Mr. A, no, it is taxable under income from salary. So Mr. A will also get 50,000 exemption. Sorry, I forgot to mention. So what is it? 70,000 only salary income. Now let us check. So 70 pension. See, pension is received from employer generally. If any pension is received by employee from the employer after retirement, still it is taxable under salaries only. 70 plus 45. Once it is taxable under salaries, there is a standard deduction up to 50,000 is available under salary set of income. We have not yet covered salary set of income. We'll discuss. So now 70,000 is only pension income which is taxable. So 70,000. Remember, this is not family pension. Family pension means it is a pension received by family members of the deceased employee. Employee died, family members receive. That is taxable for them under other sources. If the person is directly receiving pension, which is not a family pension, taxable under salary set only. 70,000 plus 45,000 plus 25,000 plus 52,000. So it is 1,92,000 ma. It is 1,92,000. So close, no? So close. Now tell me, mother income or father income, whose is higher? Father income is higher. Now one point is there here. What point? Father no, he gifted 2 lakhs to his minor son who invested in the business where he got 20,000 in income on that investment. They have not given any skill or talent points. So this is subject to clubbing. Now whose hands it is subject to clubbing? 20,000 is taxed in the hands of the parent. Now remember, 1,500, 1032 exemption. So now 18,500 is clubbed. So 1,92,000 plus 20,000 minus 1,500. So what is the father income? Ultimately total income 2,10,500 is the father's income. Mother's income, final income is 1,90,000. Whereas minor son income from the business where he is having talent 20,000. Yeah. So pension income is taxable under income from salary. So that's it. House property, this one. So income before including 64 1 year minors income clubbing, before including minors clubbing, whose income is higher? Father's income is higher. So accordingly, so in their hands, this 20,000 minus 1500, 18,500 is clubbed. So that's it. So we have got the correct answers. Fine. Next, you read this entire answer carefully. You will feel like a revision of the entire chapter. Please, please. Question number 3. Mr. A has gifted a house property valued at 50 lakh rupee to his wife Mrs. B. Section 27 gifted to spouse house property without consideration. 27 will apply. A transferor is treated as deemed owner under section 27. Who in turn gifted the same to Mrs. C, their daughter-in-law. It's okay. Afterwards, my wife to whom they gifted, that doesn't matter. The house was rented at 25,000 per month throughout the year. Compute the total income of Mr. A, Mrs. C. Okay, fine. So my daughter-in-law income is how much? My income is how much? They're asking. First of all, I gifted this to my wife. So I am treated as owner. So 25,000 into 12, 3 lakh gross annual value. Municipal taxes they have not given. So that is the net annual value minus 30%. So 2,10,000. What is it? Mr. A income is 2,10,000. Whereas Mrs. C income 0 in this. That's it. Now they're asking another question. Will your answer be different if the said property was gifted to his son, that is husband of Mrs. C? If I gift a house property to son, no, clubbing will not apply. So entire 2,10,000 is taxable in the hands of my son. That's it. In case property was gifted to son, the income of 2,10,000 will be taxed in the hands of the son, not in the hands of the father. Whereas if it is gifted to my wife, no, entire 2,10,000 from the property being A's son's wife would be including the income of A, applying the provisions of 27 and 64(1) clause 6. So therefore, it is not taxable in the hands of Mrs. C. So income from let out property is 2,10,000. That is taxable in the hands of Mr. A because he is treated as deemed owner under section 27 clause 1. Next, 4th one. A proprietary business was started by Srimati Rani in the year 2020. So 2020, okay, she started proprietary business. As on 1st April 21, which means 2021-22 information they're giving. As on 1st April, her capital in the business was 3 lakh. Okay. You see, her husband, no, he gifted another 2 lakh rupee on 10th April. Remember, as on 1st April, husband gift is not there. As on the beginning date of the financial year when the business is there. Business is started in 2020. So for 2020, whatever the income she got, nothing is clubbed. 2021 also, 21-22, as on beginning date, husband gift money is not there. Husband gifted on 10th April after the financial year is started. If the asset is gifted to spouse and she invested in the business, not as on the first date of that relevant previous year, but I gifted later on. For that year, clubbing will not apply for that year. You see now. So on 10th April, I gifted. Therefore, for 21-22, if I have any profit, nothing is clubbed. Nothing is clubbed. Fine. To her, and such sum is invested by Rani in her business on the same date. Okay. 10th April, I gifted 2 lakh rupee extra, and that is also invested. Now, Srimati Rani earned a profit from her business for the financial year 21-22, 1,50,000. Oh, for that year, she got 1,50,000 profit. And you see, for the financial year 20-23, she earned 3,90,000 profit. Oh, so they have given next year information also. Now compute the income to be clubbed in the hands of Rani's husband for the assessment year 23-24. So they are asking for 22-23 previous year. Fine. Now I will check 21-22. For previous year 21-22, what is the profit of the Rani's business? 1,50,000. 1,50,000. What is the opening capital of the Rani as on the date? 3 lakhs is the opening capital. Yes or no? So 3 lakh. You see here 3 lakh. Now on 10th April, husband gifted no how much? 2 lakh. For this entire year, what is the profit? 1,50,000. So totally, what is the closing capital? What is the closing capital? Let us assume she did not withdraw single rupee of profit also. So 1,50,000 plus 3 lakh plus 2 lakhs. So total closing capital is 6,50,000, which will be the opening capital for previous year 22-23. How much is the opening capital here? 6,50,000. Now remember, in this 2 lakh rupee gifted asset is there. Husband gifted the money, no, that money. So as on 1/4/2022, In the opening capital, gift money of 2 lakhs is there. Whereas on 1/4/2021, as on the date, is there any gifted money there from the husband? Zero. Therefore, for 21-22, 1 lakh profit, 1,50,000 profit, entire profit not at all subject to clubbing, entirely taxable in the hands of wife only. Whereas in 22 financial year, what is the profit they have given? 3,90,000. Out of this, how much is liable for clubbing? Out of 3,90,000, this 3,90,000 is profit for 22-23 year. So law assumes 3,90,000 multiplied by opening date. How much is the total capital? 6,50,000 is the total capital. Out of 6,50,000, how much is the gifted money? 2 lakhs. So this much only subject to clubbing. Getting it? 3,90,000 divided by 6. 3,90,000 divided by 6,50,000 multiplied by 2 lakhs. 1,20,000 is only subject to clubbing in the hands of husband of Srimati Rani. This is the answer. Now you should understand at least. For 21-22, why we didn't club anything? Why? What is the reason? In 21-22, 10th April itself we gave, but still on 1st April, beginning date of the financial year, gift amount is not there as part of the capital of that business. So no clubbing for that year entire profit. Next year, this profit is reinvested. No, automatically, if nothing is given, what we assume, this entire profit is reinvested in the next year. So this entire profit will be added to the capital. As on opening date, on the total capital, whatever gift portion is there, proportionately we will club. So 1,20,000 is subject to clubbing. Capital contribution out of the gift, 1,20,000 is subject to clubbing. Therefore, income to be clubbed in the hands of Srimati Rani is a husband for assessment year 23-24. Nothing but previous year 22-23 is 1,20,000. 1,00,000. Please solve this entire problem once again. Please. Very important. Question number 5. Mr. B is Karta of the HUF, whose members derive income as below. So in a HUF, Karta is there. So the HUF members were given some income from B's profession 45,000. Okay. Mrs. B's salary as fashion designer 76,000. Remember, this is gross salary minus 50,000 deduction is there. No. So what is the salary income of spouse? 26,000. Whereas professional income of husband is what? 45,000. So whose income is higher? Father or mother? Father. Fine. Let us see. Then minors and D, interest on fixed deposit 10,000 rupees. Getting it? This 10,000 subject is clubbing. Minor daughter P earning profit from sport, not subject to clubbing. D is winning from lottery income. D, minors and D, he's having lottery 1,95,000. Again, it is subject to clubbing. Now, father is having 45,000, business income. Mother is having only 26,000 salary income. Before clubbing of children's income, whose income is higher? Father. So in the hands of the father, this interest is clubbed and winning from lottery is clubbed. So 45,000 plus 10,000 minus 1,500. So 8,500 in the hands of the father. Remember. And even 1,95,000 D's winning is also clubbed in the hands of the father. So father income is 45,000 and interest income 8,500 is clubbed. 1,95,000 is also clubbed in the hands of the father. Total father income is 2,48,500. Whereas mother income is just 26,000. Why? Because salary income is 76 minus standard deduction 50,000, 26,000. Now actually they didn't ask. They have not given the information relating what we need to compute. We computed the answer, final answer. But they have given tax implications. They just have given tax implications. So clubbing of income and tax implications. They just mentioned 45,000 is B's profession, taxable in the hands of B. Salary income 26,000 is taxable in the hands of wife. Income from fixed deposit 10,000 arising to minors and D. It is included in the hands of the father because before including this, father income is only great. But 1,500 exemption is available. 95,000 rupees for daughter, it is from sports. It is not subject to clubbing. 1,95,000 is lottery. This is again subject to clubbing in the hands of the father. That's it. That's what we did. Point you can ignore. Note point. Right now you can't understand that because this is related. That note point is related to TDS chapter. We'll discuss there. With this, all test your knowledge questions were also completed. See, logically, technically, test your knowledge questions you should solve on your own. But I'm explaining because you should not feel difficult. You try on your own, then you see these videos. Test your knowledge videos you should not see initially. I even covered that point in previous chapters also. Okay, take care. With this clubbing chapter is over. The next chapter will be, set off and carry forward. That's it. So let's continue. Test your knowledge questions. Approximately 10 were there here. So if I solve these 10 also in set off and carry forward alone, we have solved 15 questions. Fine. Anyhow, straight away let's solve. So compute gross total income of Mr. F for assessment year 23-24 from the information given below. Okay. So let's as usual same method. So first they have given income from house property which is already computed. So no more further adjustments.
Sorry,
Getting
I
it?
didn't know that one.
Yeah, sorry. Alexa got played suddenly. Yeah. So income from house property computed which is 1,25,000. So first income from house property, how much it is? 1,25,000. Okay. Then income from business, and see before providing for depreciation, that is 1,35,000. And definitely if at all this is a profit, and see the depreciation, current year depreciation how much it is? 26. So we can provide, no. So 1,25,000 over, and PGBP income before depreciation is how much it is? 1,35,000 profit. 1,35,000 minus current year depreciation, how much it is? 26,000. So these two also we have considered. So whatever I am considering here, I am just striking it off, just that, so that we will not repeatedly take it. Fine. Next. So what is the net PGBP income after current year depreciation minus 26,000 is equal to 1,09,000. Then short-term capital gains on sale of unlisted shares. Okay. Short-term capital gain on sale of unlisted shares, how much it is? 56,000. Fine. So 56,000. Okay. Then we have a long-term capital loss which is brought forward from previous assessment year, and during this year is there any long-term capital gain anywhere? Nothing. So this will be carry forwarded again. So no treatment for this. In this year problem, no treatment, because in this year we don't have any long-term capital gain. So we can't set up this loss. Getting it? So this we will be carry forwarded. So no adjustment on that. Income from tea business. You know, in PGBP, agriculture topic I kept pending. In that one of the topic is growing and manufacturing tea powder. Tea. In that no, we have not discussed, but I'm just telling you. In this, only 40% is treated as taxable business income. Remaining 60% is treated as agricultural income. So why? What is the reason? We will discuss an agricultural income topic completely. Now, in this, how much is taxable? Only 40% is taxable. So out of 1,20,000, tea business, how much is taxable? 40% of 1.2 lakh, which is 48,000. Correct? Next. Dividend from Indian company carrying on agricultural operations. Even if the company carrying agriculture, doesn't matter. Dividend received from companies taxable under other sources. So now income from other sources. This is capital gains. This is PGBP, and this is house property. Now other sources. What is the income that we have? Dividend income. How much is the dividend income? 80,000 rupees. 80,000 rupees. Okay. Fine. We have listed out all. Now still what else is there? One more thing is there. You see, brought forward loss. Brought forward business loss belonging to 6 years ago. We can carry forward up to 8 years. So this is 7 years. 6 years back loss means right now which is here? 7th year this might be. So which can be used for set off 45,000. Now PGBP how much it is totally? 109,000 plus 48,000. How much until now? 1,57,000 minus 45,000 I can set off, right? So brought forward business loss. So I can set off. So this is also considered. So all the amounts are considered. So what is the net business income? Minus this one. So 1,12,000 is net business income. Net house property income. By the way, income from house property. Yeah, positive. Income from business. Okay, positive. That we considered. Everything is considered by us. Getting it? Now, so let us total it now. So what are all the items that we have to total? 125, 112, 56, 80. I hope my answer is correct. Total 3,73,000. The total income is gross total income is 3,73,000. Gross total income means before reducing chapter 6A deductions, total of all heads of income plus clubbing provisions you apply plus set off and carry forward you do. After that, whatever the figure is there, that's called gross total income. From that we claim chapter 6A deductions, and then we get total income. On that only we compute tax. So 373. Let's see the answer. Correct only. 3,73,000, which is correct answer. So now, by the way, in this, what are all the consequences further? What are the consequences further? So this 90,000 rupees is there, na? Capital loss. This we will carry forward. This we will carry forward, and that's it. Only 90,000 will be carry forwarded further. That you need to write a note point. So long-term capital loss cannot be set off against short-term capital gain, because it can only be set off against long-term capital gain, and hence This long-term capital loss which is brought forwarded will be carry forwarded to the next year. That's it. Next. So that's question number 1. Next. Question number 2. So until here only the question is fine. Income from salary computed. Fine. So first getting it salary income. So income from salary computed, how much it is? 3 lakh. So getting it, 3 amount columns we will maintain. That's it. So within the head we will do here. Within the head. So intra head set off we will do within the head. Inter head set off we will do here. So final outcome we will come here. So that's how you can do. Fine. Loss from let out property minus 40,000. Fine. So let us not consider right now. Losses and all we consider later. So by the way, so income is considered now. Fine. Income from sugar business. This is PGBP. So PGBP. Getting it. Sugar business. Sugar. See, nothing is mentioned. It is not a specified business. You remember, I think business number 11. Income developing and building and operating a warehousing facility for storage of sugar. So that's a specified business under 35 AD. But they didn't mention like that, storage of sugar and all. They just mentioned sugar business. So it is not a specified business. So we assume that it is not a storage of sugar business. So it is not 35 AD. Fine, that is how much? 50,000. Fine. Next. So this is considered. Short-term capital loss. These are all losses. Losses we will discuss at a time later. Long-term capital gain. How much? 40,000. So capital gains. Long-term capital gain. How much? 40,000. Okay. Then we have a dividend income which is 5,000. So other sources. Dividend income. How much is the dividend income? 5,000. Okay. So this also we considered. Income received from lottery. 50,000. Remember, lottery income, there no question of set off. So directly outer column we will put 50,000. Straight away we will put outer column 50,000. So because on this you can't use any set off. And remember, from lottery you have 50,000. From card game you have 6,000. Sometimes in exam, here they said net gross, right? Sometimes in exam they will give you 35,000 here and they'll put net here. Instead of gross they'll put net and they'll give you net gain 35,000. Net means 50,000 minus 30%. That is net. 30% is TDS. Remember, if I win 50,000 rupees lottery, they deducted 15,000 tax and then paid me balance amount only. But what is my income? 50,000 is my income. So if they give lottery income net, that amount divided by 30% is a TDS rate on the lottery. Sir, what is this TDS rate? All that we will discuss in TDS chapter. Getting it? So that's it. So sometimes that will be, but anyhow here they have given gross only. So winning from card games, gross only they have given. So 50 plus 6. So both to put together, winning the lottery and card game, both put together, 56,000. How much is that? 56,000. Because on this no adjustments further. Next. Agriculture income. Exempt. Agriculture income is not at all taxable. It is exempt under 10 clause 1. Then we have short-term capital loss, bank fixed deposit. Okay, we have interest bank deposit also. So interest from banks. How much it is? 5,000 again. Okay. So interest from bank 5,000. Now let us apply the losses. Now we have house property loss. What is loss? House property. Now house property loss I can set off against salary, I can set off against PGBP, I can set off against capital gains, all that. Now first of all, do we have any capital gains here? So you see here this amount, this one. I have a loss. So yeah, capital gain is there. But you see already long-term capital loss is there. So is there any long-term capital gain is there? Short-term capital loss is there. So first what I will do is short-term capital loss I will set off here. Short-term capital loss I will set off. Up to how much? 40,000 I will set off. Actually 60,000 is there. But only 40,000 I can set off. Remaining 20 I will carry forward. So set off both. So capital gains net result is what? 0. So this we considered. Short-term capital loss we considered. How much we set off with long-term capital gain? 40,000 we set off with long-term capital gain. Balance 20 we will carry forward. We will carry forward. So now capital gains head of income will become 0. Final result over. Next. Then we have, okay, first let us see BGBP. Loss from iron ore business. How much it is? 1,20,000. Iron ore business. Okay. Now how much we have business income? Sugar business we have 50,000. Then we have any other business income? No. Fine. So minus iron ore business. Iron ore. How much is the loss? 1,20,000. So up to 50,000 I can set off, right? So what is my net PGBP income? 0. So still loss is how much totally? 1,20,000. So 70,000 what I will carry forward. Okay. So this also considered. Now short-term capital loss we have, which is 10,000 current year. Current year short-term capital loss how much? 10,000. But already capital gains completely set off is over. Complete set off is over. Getting the point? So this I will simply carry forward. Simply I will carry forward. Then we have, so this I will carry forward. This I will carry forward because we can't set off with other heads. So because no, already one short-term capital loss we set off here. Here itself 20,000 minus is that which we carry forwarded. So this also we will carry forward. Next we have house property income. This I can set off only with the salary minus house property. What? How much is that? 40,000. Remember, if house property loss is more than 2, only up to 2 we can set off. But since it is 40, entire 40 we can set off. So 2,60,000 is the net result. So with this one. So fine, all points are we considered everything. Yeah, fine, very good. So now let us total the outer column itself. So 2,60,000, 56,000. 2,60,000 plus okay, interest income is there. No, these two also 10,000. So 2,60,000 plus 56,000 plus 10,000. 3,26,000 is the answer. I don't know whether it is correct or not. I hope so because we did correct process. Nah, if the process is correct, answer should be correct. 3,26,000 is the answer. Thank God. 3,26,000. So the short-term capital loss totally we will be carry forwarding 30,000. Iron ore business loss 70,000 we will be carry forward. That we already seen. That we have already discussed. Then question number 3. You see question number 3 almost so big. Fine. Question number 3. Mr. Batra furnishes the following information. Okay. So they have given short-term capital gain. So they have given capital gains income, which is short-term capital gain. How much is that? 1,40,000. 1,40,000. Okay. Loss from speculative business. That's a loss, no? This is a loss. So we will consider later. This we considered. Long-term capital gain on sale of land. Long-term capital gain on sale of land. How much is that? 30,000. First time listing out incomes, you see. So this also we consider now. Long-term capital loss on sale of unlisted shares. Okay, this is a loss. Losses and all we consider later. Fine. So this is a loss. So this is a loss and this is a loss. Fine. Income from business of textile after depreciation 50,000. Since I have given after depreciation, so PGBP. Okay. Textile business. How much is that? 50,000. Okay. So this we considered. Income from owning and maintaining race horses, which is other sources. Race horses. How much is the amount? 15,000. Then, so which we considered. Income from salary. How much is the salary income? So salary income is how much? Which is they have given computed amount. Suppose no, if they say gross salary 1 lakh, no. Suppose if they say gross salary 1 lakh, they have not given income from salary. They have given gross salary 1 lakh. 50,000 you claim deduction. Then balance is income from salary under head of income. Please be clear. So that way also they can modify. Since it is computed, we will take 1 lakh. Fine. Next, so this we considered. Loss from house property 40. So now 3 losses we have. Further, they have given losses from owning and maintaining race horses brought forward. Now brought forward losses. Now we have current year losses, then further losses. Fine. First, no loss from house property is there. Then long-term capital loss is there. Loss from speculation business is there. Remember, loss from speculation business can be carry forwarded, can be set up only with speculation. Here there is no speculation income. So I will carry forward. This I will carry forward. Correct? Fine. So that is over. Long-term capital loss on sale of shares, which it can be set up only against long-term capital gain. So how much is long-term capital gain? 30 only. So entire 30 is over. Yes or no? Still how much long-term capital gain is there? How much loss? 70,000 will be carry forwarded here. Yes or no? Here it is 70,000 will be carry forwarded. Here entire 60,000 will be carry forwarded. So here 70. So this 1 lakh also we adjusted. Only 30 we could set off. So 0. Fine. Now we still have short-term capital gain. Remember here in this. Then we have loss from house property. Now we have a short-term capital gain of 1,40,000. Just a minute. We have a short-term capital gain of 1,40,000. So now and we have house property loss, right? House property loss, no, I can set off here. I can set off here also, both. So let us assume I will set off against salaries or I will set off against capital gain minus house property loss, whichever is beneficial. House property loss I will set off. How much? Loss from house property 40,000. So what is the balance income, balance short-term capital gain? 1 lakh. Balance long-term capital gain 0. Sometimes no. Suppose no, house property loss 40,000 is there. And let us assume here it is short-term capital gain 111A. Let us assume. Here salary income is there. Now if I apply set off and carry forward total tax rate, no, SSC total income is less than 5 lakhs. Normally what is the rate of tax? 5%. But if it is short-term capital gain 111A, what is the rate of tax? 15%. Now if I have a loss, I can set off this loss against normal income which is taxable at 5% slab rate, short-term capital gain which is taxable at 15% flat rate. If I set up this loss with which gain, it will be beneficial. Which income if I set up, it will be beneficial. If I set up this loss with 5% taxable income, or if I set up this loss with 15% tax rate income, which is better? 15% tax rate is better. But here they have not given 111A, because it's not 111A, right? Short-term capital gain, they simply said, which is not 111A, general short-term capital gain. So this is normal rates of tax, this is normal rate. So anywhere I can set off. Suppose if it is taxable at 15%, 20% like that, and this is taxable at 5% like that. Against what I can set up this loss? Against that income which is taxable at higher rate. So use that. So fine. So I'm just telling you an alternative. Getting it? For that also in exam marks will be there. Fine, that is also over. So loss from house property, we set off against capital gain. Then loss from owning and maintaining race horses, 25,000. So race horses, brought forward loss. Which year it belongs to? 2021. So now it can be carry forward 21, 22. 22, 23, 23, 24. Oh my god, this is third year already. So which means only one more year is there. Fine, 25,000 is there. Whereas here income is 15,000. So up to 15 I can set off. So which means 10,000 will be carry forwarded to assessment year 24, 25, which is the last year for that loss. Fine. So net result is 0. Now brought forward loss from business of textile 60,000. Loss pertains to 15-16 assessment year. Oh my god. So 16-17, 17-18, 18-19, 19-20, 20-21, 22-23, 23-24. So this is first year. So that is 0. 1, 2, 3, 4, 5, 6, 7. Thank god we are in the 7th assessment year. So this is eligible for set off 60,000. Now brought forward loss. So I can set off here. Brought forward business loss. Brought forward business loss, how much? 60,000, but we have only 50. So only 50 we can set off. So balance 10,000. So balance 10,000 we can carry forward to next 1 year only, because that's the last year. Assessment year 24, 25 is the last year. Fine. So 0. Now, so this final output is 0. This final output is 0. This output is 0. Whereas here it is 1 lakh. How much is the total income? 2 lakhs is the total income. Gross total income is 2 lakhs. I hope you understood how I solved. So my process is correct? Yes, absolutely. If you follow the process rightly in the way which I tell, getting it, which exactly you will get correct answer. 100% damn sure correct answer. So what are the losses? Speculation loss 60,000 to be carry forwarded. Long-term capital loss to be carry forwarded. Income from owning and maintaining horses 10,000 to be carry forwarded. That's it. Next. Illustration number 4. I hope you are making a notes of it, or if not, anyhow solution is given. My notes is not required. Fine. Next. Mr. A furnishes you the following information for the year 31st March 2023. Okay. Income from plying of vehicles computed as per the books. So as per the books, 3,20,000 is the income. He owned 5 goods carriage vehicles throughout the year. But fine, let us compute. So income from plying. See, they have given vehicles information, means they are asking you to compute even presumptive basis also. Let us see the entire question. Okay, don't worry. So 3,20,000. First let us compute normally, not presumptive. Whatever they have given based on that. Income from retail trade garment computed as per books. So sales data they have given. And Mr. A, he declared income on presumptive basis under 44 AD for the first time in assessment year 22-23. So last assessment year he declared. Continuously 5 assessment years he should follow presumptive basis, right? Assume 10% of the turnover was received in cash. Okay, 90% is received in other than cash. On the 90% of the turnover, what is presumptive income? 66%. Income itself is 6%. On the 10% turnover, what is the presumptive income? 8%. So because he received through Acconting check, all that, fine, that is 7,50,000. Normal rates I'll compute it. Let me compute normally. So income from trading of garments, 7,50,000. Okay. And he has a brought forward depreciation. Okay, unabsorbed depreciation. I can set off, no, because unabsorbed depreciation is discussed under 32 subsection 2. I can set off it against current year business income. How much it is? 1 lakh. So how much it is? 1 lakh. So net result is what? 7,50,000 plus 3,20,000 minus 1 lakh. So 9,70,000 it net result. But remember, this SS is following presumptive basis, which means we have to compute set off and carry forward gross total income on presumptive basis. Let us compute under presumptive basis. So presumptive basis of calculation. So plying of vehicles. And remember, plying of vehicles means, once again I'll restart this. Income from plying of vehicles, he owns 5 light good vehicles throughout the year. So entire 12 months, 5 light good vehicles were there. For light good vehicle, what's the presumptive income? 7,500 per month or part of a month. How much is that? So 12 multiplied by 5 into 7,500. How much? 4,50,000 is presumptive income. Okay. Then his turnover from retail business is how much? Retail business. Non-cash turnover. Cash turnover. Cash turnover is 10%. Ma. So this is total turnover. 1,35,70,000 multiplied by 10%. So 13,57,000. 13,57,000. So this is cash turnover. Divided by 10 into 90%. 1,22,13,000. This is non-cash. On this 6% is presumptive income. On this 8% is presumptive income. 122,13,000 into 6%. How much it is? 7,32,780. Now 1,35,000 into 13,57,000 into 8%. 1,08,560. So total PGBP business income is how much? 4,50,000 plus 732. 4,50,000 plus 7,32,780 plus 108,560 is equal to 12,91,340. This is presumptive income. Now remember. Now presumptive income we compute. Now brought forward depreciation loss is how much? 1 lakh. You know what? If you remember presumptive taxation 44AD, 44AU, all the sections, all the deductions under 30 to 38, we assume that we are deemed to have been allowed. Depreciation, everything, we assume that it is allowed already. Tell me, when we assume that all the deductions, including depreciation, is deemed to have been already claimed while calculating presumptive income, do we once again consider brought forward depreciation loss? But if brought forward business loss is there, not depreciation loss, that we can set off. But brought forward depreciation loss, this comes under section 32. When we calculate income under presumptive taxation, all the deductions under 30 to 38 are deemed to have been allowed. This is the final result under PGBP. That's it. So 12,91,340. So this is the income. Now compute taxable income of A and tax liability. Okay, we will see tax liability only for this. So what is Mr. A? What is his A? Nothing is given. So tax liability. Getting it? So how do we compute? 12,91,340 minus 10 lakhs. So this entire excess amount 2,91,000 is taxable at 30%. Up to 10 lakh, 1,12,500. So 291,340 multiplied by 3% is 1,12,500 plus 4%. 2,07,898. This is the tax liability. So presumptive income, right? 2,07,900. That's what we computed, no? 898. Nearest 10 rupees they will round off. So 900. That's it. So our answer is absolutely correct. Suppose if at all he does not follow presumptive taxation, 9,70,000 is his income. So that's what we also computed. Without presumptive taxation, what is his income? 9,70,000. That's it. Next. Question number 5. Okay, fine. Question number 5, loss from speculation. Since it's a loss, we will discuss losses later. Income from speculation business, how much it is? 5,000. So PGBP, speculation income. How much it is? 5,000. Okay. Loss from specified, this is loss again. Income from salary computed, 3 lakhs. How much it is? 3 lakhs. Okay. Loss from let out. So let us not consider. Remember the loss from let out property. House property loss is 2.5. When I set off with other head of income, how much I can set off? 2 lakhs only I can set off. 50,000 I will carry forward. Remember that point. Income from trading business. Okay. Trading income. How much is that income? 45,000. So I will strike this because I considered. Long-term capital gain on sale of urban land. Capital gains. Long-term capital gain, that too is a land. Getting it. How much it is? 2 lakhs. So I will strike off. Then long-term capital loss. This is loss. So this I will keep pending. Getting it. So loss. Because losses and all we consider. Again, long-term capital loss on sale of listed securities, STT paid at the time of acquisition. This is 112A loss. Remember, not gain, loss. We can consider, no. How much is that? 1 lakh, 1 or 2,000, we'll consider later. Loss from owning and maintaining racehorses pertaining to last year, last before assessment year. But this year, do we have any such income? No. So this we will simply again carry forward. Brought forward loss from trading business 5,000 related to assessment year 18-19. So since right now we are in 8th year, this brought forward trading loss I can set off. So I can set off brought forward trading loss. Okay. So this I can set off. So this is also over. This we will carry forward simply. So treatment is over. We consider. Now let us look at the losses. Now we have loss from speculative business. We have loss from specified business. We know very well. Loss from specified business we can carry forward. I mean, we can only set off with the specified business income, but here specified business income is not given. Therefore, this will be carry forwarded. And here 2,000 will be carry forwarded. That's it. Now, loss from house property 50,000 is carry forwarded, but 2 lakhs we can set off. Fine. Let's come to that. Later. Fine. So now we have speculation business loss, right? Let us strike it off. So how much we have speculation income? 5,000. So 5,000 speculation loss is there, no? That we can set off. So speculation loss from one speculation business is 25, whereas income from another speculation 5. So these two I can set off. Yes or no? The effect is 0. Whereas here the effect is 40,000. Remember, remaining speculation loss 20,000 rupees I will carry forward. Correct? So specified business loss 20,000 I will carry forward. Then salary over. Loss from house property. So loss from house property, no, I will set off against salary, and I have capital gain also. Fine. First I will say capital gains. Long-term capital gain 2 lakhs. I already added here. Now we have long-term capital loss on sale of shares, STT not paid 75,000. Long-term capital loss on listed shares 1 or 2. 2 losses we have. Both the losses we can set off now. And 1 or 2,000 both I can set off. Yes or no? So 2 lakhs minus 1 or 2,000 minus 75,000. What is the balance capital gain? 23,000 is the balance capital gain. Okay. Now you see. So this also I adjusted, Now I have still 2,50,000 house property loss. Remember, this I can set up with other heads up to 2 lakhs only. Now I have other heads of income. PGBP income is there, salary is there, capital gain is there. Remember, these two incomes, no, anyhow less than 5 lakhs, taxable at 5% slab rate. Whereas long-term capital gain is taxable at 20%. So now house property loss up to 2 lakhs I can set off. No. Here I will set off 23,000. So capital gain income will become 0. So there is no income which is taxable at 20%. So I set it off. Now still out of 2 lakh, 23,000 is there now. 1 lakh 77 is there. That 177 against what I can use? Against salaries I can set off happily. So what is the balance salary income? 1 lakh 23,000 is the balance salary income. Balance PGBP income is 40,000. I think all other adjustments we have done, right? So 2.5 also we considered. Remember, in this 50,000 will be carry forwarded. So speculation loss 20 carry forwarded, specified business loss 20 carry forwarded, and house property loss 50 to be carry forwarded. And here 2,000 rupees horses related thing will be carry for 4 carry forward of losses. Fine, that's it. So now, so 40,000 is taxable, 123. So 40,000 plus 123. Here it becomes 0. So 1,63,000 is the final answer. I hope I'm correct. I hope you also solved along with me. analyzed along with me. I hope you also understood the answer. Now let's look at, thank God, 1,63,000. So there are 4 losses to be carry forwarded. Yes, house property to be carry forwarded. Items eligible for carry forward. Speculation loss. Specified income. Yes, our carry forward provision is also correct. Fine. Here we have information. 6th question. Mr. Garg, a resident individual, furnishes the following particulars of his income and other details. So salary income is there, which is already computed. Salary income. Shall I do one thing? I'll explain directly there itself. Okay. Salary income. Okay. Tick. Income from business, positive, tick. Long-term capital gain, positive, tick. Loss. Let us consider losses later. Then they have unabsorbed depreciation brought forward. So previous year depreciation 11,000. Loss from speculation. Now is there any speculation income here? Nothing. So this will be carry forwarded again. Short-term capital loss 9,800. Is there any gains here? Capital gain? Yes. So here in the current year we have a capital gain long-term. Getting it? Whereas short-term capital loss is there. So strike off. Getting it? This 9,800 I can set off here. So what is the net long-term capital gain? 1,000 rupees only still we have. Fine. Then unabsorbed depreciation 11. By the way, loss on maintenance of racehorses only can be set off against income from racehorses. So 15,000 to be carry forwarded. This is balance gain. This is not carry forward. Balance gain. Loss from gambling. Winning from gambling is taxable straight by 30%. Any loss on that gambling, ignore. Because in respect of winning, gambling and all, loss and all, question is not permitted. The question of loss itself is not existing in income tax law. So loss from race horses maintenance is permitted. Loss from horse races, that is to be ignored. If I participate in horse race and get a loss, ignore, because that's a gambling related loss. Winnings related loss. For winnings, no horse races, no, if I spend any money, nothing is considered. And if I get any winning, entire amount is taxable at flat 30%, no deduction. Can I set off any loss? Against the winning? Nothing. Can I claim chapter 6A deductions from the winnings? Nothing. If you get any winning, fully taxable at 30. If you have a loss, ignore. That's the treatment of income tax department on winning related things. Fine. So salary we considered, income from business we considered. This we adjusted and 1,000 rupees balance amount. This we have decided to carry forward. This we will ignore. Now unabsorbed depreciation. Speculation business we simply had to carry forward. Short-term capital loss already we adjusted set off. Now unabsorbed depreciation is there. Unabsorbed depreciation, what we will do? It will be set off against business. So income from business is how much? 66 is there. Here unabsorbed depreciation 11,000 you reduce. So what is the balance amount? 66,000 minus 11,000. 55,000 is the balance amount. So balance amount taxable is 55,000. Balance capital gain taxable is 1,000. Here it is 1,000. Income from salary taxable is balance 15,000. These are all taxable items. So 15 plus 55 plus 1,000. 3 taxable. Remaining ignore. This is to be carried forward. This already set off is done. Okay, over answer is. So 55,000 plus 15,000 plus 1,000. 71,000 is the answer. These 3 only. After applying all the set off everything. That's it. Easy. Question number 7. Here chapter 6A. Life insurance premium paid. This is actually ATC deduction. Chapter 6A. If you don't understand, don't worry. Right now I will tell you what is the treatment. But in chapter 6A you will understand clearly. The following are details relating to Srivatsan, a resident Indian, aged 57, relating to the following year. Okay. Compute total income and eligible items eligible for carry forward, assuming that he is not having 115 ABC. Fine, we'll solve like this itself. So salary income, how much? 2,20,000. So 2,20,000. Loss from house property, let us consider. Loss from cloth business, let us consider. Income from speculation business, 30. How much? 30. Okay. Then loss from specified business. It can only be set off against specified business. So this amount will be carry forwarded. 20K will be carry forwarded. So this I will strike off. Long-term capital gain on sale of urban land, 2.5 lakh. Long-term capital gain, 2.5 lakh. So considered. Loss from card games. If winning is there, fully taxable. If any loss is there, ignore. This is ignore. Income from betting, goss, 45. Now you may have it out. So these two can I set up? Huh? No. Each winning is treated as a separate thing. If at all there is a positive income, 30%. If it is a negative, ignore. That's the logic. Remember. 45, betting income. And remember, betting income is straight away taxable. No set off of losses permitted against that. Then life insurance premium 10% paid. This we will discuss later. So betting income are considered. So that's it. Now let us look at losses. So this loss 25, 20 will be carried for loss from cloth business sum of 2,40,000. So here speculation business is there, no. Cloth business loss. I can set off how much? 30,000. So what is the balance? 0. Still how much cloth business loss is there? Cloth business, how much is there actually loss? 240. 30 only we could set off. 2.4 lakh, only 30. Still how much balance is there? 2.1 lakh is there balance. That 2.1 lakh I can set off with capital gains. Na? Loss under the head, loss under one head of income can be set off with other heads except salary. So 2.1 lakh I will set off here. PGBP loss. So balance capital gain is what? 40,000. So this entire 240 we considered. Now loss from house property. Since it is less than 2 lakhs, I can set off with other heads. Straight away I will set off with the salaries. Getting not salary. Sorry. I have PGBP business, no. So 40 I will set off here. So house property loss. Remaining house property loss 1,50,000 I will set off here. Getting it? How much? 70,000 is the balance. This thing. Balance capital gain is 0. So balance salary income is, this is salary. This is PGBP 0. Capital gain 0. Betting 45. So now you see here. 70 plus 45, how much it is? 70,000 plus 45,000, how much it is? 1,15,000. 1,15,000 is the gross total income. Now they have given one adjustment. Insurance premium paid 10% of sum assured. 45,000 insurance premium is paid. So out of 1,15,000, betting income is how much? 45. So this is not eligible for any deduction and all. So 45,000 is flat taxable at 30%. Whereas what is the normal income? Salary income is there 70,000. This is eligible for chapter 6A. So 45,000 I will reduce. Insurance premium. So balance income is 25,000. Getting the point? So what is the total income? 25 plus 45. 70,000 is the net total income. That's it. So the answer. Hey, what happened? We got a different answer. We did right answer. Here they did wrong answer. They did wrong answer. We did right. What they did is technically correct, but beneficially it is not correct. Like I'll show you. Now, house property loss we have, right? House property loss. How much is the house property loss? 1,50,000 we set off with salary. 40,000 we set off with capital gain. Total 1.9 lakh. What they did, you know, entire 1.9 they set off with salary. Because of that, salary income became how much? 30. Capital gain balance 40,000 as it is there. But in our answer, capital gain we made it 0. So first house property loss we set off against capital gains. Why we set off against capital gains? You know, capital gains, long-term capital gain. No, it is not eligible for chapter 6A. Chapter 6A deduction you will not get. So what they did, you see, 30, they set off entire house property against what? They set off entire house property loss against salary. So balance 40,000 capital gain as it is there. And this is there. So 115. Now 115, you split into 3 parts. Winnings 45,000. Capital gain 40,000. Salary, normal income is 30. On this chapter 6A, you won't get 0. Whereas chapter 6A amount is how much? 45,000. Sorry. Deduction is how much actually? 45,000 they paid. But since normal income is 30, only normal income you can claim deduction. So remaining 85,000 is the total income. They did not opt. They did not choose beneficial provision. We have chosen beneficial provision and accordingly our answer is absolutely correct. Our answer is correct. Total income is 70. In our answer, we did set off in a logical and beneficial way. House property loss we have. Long-term capital gain 40 there. Short salary income is there. First I set off with long-term. 40 over. Entire long-term became 0. Then I will set off with salary. So balance salary became 70,000. Since the salary is 70, chapter 6A I can claim up to 70, but 45 only is there chapter 6A. So 45 we claimed. But in the answer which they did know, normal income is only 30 in the total income, gross total. So chapter 6A cannot be claimed more than 30. So they did They did right loan. See, that answer also right, our answer also right. But which is more beneficial for the SSC? Our approach is more beneficial for the SSC. So whenever there is a loss and you have a special rate of income, capital gains, and you have a normal rate of income, set off with normal income first. Special income first. Because generally long-term capital gain, short-term capital gain, 111A, long-term capital gain, 112A, they are all not eligible for Chapter 6A deduction. If Chapter 6A deduction is higher amount, no. If you set off these losses, normal income will be higher. Just this itself is best example. Watch the past 10 minutes or 5 minutes once again, this problem alone. So we did more, even more better answer than what they gave. Next. Can you solve these two questions at least on your own? Because mostly we have solved now. These two questions just, okay. So you solve it on your own. So self-study, 8, 9, 10. Self-study. Here no one point is there. Here the person no, he is receiving share of profit from a partnership firm. He is receiving share of profit from a partnership firm. Remember, share of profit received from partnership firm is exempt under 10(2)(a). So we will not consider. That is one important point. That's it. In the next question, he has received salary as a partner from partnership firm 7,50,000. Next question, 9th question. The same was allowed to the firm. See, 7,50,000 remuneration is paid to partner and firm also got deduction. A same was. Remember, how much salary received by working partner is taxable in his hands. How much ever allowed to the firm. I told this point very clearly. Whatever amount allowed to the firm as deduction, the same is taxable in the hands of the partner. Many things, this income is taxable under PGBP. For the partner it is PGBP. Though it's salary, partner is receiving from partnership. Employer-employer relationship is not there. Any salary interest received by a partner from partnership firm, taxable under PGBP, charging section 28 clause 5. Further, they have given this point. The same was allowed to the firm. What is the importance of this sentence? Allowed to the firm. If it is allowed to the firm, no, for me it is taxable. Suppose no, for firm 5 lakhs only allowed as deduction, but you received 7.5 lakh. For firm, as per income tax, 5 lakhs only expenditure. For you 5 lakhs only income, you may receive 750. That doesn't matter. Firm paid 750, you received 750. But how much firm got deduction? 5 only. For you also 5 only taxable. But here entire 7.5 firm got deduction. So you received 7.5. Firm got deduction 7.5. So for you also 7.5 taxable. So that is the importance of this word. In exam, they may change this word. For the firm 5 lakhs only deduction allowed, whereas you received 750. But the firm 5 lakhs only deduction allowed. For you also 5 lakhs only taxable under PGB. So the salary interest received by a partner from the partnership firm is taxable as income from PGBP to the extent allowed to the firm as deduction. So that's one important observation here. The sentence important observation. Then 10th question. Almost all these are similar to what we solved earlier. It's not a big deal. You can solve it. Please 8, 9, 10 you solve it on your own. Definitely you will get the answer. Okay. Same how I did no. Same way you do it. 8th question alone I will explain, because brought forward loss, all that were given. 8th question I will explain. 9 and 10 you do on your own. 8th question. Mr. Rajat submits the following information for the financial year ending 31st March 2023. Decides compute the total income. What are the losses that can be carried forwarded? He has 2 houses. Income from house 1 after all deductions. Oh, 72,000 income is there. So house number 1 income how much? 72,000. Okay. House number 2 there is a loss. So loss we will consider later. So 72,000 income is over. But anyhow the current year loss and anyhow we have to apply intra-head set off no. So 30,000 first I will have to apply the loss. So 42,000 is the balance income from house property. Now other heads related loss I can apply. Set off. Over. He has 3 proprietary businesses. 3 businesses. One is textile, another one chemical, another one leather. 3 businesses is having. So textile business. Current year loss ma. This is current year. Brought forward loss. So from textile business both are losses only. So let us not consider these 2. Chemical business. Discontinued. So no profit loss. Bad debts allowed earlier, recovered during the year. So bad debts, earlier there is a bad debt and earlier it is allowed as deduction. Now it is recovered. 41 subsection 4. 35,000 rupees is taxable in the year in which it is recovered. In PGBP we have seen this point. So if bad debts is earlier allowed as deduction, now if it is recovered, it is taxable in the year in which it is recovered. To the extent allowed, it is taxable, entire 35,000. So bad debts recovered, how much it is? For 35. So we considered 35. So 35,000. Fine. Next, brought forward business loss we will consider later. This is a loss. This is a loss. This is a loss. This is a loss. Leather business profit. Oh, so leather business profit, how much? 1 lakh. You see, total PGBP until now is 1 lakh 35,000 total income, only income. Leather business we considered. Share of profit in a firm which he is a partner. You know, if a partner, no, he will get interest income from the firm, salary from the firm, share of profit also. Share of profit is exempted. 10 subsection 2a, 10 clause 2a, share of profit received by a partner from the firm is exempt, because firm will pay tax on the income. After paying tax, that is distributed to the partners. So that's exempt. Interest received by a partner, taxable in his hands. Salary received by a partner, taxable in his hands as business income. How much? Whatever firm got deduction, that much is taxed in the hands of the partner. So this is considered. Short-term capital gain. Short-term capital gain, how much it is? 60,000. Fine. Next, long-term capital loss. It can be set up only against long-term capital gain. So obviously carry forward, because there is no long-term capital gain during there. So we will carry forward. Contribution to LIC. This is ATC deduction, chapter 6A. So this is over treatment. This will carry forward. This is finally we will see. Now what are all the losses still we have? Brought forward business loss we have. Current year loss. First we will set of current year loss. So textile business loss minus textile business loss. How much? 50,000. So what is the net result? 85,000. Okay. So textile business loss current year first we will set off. First current year set off we have to apply. After that brought forward losses we should set off. Now we have brought forward losses. What are the brought forward losses that we have? 95,000 belonging to 1819 assessment year. Another 50,000 belonging to 1920. Which is oldest loss? 1819 is oldest loss. First I will set off. So I have 85 only. So 85 I can set off. So what is the net PGBP income? 10. So out of this 95, 85 we set off. So another 10,000 to be carry forwarded. And whereas this 50,000 entirely to be carry forwarded. So 50,000 is also over. So 50,000 will be carry forwarded. 10,000 will be carry forwarded. 35,000 will be carry forwarded. Now what is my income? So P house property income 42,000. Short-term capital gain 60,000. By the way, here short-term capital gain, which gain we will see? Short-term capital gain they simply mentioned. They did not mention 111 end of. So it's a normal rates of tax. So what is the total income? 1,02,000 minus chapter 6 deduction. LIC premium paid how much? 10,000. How much it is? 10,000. So therefore, what is the net income? 92,000 is the net income. That's it. Very good. So 92,000 is the net income. So 9th question and 10th question solve on your own mark. In 9th question, one of the important point I have already told you, this is 7,50,000 is taxable as PGBP income, normal business PGBP income like that. Remaining you solve it on your own. So with this, set off and carry forward all the problems we have covered, all the theory we have thoroughly discussed. So take care, all the very best. So the next chapter is chapter 6A deductions. And I hope, by the way, one more thing, I hope you are very happy with clubbing provisions, capital gains, and set off and carry forward. Kindly reply me on Telegram. You can reach me on Telegram at caramharsha, RAMHARSHACA. Getting it? Or you can reach me on Telegram by searching my mobile number also, 9700273087. And please give me your valuable feedback, how you are feeling about the tax classes and the all that completely comprehensively. And I definitely hope that you are learning new points and you're learning income tax in completely a new dimension. Okay, okay, take care. We'll continue in the next chapter. Directly we'll start chapter 6A deductions. Okay, take care. So let's continue. Test your knowledge questions in chapter 6A. So I hope you did proper revision of all the provisions of chapter 6A. Getting it? Then only you start listening to this. Then only you solve test your knowledge, because these are all comprehensive. These are all comprehensive questions. Like, fine. So let's see what are they. So examine the following statements with respect to the provisions of income tax. So they are asking you, they have given certain statements, so you need to examine those statements. If the statement is correct, you will say that it is correct, otherwise you will say it is incorrect. During the financial year 22-23, Mr. Amit, he paid interest on loan availed by him for his son's higher education. Okay, so he has paid an interest on loan. His son is already employed in a firm. Mr. Amit will get deduction under 80E. I think under 80E, there is no such condition called dependent. Getting it? Therefore, he can claim deduction. So the statement is correct. Getting it? So there is no condition under 80E that children must be dependent. Self, spouse and children. For these three, higher education loan can be taken, interest can be paid, and that can be claimed as deduction under 80E. And even in respect of a person for whom the individual is a legal guardian. So for his also he can take a loan for education, interest is eligible for deduction. Next, subscription to notified bonds of NABARD would qualify for deduction under 80C. Yes, subscription to notified bonds of NABARD is eligible for deduction under 80C. Eligible issues, yes or no? So under 80C, subscription to bonds issued by NABARD as central government would qualify for deduction under 80C. In order to be eligible to claim deduction under 80C, investment contribution subscription in eligible or approved modes should be made out of income chargeable to tax. They are saying you should only, in order to claim deduction under 80C, you should contribute out of income chargeable to tax. They are saying there is no such condition in 80C. In 80C, if you contribute, you will get deduction. So from which funds? Say you might have so many funds. You might receive agricultural income, you might receive capital gains, you might receive house property, you might receive salary income, all that. So you may be having incomes from various sources. From which income you took the money and invested in 80C? That is not relevant. Only in 80CCC, if you recollect, contribution to LIC pension fund out of income chargeable to tax. That's what is given only in 80CCC, not anywhere else. So here the statement is not correct, because in 80C there is no such condition that the donation, the contribution, getting it, it need not be out of income. So there is no stipulation under 80C that investment subscription should be made out of chargeable income only. See, this point in reality nobody will see, okay, because very difficult to prove. Next, where an individual repay a sum of 30,000 rupees towards principal and 14,000 rupees as interest in respect of loan taken from a bank for pursuing higher studies, the deduction under 80E is 44,000. Yes, here for whose purpose higher studies loan he has taken, that point is not given. Let us assume that is for individual, self. So he for himself, okay, principal is 30, interest is 14. We only get interest, which is only 14,000. Under 80E, we only get interest on education loan. We don't get entire principal. So the answer, the statement, what they are saying, entire 44 he is eligible for deduction. That's wrong. Only 44. So the statement is not correct. Fine. Next, Mrs. Sheila, widow of Mr. Satish, who was an employee in XYZ Limited. Okay. So Sheila is a widow of Satish, who is an employee in XYZ. Received 7 lakh rupee on 1st May 2022, means 22-23, being amount standing to the credit of Mr. Satish in his NPS account. NPS means what? Immediately National Pension System, National Pension Scheme, Central Government pension scheme, Atal Pension Yojana. So there is a person called Satish. In his account, in his NPS account, there is an outstanding balance of 7 lakhs. Because Satish died, his legal heir, his nominee, she received the 7 lakh rupee. You remember 80CCD, withdrawal from National Pension System. Okay, fully if you close the account and withdraw, 60% exempt, 40% taxable. And if you withdraw partially, 25% of contribution made by you is exempt. Here, the amount is withdrawn on account of death of the person. If an amount is received on death of the person, entirely it is exempted. So where deduction is allowed under 80CCD to Satish in the earlier previous year, such amount received by her as a nominee on closure of the account is deemed to be income. It's incorrect. It's not correct. Okay. So 80CCD provides that amount received by nominee on death of the SSC shall not be deemed to be income. Suppose if Satish only received when he is alive, he only closed the account, fully taxable. While taxing, 10 clause 12A, 60% is exempt, 40% is taxable on full withdrawal, full closure. If you partially withdraw from National Pension System account, 25% of the contributions made until then that is exempted. Rest 75 is taxable. Mr. Vishal, a central government employee, contributed 50,000 towards Tier 2 account of NPS. The same is eligible for 80CCD. Wrong. If you are contributing to Tier 2 account, that is 80C. In national pension system, Tier 1, Tier 2 is there. Entire Tier 1, whatever contributions you are making to Tier 1 of national pension scheme, that is eligible for 80CCD, subsection 1, 1B, subsection 2. Remember. Whereas whatever amount you are paying to additional account under NPS, that is Tier 2 account, that is eligible under 80C only. So, national pension system, Tier 1, Tier 2. Tier 2 contribution 80C only, ma. Tier 1 only we have a separate section called 80CCD. So, here they are saying Tier 2 80CCD. That's wrong. Tier 2 contribution is 80C deduction. So, the statement is not correct. Getting it? Tier 2 contribution to NPS is 80C and not 80CCD. That's it. Next. Examine the allowability of the following. So whether the following items are allowed or not, they are asking. Rajan has to pay to hospital for treatment of 62,000 rupees and spent nothing for life insurance of maintenance of dependent disabled. Now you see, there is a person called, he is a dependent and disabled. Getting it? For maintenance of dependent with disability. So some dependent is there on him, he is disabled. Now dependent relation is not given. Now tell me, in 80, we have a point. See, when the SSE is having a dependent with disability, the SSE can claim deduction under 80DD, right? If it is normal disability, flat 75,000. If it is severe disability, flat 1,25,000 deduction, correct? Now, dependent means who? Spouse, children, brother or sister, parents who are mainly and wholly dependent on this SSE. Now here, dependent, they said, relationship they have not given. Let us assume he is within the definition of dependent given in the 80DD. This dependent is covered in 80DD. Let us assume that. So if you take that assumption, Rajan is maintaining the dependent, no? How much he spent? 62. So how much deduction he'll get? 62. No. Actually, how much you are spending is irrelevant. Remember, it is disability. Disability means 80DD. Suppose here, they use the word not disabled. They use the word dependent suffering from specified disease. If they use the word disease, then the provision is 80DDB. Are you getting the point? So disability. So how much you actually spend doesn't matter. Flat 75,000 he will get deduction. So in this case 75,000 rupees under 80DD is allowed as deduction flat, irrespective of actual expenditure incurred. Yes or no? You see, when I'm explaining, I'm recollecting the entire provision that we discussed. In exam, no, you just have to write simple answer. Normal disability flat 75, severe disability 125 under 80DD, irrespective of expenditure. But I'm recollecting the entire provision because when you are reading MCQs, when you are reading true or false questions, this is how you should learn. You should not only see that question and answer relevant point. You should recollect the entire provision. That's how you can develop your command on the MCQs, command on the subject. Next, Raja. He is a resident in India. Okay, resident Indian. He has spent nothing for treatment in the previous year. Okay, he didn't spend any single rupee. Okay, and deposited 25,000 with LIC for maintenance of dependent disabled. Okay, so again here some dependent is there. Some dependent is there who is disabled on Mr. Raja. So he has spent zero. Nothing. He spent zero. Still, Raja will get flat deduction of 75,000 for normal disability, flat deduction of 1,25,000 for severe disability. That's it. So you see, the Rajan has deposited 25. Doesn't matter. So the SSC is eligible to claim 75,000 since deduction of 75 is allowed irrespective of amount deposited with LIC. In case of severe disability, 1,25,000. Same. So this entire question is on 80DD only completely. Okay, nice. Next, Rajan has incurred 20,000 for treatment and 25,000 was deposited with LIC for maintenance of dependent disabled. How much you incurred, how much you deposited, that and all doesn't matter. Is there a dependent? Yes. Is he disabled? Yes. Flat 75,000. Normal disability. Severe disability flat 1,25,000. This question is completely 80DD, almost all the 3 points. Fine. Next. Payment of 50,000 rupees by check to an electoral trust by Indian company. Remember, if to a political party and electoral trust, you must contribute only by other than cash. If you even single rupee also in cash mode is not permitted. So 80GGB. Since the donation is made by Indian company, suppose if the donation is made to political party by foreign company, 80 GGB deduction you will not get. Suppose in exam if they mention foreign company, you will not get deduction at all. I hope you're clear. So 80 GGB. Suppose if the donation is by not Indian company, some partnership firm, LLP, individual, HUF, they contributed, then 80 GGC section will come into picture. Now some students might have a query here. Sir, do we need to quote section numbers in all these kinds of cases? Generally, these questions will not come directly. These questions will be tested in the form of MCQ, where you just have to select the option. Suppose in exam, in the descriptive paper, true or false question is asked, if at all. In such a case, yes, you are supposed to quote section number, only then you will get full marks. Getting the point? In income tax and GST, taxation paper and law paper, section numbers are expected by the institute. Getting it? That shows your proficiency in the subject. That's what they believe in. So this is eligible for deduction under 80 GGB. That's it. Next, question number 3. For assessment year 23-24, gross total income of Chaturvedi, a resident in India, he is a resident, was 8,18,240. So for Chaturvedi, who is a resident, the gross total income is 8,18,240, which includes, important observation, long-term capital gain of 2,45,000, taxable under 112, and short-term capital gain 58. Remember, short-term capital gain is not 111A. This is normal short-term capital gain. This is eligible for chapter 6A deductions. Yes or no? If 111A gain they specifically mentioned, no, that is not eligible. Now let us look at what is the gross total income. What is the gross total income? 8,18,240. In this, what is the income taxable at special rates? Special rates 2,45,000. LTCG of 2,45,000 is only taxable at special rates. So what is the balancing figure? Which income is taxable at normal rates? So balancing figure is 8,18,240 minus 2,45,000 is equal to 5,75,240. Sorry, 73. 5,73,240. This is normal rates. Now you know you need to immediately recollect. The total chapter 6A deductions cannot exceed. It cannot exceed this amount. Correct? Because this is only treated as gross total income from the point of view of chapter 6A deduction. Yes, next. Now the gross total income includes interest income of 12,000 with savings bank deposit with a bank. And 40,000 rupees interest on FD. So savings deposit of 12,000. So within this income, 12,000 is savings bank interest, and some 40,000 is FD related interest. Just I'm writing the observation here. So there is no relevance for this, just I'm writing it. Now, let us see what is the age of Mr. Chaturvedi. You know, if age of Chaturvedi is less than 60, 80 TDS section is applicable. Up to 10,000 savings interest is deductible. Suppose if the age of Chaturvedi is more than or equal to 60, if he is a senior citizen and resident in India, then 80 TTB up to 50,000 interest deduction can be claimed. Now they have given information regarding age somewhere. You see here? Here. So compute the total income and tax thereon. Compute the total income tax thereon of Mr. Chaturvedi, who is 70 years old. Okay. As on the date, as on 31st March, he already 70. Means already crossed 60. Which means he is a senior citizen. Therefore, 80 TTB up to 50,000 can be claimed, because total interest is how much? 52K. But you can claim deduction for interest income for a senior citizen, whether it is fixed deposit interest or savings interest, you can claim up to how much? 50,000. So minus 80 TTB, I am claiming here 50,000. Okay, next further. Chaturvedi has invested in PPF 1,20,000. Okay, this is ATC. Minus ATC, how much? PPF 1,20,000. Let us see, is there any other ATC also? We will see. And also paid medical insurance premium of 51,000. For whom he paid? For himself only he paid. Nothing is given. He is a senior citizen. Remember, for a senior citizen, medical premium for each category is how much? 50,000. So minus 80D, how much it is? 50,000 straight away. Suppose if Chaturvedi, he is having parents also who are also alive. For them also he has paid medical premium. Then another 50 he will get. Suppose for parents medical policy is not there, but he is incurring medical expenditure up to 50 he can claim. But if at all that information is given only, we will consider, otherwise we will not. Fine, next. Finally, Mr. Chaturvedi contributed 50,000 to public charitable trust eligible for deduction under ADG. Remember, contribution to public charitable trust. How he contributed? By account pay check. So obviously more than 2,000 rupees in ADG you must pay by other than cash. He paid in other than cash only. How much he paid? 50,000. This is contributed to charitable trust, which comes under category 4 of ADG. Whenever the moment category 3, category 4 comes now, what we should check? Adjusted total income we should check. What is adjusted total income? Gross total income minus long-term capital gain minus short-term capital gain 1 year and minus exempted incomes, all that you see. Then from that, other deductions, ATB, ATTB we reduce. So total ATC 1,20,000 we reduce and ATD we reduced. Now ATG, shall I reduce? No. For calculating adjusted total income, don't reduce ATG because you are calculating adjusted total income for the purpose of ATG. So don't reduce ATG deduction. So now what is this effect? Just count it. So what is adjusted total income? Let us see. 5,73,240. So below we will see. So how to compute adjusted total income is equal to, so gross total income normal rates how much? 5,73,240 minus ATC, ATTTB plus ATD. In these three sections were there. Put together how much is the total deduction? 50,000 plus 1,20,000 plus 50. So 2,20,000. So how much it is? 2,20,000. 2,20,000. Now if you reduce that, 3,53,240. Correct? Huh? So just a minute. Plus 573,240. Yeah. 353,240 is adjusted total income. Now on this 10% is how much? 35,324. This is the adjusted total income 10%. Now category 4, how much we paid? 50. Now category 3 plus category 4 amount paid, no, it shall not exceed, amount paid shall not exceed this amount, na. So I will restrict this 50,000 to 35,324. Since it is category 4, 50% reduction. Yes or no? Into 50 is equal to 17,662. Under ATG the answer is 17,662. For this you need to write working note 1 in exam. So this working note you should give in exam. Anyhow the answer is given in there also. You can follow that presentation. That is enough. I hope you understood how I did entire this calculation. Getting it? Now let us compute what is the balance total income. So 5,73,240 minus 50,000 minus 1,20,000 minus 50,000 minus 17,662 is equal to 3,35,578. This is the total income excluding long-term capital gain. Now what is the total income? This amount plus 2,45,000. This amount, what is this amount? 3,35,000 plus 245 is equal to total income is equal to 5,80,578. Yes or no? I hope you are computing. Next. Now compute tax on this. Again, while computing tax on this, we should split into two. Special rates. I hope you recollect the process which we followed in first chapter. We always split the total income into two parts. LTCG how much? 2,45,000. So normal incomes how much? 5,80,578 minus what is the basic exemption limit? Now you see within this 5,80,000, no, up to 5 lakhs. Up to 5 lakhs one category, because the tax rate after 3 lakhs up to 5 lakhs. Up to 5 lakhs, no, if the first slab 3 lakhs is exempted. So 2 lakhs. Remember his age is not 80 man, his age is 70. So he's a senior citizen. Into 5% is equal to 10,000. Now balance 80,578 into 20%. How much it is? 80,578 multiplied by 20. 16,115. On this 20% long-term capital gains tax into 20. 49,000. So what is the total tax liability? What is the total tax liability? So 49, 16,115 plus 10,000. 75,115 plus 4% cess. So 78,120 is the final tax amount. So because they are asking tax also they are asking. So total income is 5,80,578, nothing but 5,80,580. Nearest to 10 rupees you can round off. So let's look at the answer. If this question comes in exam, minimum 6 marks to 8 marks. 5 lakh 80, 580. Tax liability, what? Did we compute it wrongly? Just a minute. Sorry, I'm sorry. I did wrong computation here. A balanced total income is not this one, no. This one, no, we computed rightly, but we took wrong amount. That's it. 3,35,000. How much? 578. If at all any of you did rightly, ignore it. If at all I just confused you, ignore it, because I just took wrong amount. Sorry, by mistake. So, whereas long-term capital gain, that amount is correct only, ma. That amount is correct only, 49,000. Whereas in this, no, 3 lakhs is exempted. 35,578 multiplied by 5%, ma. 35,578 multiplied by 5%. How much it is? 1778. Both put together, 50,778 plus 4% is equal to 52,810 rupees. By the way, here rebate he will not get. Why? Because the total income is exceeding 5 lakhs. So there is no question of rebate. Rebate when you will get, if the total income is less than or equal to 5 lakhs, you can claim a rebate up to 12,500. That's it. 52,810. That's correct answer only. Yeah, that's correct answer only. Here, no, while allocating, by mistake, I have allocated like this. Fine. Anyhow, that's it. I hope you understood the theme. That's enough. Next. Question number 4. Question number 4. Mr. Raj Mohan, whose gross total income was 6,40,000 for the financial year 22-23, furnishes you the following information. Is there any other income given? No, that itself is gross total income. So entire gross total income is eligible for chapter 6A. Why? Because there is no special income. 6,40,000. Stamp duty paid on acquisition of residential house, self-occupied property, minus that is eligible for ATC, man. You know, right? 50,000. Okay. Next, 5-year post office time deposit. That is also ATC. How much it is? 20,000. 20,000. Already ATC 70,000 limit claimed. Check out. Be careful. Donation to recognized charitable trust. ATG we will see later. Interest on loan taken for higher education paid. How much? ATE. 10,000 he paid. How much he paid? 10,000 he paid. Now ATG. Donation to a charitable trust of 25, which is eligible for deduction. Okay. So charitable trust donation, how much he paid? 25. Now let's compute adjusted total income, because donation to charitable trust comes under category 4 of ATG. So adjusted total income is equal to 6,40,000 minus all deductions under chapter 6A except ATG. So 6,40,000 minus 50 minus 20 minus 10. So the answer is adjusted total income is 5,60,000 multiplied by 10% is equal to 56,000. The total donations under category 3, category 4 paid shall not exceed this amount. But here he has paid only category 4, that to 25,000. It is less than this. So entire 25,000 paid to the charitable institution will qualify for deduction. Now this is qualified now. Now how much is the deduction? 50%. So 12,500. That's it. So 12,500. So what is the total income? 5,47,500. That's it. So compute total income, Mr. Raj Mohan. That's it. So 5,47,500. So we also computed the same, 547,500. I hope this is a very easy question. Very easy question. Next. Question number 5. Compute eligible deduction under chapter 6A for assessment year 23-24 of Miss Roma. You see here what they are asking is you just have to compute deductions under chapter 6A. Sometimes no students by mistake compute. Since they gave gross total income, they compute total income answer. Please observe what exactly they are asking. Are they asking you to compute gross total income? Are they asking you to compute total income? Are they asking you to compute only chapter 6A deduction? Please observe carefully. Sometimes they will ask you total income plus tax liability. So we have seen question number 3. Whereas in question number 4, they just ask for total income. Whereas in question number 5, only 6A deductions total they are asking. Be careful. Getting it? And remember, total 6A deduction cannot exceed gross total income. That also you should keep in mind. Fine. His age is 40 years. Who has a gross total income of 15 lakh? So he is having a 15 lakh gross total income and provides the following information. Is there any special incomes? Nothing. So total chapter 6A cannot exceed 15 lakhs because 15 lakhs is what? Gross total income. Correct? Next. life insurance premium paid, policy taken on 31st March. Whatever the date it is, I should classify it as before 1/4/2012. If insurance is taken before 1/4/2012, up to 20% of sum assured. If the insurance is taken on or after 1/4/2012, up to 10%. So 35,000 na amount paid, sum assured is 4,40,000 into 20%, up to 88,000 you can claim, but he paid only 35. So entire 35,000 is eligible. Yes or no? PPF contribution 1,50,000. So 1,50,000 also comes under ATC. This is ATC. This is ATC. Repayment of housing loan to Bharatiya Mahila Bank, Bangalore. This is also ATC, 20,000 ATC. Remember, ATC has a total limit of 150. That we will see later. Contribution to pension fund. Okay. Total of ATC is over. So total ATC deductions, how much he paid? So 205 he paid, but restricted to 1,50,000. ATC is restricted to 1,50,000. Now this amount, 80CCC, how much he paid? 1,40,000 he paid, pension fund. Now we know that ATC, 80CCC, ATCCD subsection 1, donation to pension fund by the SSE. These three amounts shall be restricted to again 1,50,000 as per ATCCE. So these two amounts ultimately shall be restricted to ATCCE, which is again 1,50,000. So that's it. So until this box, getting it? What is the amount of deduction available? 1,50,000 only. Next. And this fellow has taken medical policy for self, wife and dependent children, premium paid. So in Mediclaim, remember 80D, children must be dependent. Only then you will get deduction. Yes or no? In ATC, children can be dependent or non-dependent. Doesn't matter. Getting it? 30,000 they paid. But remember, this fellow age is 40 years. Therefore, for that fellow category, for him, spouse and children put together, maximum deduction is how much? Maximum deduction is 25,000 only. Whereas premium paid for fathers by check, both are check only, so no problem. Senior citizens. So for another category also they paid premium 52, but maximum deduction is what? 50. So total deduction under 80D is equal to what? 80D 75,000. So 80D 75, 80C plus 80CCE restriction applied 1,50,000. Total 2,25,000 is the answer. That's it. So with this, the chapter 6A deductions related problems we have completed already while we are listening our regular classes main. In that we have solved almost 18 illustrations. These are just additional test your knowledge questions which are given at the study material ICI at the end of each and every chapter. So that also we have solved. Getting it? So that's it. So generally test your knowledge questions, no, I will be uploading in the YouTube while I'm uploading marathon related to these classes. That's it. Okay. So take care. With this chapter 6 deduction chapter is completely done. So 5 plus already 18, 23 problems we solved in the classroom while we are discussing chapter 6 deductions. Getting it? Already all these adjustments we have already seen in the classroom itself while we are doing illustrations. Getting it? That's it. Take care.